Hello students, I am Prakash, Chartered Accountant acting as academic advisor in Masterminds from the past 23 years. My dear students, everybody is aware that CMA Final Direct Tax Class and International Taxation paper is voluminous. So isn't it good if you are able to watch a marathon video which covers all the important provisions and just a matter of 9 to 10 hours, if I am able to provide a video, definitely it will be helpful in this last moment revision. So that's why to help all the CMA Final students, we have recorded a marathon video covering all the important provisions of this paper in just a matter of 9 hours. So earlier also in November 2024, we uploaded a similar video and we got around 20,000 plus views for that video. Now we are recording a latest video which is applicable to December 2025 only, and this video is recorded based on Finance Act 2024. And this video is recorded by Chartered Accountant M.V. Ramachandra sir, having 19 years of teaching experience, and he is a renowned faculty in CA and CMA final areas. Now let us see what are the major highlights of our marathon video, and this is recorded in 100% English. And so chapter wise timestamps information is already provided in the description of this video. Whatever the chapters you feel it to be required, yes, you can directly watch those chapters. And let me clear one thing, this is not a substitution to your preparation. I will not boast up that once you watch this video you need not prepare anything else, you can directly go and write the exams and you will qualify. No, all these things are not practically possible. So my dear students, this is just complementary to your preparation. Whatever the preparation you are making, you please focus on it. So this will just help you to quickly revise all the important provisions. Now we have not extracted these videos from the existing videos, and some of the marathons you can observe that they are recorded in recording theaters. But here we have recorded these marathon sessions in face-to-face classes where more than 100 students have attended this marathon in person. So definitely the quality will be far better compared to the recording theaters. So if you like this video, please press the like button so that YouTube will recommend this video to lot of students and which will be beneficial for them. And please share this video to your needful friends so that they'll also get benefited. After watching the video, please don't forget to give your valuable feedback in the comment section. So definitely that will motivate our entire team to work hard and so create still more videos and content which is beneficial to all the CMA final students. So while making this video, faculty has shown one material, and that exclusive marathon material is available for free download to all the students. So here is the procedure with which you can freely download the same. So in your Android mobile or an Android tab, so please install our app, that is Masterminds online classes. So give your mobile number and mail ID and sign up. And in the top left corner you will find a menu with 3 horizontal lines. Click that and you will find free material option. In that, please click the documents tab where all the free materials are being uploaded, and open the relevant folder. For example, December 2025 CMA Final Marathons. And after that, open the relevant file. So for direct taxes, there is a file. So click that file. Once you click that file, you can open it either using Acrobat Reader or some other PDF reader app. So once you open the file, you can download it, you can save to your mobile or tab, and you can share, and you can even take printout of the same. It's completely free. So for best recorded videos of CA and CMA courses, please do visit our website mastermindsindia.com where all the latest videos are being uploaded. Since we have face-to-face batches for every 6 months, so you will always find the latest videos in our website. So in the top left corner, you will find a tab called Buy Video Courses. Please click the same and choose the appropriate course that you want. Before purchasing, I request you to check the description clearly. And once you purchase, after completion of your purchase, our team member will make a call to you and will guide everything with respect to the next steps to be proceeded. So if you like this video and if you feel that you got benefited from this video, please do subscribe to this channel And don't forget to press the notification bell icon so that as and when we upload a new video, a notification will be sent to your mobile. So very soon we will be uploading the marathon sessions of the remaining subjects of CMA Final, CMA Inter and CA Inter as well. Now you can start enjoying the marathon video, and all the best for your upcoming December 2025 attempt examinations. Of course, this marathon will not be useful for the subsequent attempts because of the change in the Finance Act. All the best, my dear students.
Good morning, one and all. My name is M.V. Ramchandra. I am a faculty of Direct Taxes. Today we are going to start the classes for CMA Final Direct Tax subject Marathon classes. It's meant for 2025 December examinations. Okay, chalo. First, I would like to start with the chapter number 1, that is basic concepts. Out of this chapter, hardly you will get 2 marks. Okay, na? Fine. Maximum you will get 2 marks out of this chapter. Please follow. Now, first chapter is basic concepts. Out of that, point number 1, what is the meaning of tax? Tell me, what is the meaning of tax? Tax is nothing but fee or amount or sum collected by the government from the public on their income or on their products or on their services. Mainly there are 2 types of taxes. One is direct tax, second one is indirect tax. Direct taxes are 2 in number. One is called as income tax, second one is wealth tax. But wealth tax is not there right now. Wealth tax already got abolished. Now as far as in case of IDT, indirect taxes are concerned, mainly GST is there. GST, goods and services tax. Okay, services, goods and services, that is first one. Second one is called as customs, and few excise duties are also there. Correct? Huh? Yes. Chalo. Anyhow, our today's topic is direct tax laws. Strictly this class is meant for the examination point of view. Okay, what I'm going to teach you, what I'm going to tell you is only meant for exam point of view. Please follow. Ready? Start. The first one is as follows. What are the components of income tax law? Once upon a time they asked this question in examination for 1 or 2 marks. Ma, if you want to learn the subject, first you have to open the come on, act material. Correct? Okay, fine. So the act is called as Income Tax Act 1961. But one good news and bad news, in 2026 onwards they are going to abolish that old Income Tax Act and they are going to introduce the new act. Okay, I hope you know this one. Okay, sir, anyhow, once you qualified, you have to study new act. All the best. Okay, fine. So that is called as Income Tax Act 1961. But for your information, this is a revenue law. Every time it's subject to amendments, it's subject to changes. For the changes purpose, compulsory we need to introduce the budget. That budget is called as Finance Act or Finance Bill. I repeat, Finance Act or Finance Bill. So the beauty of direct tax and indirect taxes is the subject is not static. The subject is very dynamic. Okay, na? Fine. Keep on changing, keep on changing. That is the reason compulsory lawmaker, that means Nirmala Sitharaman, as of now, she will introduce the budget in Lok Sabha as well as Rajya Sabha. Compulsory you have to read updated Finance Act. Okay, na? Fine. After that, next one is income tax rules. Nana, these rules are known as subordinate legislation. Come again, what? Subordinate legislation. This point is important for exam point of view, important. That is subordinate legislation. Next number, last but one, that is circulars and notification. CBDT will pass the circulars and notification from time to time for the purpose of implementation and what you call adoption of particular provisions of Income Tax Act. Last number, that is nothing but High Court and Supreme Court judgments. Nana, High Court and Supreme Court judgments are relevant for exams and relevant for your practice also. First of all, we need to follow Supreme Court judgments. Whenever there is a tie between High Court judgments, we need to follow the jurisdictional High Court judgment. Correct? Huh? Yes. Suppose you are from Andhra, then you have to follow Andhra High Court judgment. Suppose Andhra High Court is silent about particular topic, then you can follow any particular state judgment. Okay, na? Fine. So these are the components of income tax law. Out of this, 2 exam questions are there. Question number 1, which are subordinate legislations? Income tax rules. That means first the mother is constitution. Under constitution, one is act. Under the act, next one is rules. That's all. Okay na? Chalo. Next number, Income Tax Act is applicable for each and every person in India. Correct? Yes. But whereas income tax rules are not like that, they are called as subordinate legislation. It is also applicable for all the people. Correct? Yes. But whereas circulars and notifications not like that, these are only applicable for department, but not applicable to courts, but not applicable to general public. Yes or no? Yes. But for your info, general public no need to follow circulars and notifications. If it is beneficial, then only they will follow. Otherwise, they don't no need to follow. Last number, Finance Act. As I told you earlier, each and every year if they want to make amendments, for amendment purpose compulsory they will introduce one act. That act is called as Finance Act. Enough. Next, what is the meaning of person? Nana, person includes here 7 items. Number 1, individual. Friends, individual means natural human beings. Natural human being. Okay. Vasikaran is covered. Chitti is not covered, I guess. Kada? Yes. Fine. So next number here, another topic is there. That is individuals is nothing but male, female, as well as minor people, as well as major, senior citizen, sound mind, unsound mind, idiot, lunatic. Each and every person is covered. But only natural human beings are only covered. Kada? Yes. Next number is called as HEF. HEF is nothing but Hindu undivided family. Not important for exam it is. Next number, partnership firm. This is a legal entity. Correct? Yes. Which is a separate taxable person. Which is separate taxable person. But is not a separate legal person. They are separate taxable persons. Therefore, partnership firm is liable to pay the tax. Next number, company. Friends, company is a separate legal entity as well as it is a separate taxable person. Next number, AOP and BOI. Next number, local authority, that is panchayatis, municipalities, cantonment boards, endowment boards, etc. These are covered. Last but not least, AJP, artificial judicial person. They are also covered. Okay, fine. Next number, Nana, exam point of view, most important topic, that is called as exceptions to general rule. Come again, what? Exceptions to general. Important. Already 3 times they are placed in the examinations. What is the general rule? General rule is nothing but total income of this year is taxable in the same year or next year. Total income of this year is taxable in the next year. Correct? Whatever the income you earned in the previous year is taxable in the assessment year. But there are 5 exceptions. Exception number 1, non-resident carrying shipping business. I repeat, non-resident carrying shipping business. Whenever any non-resident carrying shipping business in India, compulsory is liable to pay the tax in the same year. Next number, person leaving India permanently. Whenever any person leaving India without any intention to return back in near future, compulsory has to pay the tax in the same current year. Okay, fine. Third one, AOP or BY formed for temporary period. Temporary purpose or temporary period, then also pay the tax in the current year. Next number, some persons are disposing the assets with an intention to avoid payment of tax. If anybody transferred the property with an intention to evade the tax, then lawmaker may collect the tax in the same year or next year? Same year. Next number, discontinued business. In case of discontinued business, if any person discontinued his business all of sudden, compulsory has to pay the tax in the current year. Okay, chalo. Next number, 100% you will get one practical question. Computation of total income and tax liability. For that, compulsory you should know the pro forma. First, you have to know what is the previous year and assessment year. Correct? Yes. Because of previous year and assessment year, the provisions will change. Therefore, you should know previous year and assessment year. Number 1. Number 2, you have to calculate all heads of incomes. How many heads we have? 5. Salary, house property, PGBP, capital gain, other sources. But if you are doing the problem related to non-individuals, salary head will not be there. Correct? Salary head will be there only for individual essays, not for non-individuals. Kada? Yes. But anyhow, salary chapter income you have to calculate. House property, if any there, anything is there, you have to calculate. Profits and gains from business or portion you have to calculate. Capital gains you have to calculate. Other sources you have to calculate. After that, you have to do the provisions of dash clubbing or set off. First, you have to do the clubbing. After doing clubbing, you have to do set off. Then you will get gross total income. Out of gross total income, compulsory you have to give the deductions under chapter 6A, 80C to 80U. After that, you will get total income or net income or taxable income. I repeat, net income, total income, taxable income, all are one and the same. After that, compulsory you have to calculate tax liability. Nana, year and onwards, it is most important. Follow how to calculate tax liability. First, calculate special tax or normal tax. What is that? Special tax. There are so many special taxes rates. Special tax rates are available in Income Tax Act that you have to calculate first. Okay, chalo. After that, normal tax. Okay, fine. First calculate special tax, after that normal tax, after that you have to calculate rebate, if any rebate under section 87A. So after that you have to add surcharge, after that you have to add health and education cess. Finally you will get total tax liability. Out of total tax liability you have to deduct rebate or relief, or else you can deduct MAT credit or AMT credit as the case may be. Yes or no? Yes. After that you will get net tax liability. Last figure you have to add is interest and penalty, if any you have to add. Then you will get net tax liability. Come again, what? Net tax liability. Sir, this is the way you have to calculate the tax. Okay na? Chalo. So far what we have covered out of this, the most important elements are two things. Number one, which are the subordinate legislations? Rules. Income tax rules. Next number, SSE can claim the benefit out of circulars or notification? Yes. If it is beneficial, we need to follow. Otherwise, no need to follow. Next question, what are the exceptions to general rule? What is the first general rule? Income of this year is taxable in the same financial year or next financial year. 5 exceptions are there. Non-resident carrying shipping business, person leaving India permanently, AOP or BYA formed for a temporary purpose, transfer of property with an intention to avoid payment of tax, discontinued business. Next number, how to calculate the tax liability? First, total 5 heads income, after that clubbing, after that set off, then gross total income, then deduction under chapter 6A, then only total income. Out of that, first you have to calculate special tax, after that normal tax, after that you have to add surcharge, after that you have to consider health and education cess. Out of final tax liability you have to deduct TDS, TCS, relief, rebate, whatever it may be you have to deduct kada. Final figure you have to add interest and penalty if any, then you will get total tax liability. Okay na? Chalo. Next question, very important topic for exam point of view, how to calculate the tax liability. For that, what are the tax rates you have to follow? Nana, follow. The first one is called as individuals, HUF, AOP, BOI, AJP. Okay, all are covered, but they are not following default tax system, they are following normal tax. Then what is the answer? All of you please follow. In case of normal people, up to 2,50,000 it is 0. 2,50,000 to 5 lakh, what is the rate? 5%. 5 lakh to 10 lakh, what is the rate? 20%. Above 10 lakh, what is the rate? 30%. These are the slab rates. Whereas in case of resident individual being senior citizen, up to 3 lakh, what is the answer? 0. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Above 10 lakh, it is 30. Whereas in case of resident, that to super senior citizen, up to 5 lakh, it is 0. 5 lakh to 10 lakh, here 5% slab is missing, right? 20%. And above 10 lakh, it is 30%. But most important element for your exam, nowadays compulsory they are asking one MCQ question out of this, but very difficult to do it because within less time you have to do it. What is that? Alternative tax. Once upon a time it was alternative tax, but nowadays it is a default tax. What is that? If anybody opted default tax provisions under 115 BAC, automatically separate tax provisions are applicable. Up to 3 lakh, 0. 3 to 7, 5. 7 to 10, 10%. 10 to 12, 15%. 12 to 15, 20%. Whereas above 15 lakh, 30%. Nana, see this one. Here 0, 5, 10, 15, 20, 30. So first you have to start with 0, end with the 30. Kada? Yes. And one more thing, the differentiation between each and every figure is 5. Come again. 0, 5, 10, 15, 20, 30. Okay, fine. Whereas with respect to the figures are concerned, total incomes are concerned up to 3 lakh. 3 to 7, 7 to 10, 10 to 12, above 12 to 15, above 15. Consider this one. And next number, in case of company, the tax rates are none other than 30%. Correct? Yes. But in case of company whose total turnover does not exceed 400 crores in the previous year 2022-23, then the rate is 25. In one examination, they asked this question. Previous year 22-23, their total turnover you have to check up. So that does not exceed 400 crore. Then what is the answer? 25%. Next number, Nana. Foreign company. What is the rate? 40 once upon a time, but nowadays 35. Local authority 30%. 115 BAB. That is a company who opted special provisions. Then answer is 15%. 115 BA. Okay, what is the answer? 22%. Next number, Nana. Cooperative society, not important topic. Up to 10,000, 10%. 10,000 to 20,000, that is 20%. Whereas above 20,000, what is the answer? 30. Chalo. Next number, surcharge. Very, very important topic. What is surcharge? Tax on tax. In case of individual, HUF, AOP, BY, AJP, in all the cases, up to 50 lakh, there is no surcharge. If the total income exceeds 50 lakh, what is the rate? 0. 0, not 10, not 10. Total income exceed 50, then it is 10%. Whereas it exceeds 1 crore, what is the answer? 15. Whereas it exceeds 2 crore, 25. If exceeds 5 crore, 37. Correct? Yes. Now, next number. In case of SSC who opted 115 BAC, in that case, direct answer. What is the answer? 25%. Flat rate 25%. Whereas in case of others, not like that. In case of others, that too other than companies, the answers are as follows. Partnership firm and LLP. Only the answer is up to 1 crore, 0. Above 1 crore, 12%. Whereas in case of companies, not like that, up to 1 crore, 0. 1 crore to 10 crore, what is the answer? 7%. About 10 crore, what is the answer? 12%. Whereas in case of foreign company, up to 1 crore, 0. Above 1 crore, up to 10 crore, what is the answer? 2%. About 10 crore, 5%. Chalo. With this, we have done with the topic called as basic concept. Chapter number 1 completed. Out of that, 100% you will get one question. That question is nothing but computation of total income and tax liability. That is one thing. And another thing, 115 BAC, one MCQ question they will ask for sure. Okay? Chalo. 115 BAC is mandatory or optional? If you want, you can follow. Okay, na? Fine. It is optional, purely optional. But once you've opted that one, you have to continue 115 BAC for every year. You have to continue. Okay, na? Yes. Chalo. What are the slab rates? Up to 3 lakh, it is 0. 3 to 7, what is that? 5%. 7 to 10, what is the percentage? 10. Whereas 10 to 12, 15. 12 to 15, 20%. Above 15, 30%. If you opted 115 BAC, what is the surcharge rate? 25%. Correct? Yes. Chalo. Next number, exceptions to general rule. 5 exceptions are there. In these 5 cases, total income of this year is taxable in the same year. These are only most relevant. Other than that, it's not at all relevant. Okay, na? Chalo. Next topic, ICDS. Compulsory, you will get one question in the examination, especially PGBP problem. For PGBP problem, compulsory, they will ask ICDS. But ICDS is conceptual oriented. Therefore, you have to consider the main factors here. Okay, one by one. What is the standards? These standards are meant for 2 purposes. Number 1, computation of income and disclosure requirements. Computation of income as well as disclosure requirements. Okay, fine. Which income we can compute? We can compute 2 incomes. One is PGBP, second one is IFOS. Most important chapter. 3 marks is the weightage out of this topic. Income computation and disclosure standards. Follow. Here, these income can be computed with respect to two heads. That is nothing but boys. B for business or profession. O for IFOS. These two incomes are only can be computed with respect to ICDS. The two who are following mercantile method of accounting. Correct? Yes. If you are following cash method of accounting, actual method of accounting, ICDS not required. If you follow mercantile method of accounting, compulsory you have to follow ICDS. The two you have to disclose in two ways. The first one is called as ROI, return of income. Second one is called as TAR, tax audit report. In two ways you can disclose the facts of ICDS. Next number, ICDS is applicable for all SCs. I repeat, applicable for all SCs, but not applicable for beggar batch. What is that? It is not applicable for individual and HUF who are not liable for audit. I repeat, who are not liable for audit. Now tell me, is it applicable for partnership firm? Yes or no? Yes. No need to think about that question. Whenever I say about other than individual and HUF, you have to say yes. Yes. Company? Yes. Everybody yes, yes, yes. Whereas in case of individual and HUF, only those people who are liable for tax audit, they only can follow ICDS. The two, it is not for cash method of accounting, only for mercantile method of accounting. The two, if you follow books of accounts as for cash basis, ICDS not applicable. If you follow on accrual basis method of accounting, automatically ICDS are applicable. And one more important point, MAT will be affected because of ICDS or not? Answer, no. Whereas AMT applicable, AMT is subject to ICDS or not? Yes. So for already in regular classes, I told you the memory code. Once again, I am telling you, here it is only applicable for boys. That too, it is not applicable for all boys. Only those people who are following mercantile method of accounting. Correct? Yes. Here boys means PGBP as well as IFOS. The two are following mercantile method. The two applicable for all SSEs, but not applicable for individual and HUF whose books are not subject to tax audit. And the two, for MAT computation purpose it is not applicable. AMT computation purpose it is applicable. Next number, even presumptive tax people also required to follow ICDS or not? Yes. 44 AD, 44 AE, 44 ADA, 44B, 44BBA, all the people are also required to follow ICDS or not? Yes. Next number, income is generally taxable on gross basis or net basis? Gross. Always income is taxable on gross basis. Suppose if our friend, she participated in Kaun Bane Karodpati, she earned 1 crore, but they will never ever give 1 crore. They will give only 70 lakhs. 30 lakh will be deducted as tax at source. Correct? Now, what is our income? 1 crore or 70 lakh? 1 crore. Always gross income is only taxable. Next number, when there is a conflict between Act versus ICDS, which will prevail? Act or ICDS? Act. When there is a conflict between rules versus ICDS, which will prevail? Rules. Simple as a Act is a legislation, right? Whereas rules are also subordinate legislation. After all, then only we need to follow ICDS. But one good news I can tell you, when there is a conflict between Supreme Court, High Court judgments versus ICDS, which will prevail? ICDS. Most important topic. Because of this this point, so many Supreme Court judgments nullified because of ICDS. Correct? Yes. Very, very important topic. Take care. Fine. Next one. Total, how many ICDS are there? 10. Total 10 ICDS are there. Now for that purpose, already I told you the technique. What is that? AV, college, room, assets, changed. Government provided securities. And by incurring borrowing cost. Yes or no? Finally, what happened? Results are announced immediately or contingent? Contingent. I repeat, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Correct? Yes. Provisions, contingent liability, contingent assets. Once again, come again. A, V, college, room, assets, changed, government, security, borrowing cost, provisions, contingent liability, contingent asset. A for accounting policies, B for valuation of inventory, C for construction contract, R for revenue recognition, A for tangible assets, tangible fixed assets. Now C for change in foreign exchange rates, G for government grants, securities, borrowing costs, provisions, contingent liability, contingent assets. Now it is time for the first one is called as, what is that? Accounting policy. Nana, accounting policies, GAC. G for going concern, A for accrual, C for consistency. All are applicable, nothing special, but two are not applicable. One is prudence, not applicable. Prudence is not there, materiality also not there. And one more thing, can I change the method of accounting? No. Can I change the accounting policies? No, unless otherwise there is a reasonable cause. Okay, and now tell me, as for your AS, accounting standard number 1, GAC is followed or not? Yes. Prudence? Yes. Materiality? Yes. But as for ICDS, GAC is followed. GAC means a going concern accrual, consistency followed. Two things are not followed, materiality and prudence. And next number here, can I change the accounting policies? No, unless there is a reasonable cause. And this third point is most important. Expected losses are allowed or not allowed? Answer, few are allowed, few are not allowed. Student doubts, sir, tell me which are allowed, which are not allowed. I will tell you one best example. Impairment of fixed assets. I repeat, impairment of fixed assets. Anybody in the class, is it a real loss or expected loss? Expect. Impairment of fixed assets, 100% it is not at all allowed. Not allowed. Sir, why sir? Yes sir, it is not allowed. Sir, it is allowed in your AS, Nana, but not allowed under Income Tax Act. ICDS not allowed. Kada? Income Tax Act, it is not allowed, sir. Chalo. Come to the next one, stock in trade. In case of stock in trade, how to value? Cost or NRV, whichever is lower. I purchased for 10 lakh, but because of damage or some reasons, nowadays I can recover only 7 lakh. Anybody in the class, 10 or 7, whichever is higher or lower? Lower. And indirectly you are claiming 3 lakh loss kada, but it's not a real loss, expected loss kada. Oh, I got the clarity. Expected loss related to fixed assets not to be considered. Expected loss related to stock in trade will be considered. Okay, as for ICDS, some expected losses are allowed, some expected losses are not allowed. With this, we have done with the topic ICDS number 1. And tell me, what are the fundamental changes? 3. Number 1, prudence is there? No. Materiality? No. Second, number 2, reasonable cause is required for the change in accounting policy. Now I am following LIFO or FIFO or weighted average. You can follow. Kada? You can't change the policy unless otherwise there is a reasonable cause. Number 2, some expected losses will be allowed, some are not at all allowed. Enough ma. With this, ICDS 1 completed. ICDS number 2, what is that? Valuation of inventory. Before going into that, first tell me, what is the meaning of inventory? Which is meant for uses or consumption? Consumption. Which is meant for consumption is called as stock in trade. It must be valued at cost or NRV, whichever is lower. Few seconds back I told you, expected losses related to valuation of inventory will be allowed. Number 2, in case of dissolution of the firm, most important case law, when the firm got dissolved, compulsory you have to value at NRV. Very important exam question. One Supreme Court judgment nullified. Ready, start. All partners retired, but one partner wanted to continue the same. Tell me, NRV or cost or NRV, whichever is lower? When you heard the word dissolution, NRV. Dissolution of the firm, then valuation must be done at the rate of NRV. In normal cases, cost or NRV, whichever is there. Next number, which method we need to follow? Only 2 methods. FIFO is allowed? Yes. Next one, LIFO is allowed? No. Weighted average is allowed? Yes. So answer, FIFO or weighted average. Bus. Can I change the FIFO to weighted average to FIFO every year? No, unless there is a reasonable cost. Fine. Most important question here is, in case of dissolution of the firm, even though remaining partners continued the business, we can value the stock in trade only at NRV. Don't consider cost or NRV, whichever is lower. This is the most important topic. Take care. Next, construction contracts. As I told you earlier, if you go to Hyderabad, majority companies are in reality as well as construction. So construction contract. How to recognize the revenue in case of construction contract? Only one word, POCM. POCM. Percentage of completion method. That is the reason these real estate people, what they will do, if one flat completed, one slab completed, they will recognize proportionate expenditure and proportionate income. Okay na? Fine. Very, very important. Follow. Number one, retention money. Taxable or not taxable? There are so many case laws, so many issues are there, but I am telling as for ICDS, retention money is pakka taxable. Retention money taxable. What is the retention money? If I lay the road, bypass road or something, 100 crore is the project cost. They won't give 100 crore, they will give only 80 crore. 20 crore will be retained as a retention money. They will release after few years, okay? But as for ICDS, retention money is pakka taxable. I will tell you the reason. The reason is very simple. The ICDS main intention, early recognition of income, delay in recognition of expenses. Ultimately, it leads to early payment of tax. Next number. Penalty for delay, allowed or not allowed? Answer, not allowed. I told you just now, early recognition of income and recognition of expenses will be delayed kada. Penalty, expected penalty is allowed? No. Last number, disclosure requirement, POCM, percentage of completion. With this, we have completed 3 ICDS. First ICDS number 1, accounting policy. Prudence is there? No. Important. How they will ask, ICDS 1 will not be recognized the following. Classify. Small a, going concern. Small b, accrual. Small c, materiality. Like this they will ask. First you should know the concept kada. Already you covered this syllabus in your accounts, but you should know what is the difference between your accounts and as well as DT ICDS. Start. AS1 versus ICDS1. Two things are not considered, prudence and materiality. Can I change the accounting policy? No, unless there is a reasonable cost. Number 3. Expected losses will be allowed or not allowed? Few are allowed, few are not allowed. Enough. Next number, ICDS number 2, construction. Valuation of inventory. What are the methods? 2 methods. FIFO or weighted average. Can I switch over the method every time? No, unless there is a reasonable cost. In case of valuation, what is the answer? Cost or NRV, whichever is lower. In case of dissolution of the firm, NRV. Enough. ICDS number 3, construction contract. How to recognize the revenue? POCM, percentage of completion method. Number next. In case of retention money, taxable or non-taxable? Taxable. How? Same percentage completion method only. Kada? Yes. Chalo. Next number. Number 4. Revenue recognition. Tomorrow, once you qualified or not qualified, you may do 4 activities. Activity number 1, business, sale of goods. Kada? Or else profession, sale of service. Or else you may have finance business. You will take loan amount from your dad. You will give loans to others. Kada? Yes. Last number, you may have passive income also. Dividend kind of thing. Kada? 4 possibilities. Possibility number 1, sale of goods. Start. In case of sale of goods, when the revenue will be recognized? That is the question. Answer, when there is a reasonable certainty about the collection. Reasonable certainty about the collection. See the word. In case of sale of goods, okay, reasonable certainty. Whereas in case of services, what is the answer? POCM. Ready? Start. Number 1, service contract. Generally, we need to consider POCM, percentage of completion method. But whereas if the contract, service contract is less than 90 days, then you have to follow fully completion. You can wait. Kada? Yes. Next number, if it is more than 90 days, answer already I told you. What is the answer? POCM. Next number, interest on what basis? Interest, income tax interest is on receipt basis. All interest on SLM basis, straight line method. I told you, right? Yes. Whereas other dividend and all as per provisions of Income Tax Act. Kada? Yes. Already start. Sale of goods. What is the answer? Reasonable certainty about the collection. Number two, sale of services less than 90 days. Completion. More than 90 days. POC. Next number, interest, SLM. SLM. But interest on IT refund, income tax refund, receipt basis. Last number, other dividend and all as for provisions of Act. Next number, tangible fixed assets. Same as your section number 32, PGBP. Next number, effect of changes in foreign exchange rates. For that, I have given one table also. Follow this table. It is more than sufficient. Monetary items, two times. First one is last day and settlement day, closure day. First one, monetary items. At the time of closure day, gain is taxable, loss will be allowed. Whereas at the time of settlement, gain is taxable, loss will be allowed. Non-monetary, gain not taxable at the time of last day, and loss also not allowed that at the time of last day of the year. Okay, whereas at the time of settlement only will be considered. Okay, nothing special, very simple. Follow. Here 2 points I want to tell you. One is last day of the year. Last day of the year. Second one is at the time of closure settlement. Number one, monetary items, non-monetary. Number next, gain is there, loss is there. Gain and loss. Tell me, what is the answer? Whereas monetary item will be considered or not? Yes. Gain, taxable. Loss, allowed. Whereas in case of closure time also same answer. Taxable and allowed. Whereas in case of non-monetary items, on the last day, don't touch, don't consider. Whereas at the time of closure, shall I consider or not? Yes. So gain is pakka taxable, losses will be allowed. With this, we have done with the topic called as ICDS number 6. Next number, ICDS number 7. What is that? Government grants. Important? Yes. What is the government grant? Government assistance. I repeat, government assistance. That is called as government grant. Simply they want to encourage you. For this purpose, they will give the grant. That is government grant. Number one, in case of government grant, revenue taxable. Government grant capital in nature also taxable. See the word. Government grant capital and revenue both are pakka taxable. Suppose it is given for normal purpose, taxable on which head? PGBP. If it is given for purchase of asset, what do you have to do? Reduce from cost of asset. Reduce from cost of asset. If government grant is received for asset purpose, it is taxable, it should be reduced. If it is given for business purpose, compulsory it is taxable as under the head PGBP. Next, ICDS number 8. What is that? Security, shares, bonds, etc. In case of security, answer is as follows. How to recognize? Same answer. Cost or NRV, whichever is higher or lower. Lower. But what we have to follow? Category wise or security wise? Follow. Company A is there, company B, company C, company D, company E, F. Cost is as follows: 100, 100, 100, like this. It is the cost. Whereas NRV is as follows: it is 150, it is 180, it is 80, it is 20, it is 140, it is 30. As per your AS, how to calculate? As per ICDS, how to calculate? As per AS, you have to follow security wise. Each and every security you have to check. Tell me, as per AS, 100 or 150, whichever is higher or lower? Lower. What is the answer? 100. 100 or 180? 100. 100 or 80? 80. 100 or 20? 20. 100 or 140? 100. 100 or 30? 30. But as far as ICDS, not like that. See the word category wise. Do one thing. Do the total. Category total. 1, 2, 3, 4, 5, 6. 600. Here, do the total. 150 plus 180 plus 80 plus 20 plus 140 plus 30. 6. This got 600. Yes. Okay. 29. 599. Then you have to consider cost or NRV, whichever is lower. మనం ప్లాన్ చేసిన ఈక్వల్ అవ్వవు కదా సార్. 600 or 599, whichever is lower, is called as ICDS computation. Yes or no? Moral of the story, as far as AS is concerned, AS accounting standard is concerned, you have to follow security wise. As for ICDS, you have to follow category wise. Bas. Next number 9, last but one, that is nothing but borrowing cost. If I want to take the loan, if I wanted to accept any borrowings, compulsory I need to incur some cost, that is called as borrowing cost. Nothing but interest on loans, okay, or discount, whatever it may be, whether it is allowed or not allowed, that is the question. Ready, start. Up to put to use, what is the answer? Capitalize. After put to use, what is the answer? Charged to P and R. Many times I told you in the regular class, to bring the asset to present condition and present location, whatever the expenditure incurred must be capitalized. After installation, whatever the expenditure incurred should not be capitalized, it must be debited to P&L account. Correct? Yes. That is ICDS number 9. Next last number, PCC, provisions, contingent liability, contingent asset. What is the provision? Present liability because of past event. Present liability because of past event. Allowed or not allowed? Allowed. When there is a reasonable certainty about cash outflows or inflows, outflows, then it is allowed. Next one, contingent liabilities. No. Only one word, no. Contingent assets, no. But assess continuously. When there is a reasonable certainty about cash inflows, then only should be recognized. Kada? Yes. With this, second chapter completed. The chapter name is ICDS. Okay, fine. Nana, chapter number 1, basic concepts. Out of that, compulsory you should know tax rates. Compulsory you should know, 100% you should know tax rates. Second, theory topics, 1 or 2 points may be important. That is like this. Number 1, rules, exceptions to general rule, and which are subordinate legislation, how to compute, all these are relevant. Second chapter, ICDS, most important chapter, because compulsory in CMA final examination, one PGBP question will be placed, total income computation. In that question, so many points will be given. In this point, compulsory will add one word related to ICDS. Okay. Nowadays, ICDS is important for your practice and for your exam also. Main important topic. Start. Valuation of inventories. Dissolution of the firm, NRV. Number next, in case of borrowing cost, interest shall be taxable or not taxable. Number next, in case of construction contract, retention money is pakka taxable. Provisions will be allowed or not allowed? Provisions will be allowed. But contingent liabilities, no. Okay, next number. Non-monetary items, in case of exchange, foreign exchange fluctuations, at the time of year end shall be considered? No. At the time of security closure can be considered? Yes. Settlement time we can consider. Last number. As far as valuation of securities are concerned, we need to follow script wise or category wise. As for ICDS category wise. As for AS, security wise. Okay na? Next, another chapter, PGBP. Very, 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 very important chapter. Without this chapter, you will never ever get the question paper. You will get theory question, case law, as well as practical question. Everything will be placed in the chapter PGBP. The range of the chapter, section number 28 to section number 44 BB. Out of that, section number 28, charging section, 29, computation, whereas 30, correct, 32, 37, that is nothing but expenditure. 40, disallowance. I repeat, 40, disallowance. 41, deemed business income. Deemed business income. 43B, that is nothing but certain expenses will be allowed as deduction on payment basis. Next number 44AA. AA books maintain chali. Maintenance of books. Next number 44AB. This new chapter introduced in your syllabus. Tax audit. Okay, na? Yes. Next number 44 AAD, 44 AE, 44 ADA. AD, AE, ADA. I already told you ADA, auditor, doctor, actors, professionals, specified professionals, presumptive income. 44 AE, goods transport vehicles. Kada? 44 AD, other than transport vehicles. Yes or no? This is the chapter with respect to PGBP is concerned. 100% you will get one question out of this chapter. Okay, that chapter is PGBP, profits and gains from business or position. Compulsory they will ask one practical question, and they will ask one theory question, compulsory short question, as well as compulsory they will ask few case laws. Okay, all together they will place in the examination, which we can't avoid in the exam itself. Very important chapter. Follow. First topic, section number 28. What is that? Charging section. Which are the items taxable here? Before going into this, I want to tell you two things. Here, two accounting methods are there. Two methods. One is called as mercantile method. Second one is called as cash method, or also called as actual. But for your info, always boys will have freedom. Okay, girls, she does not have option. Now she for S for salary, house property, capital gain. They don't have options. They must follow their parents. They have to follow provisions of the act. Whereas boys, they can follow dash dash. They can follow mercantile method or cash method. But any one method they can follow regularly. Kada? Yes. If you have not followed regularly, there is a threat of 144. What is 144? Best judgment assessment. Chalo. But today I wanted to highlight the word PGBP people may follow mercantile method or may follow cash method. Anyhow, section number 28. What is that? Charging section. One by one we are going to cover. Abbayilu follow the first one. The first one is nothing but all of you. Profits and gains from business or profession. Business means dealing with the goods. Profession means dealing with the services. All are covered. But now I will ask only case laws. Only strictly for exam. One by one. You atheist. Atheist means who does not believe the God. One atheist will give the speeches, right? After that he will get the money. Okay. That Narsimha Rao, Chaganti Kodeshwar, these people, Shafi, these people will give the lectures. Okay, they is called as vocation. Out of that vocation, they will get the money. Ramdev Baba also will get the money. What is the answer? This is taxable or not? Yes. Under which head it is taxable? PGBP. Number 2. Dividends and winning from lotteries are also taxable, but not taxed under that PGBP, taxed under that IFOS. Next one, profession includes vocation. Okay, whereas business or profession need not be continuous one. If you do temporarily also, it is taxable. I know one fellow is doing mango business only in summer month. Only summer. It's not 365 days business. Still covered under the head PGBP or not? Yes or no? Yes. Some heroes will do one movie for one decade. Still it is covered under the head PGBP. That's all. Number 2. Income received from any particular trade or provision for specific services, it is also covered. As I told you earlier, tomorrow once you qualified, compulsory you have to pay membership fees or not. To your institute you have to pay CA, CMA, CS membership fees. Covered under which head? PGBP. Number next, export incentives. Government will ask you to do export. For that, they will give some incentives. Cash subsidy, duty drawback. Kada? All are covered under which head? PGBP. Next number, perk visits. Nowadays, the particular important thing is If any cinema becomes super duper hit, the producer is giving the cars. That is a perquisite which is received because of your provision. Which head? PGBP. And next one, amended one. Any interest or salary or commission or brokerage received by partner from a partnership firm. Covered which head? PGBP. Okay, fine. Number next, any sum received as a non-compete fees. Don't compete with me. Hero Honda. Both are splitted with each other. For that purpose, Hero paid some amount to Honda. Don't manufacture certain model vehicles. For that, they paid some compensation. What is our head? PGBP. Next number, Keyman insurance policy. If it is received by business people, which head? PGBP. Enough, ma. Next number, very important one, conversion of dash into dash. Conversion of stock into capital asset. Then it is covered under which head? PGBP. The last most important one, sale of capital asset which was used in 35 AD. What is 35 AD? Specified business. Covered under which head? PGBP. Okay, fine. Important, 100% important question. But they will not ask you write about section 28. They will not ask like this. They will give some questions. Tell me, start. Export incentives, duty drawback, profit on sale of import license, cash assistance for export, all are covered under that PGBP. Sale of billing, capital gains. But sale of billing related to 35 AD, PGBP. I hope you got the logic right. Salary, remuneration, interest received by partner from a partnership firm, PGBP. Salary received by employee is covered under the head salary. Salary received by the partner is covered under the head PGBP. Yes. Next, 29, computation. 30 onwards expenses will be covered. 30, what is that? Building. 31, furniture and plant and machinery. Not important. But 32, most important. What is that? Depreciation. Very important topic, depreciation. Twin conditions must be satisfied. Two conditions. Condition number one, SSC must be the owner. Condition number two, asset must be used for business or provision. Then only it is eligible for depreciation. See the bird. Depreciation under section 32. Claiming of depreciation is mandatory or optional? Mandatory. And depreciation will be calculated individual or block? Block. What is the meaning of block? Same class of assets having same rate of depreciation. How many types of depreciation? 3. One is normal, one is reduced, one is additional. What is normal? Normal rates. What is reduced? If any newly purchased asset put to use for a period less than 180 days, full or off? Off. The next one, additional depreciation. Additional depreciation in case of manufacturers or producers. On plant and machinery, they can claim additional depreciation at the rate of 20%. Correct? Yes. These are the different depreciation rates. Next number, follow the conditions, Nana. Conditions for claiming depreciation. SC must be the owner and asset must be used for business or provision. SSC must be the owner. But I told you two famous case law, Mysore Minerals case law. Even though the building is not registered in your name, still you will be considered as a owner or not? Yes. Number next, Sivakami. I told you one case law. Kada? Vehicle is registered in the name of Katapa, but risk and reward passes with Sivakami. Then tell me, who can claim depreciation? Legal owner or beneficial owner? Beneficial owner can claim depreciation, but not the legal owner. Next one, asset must be used for dash, business or provision. Here, used means active use or passive use. Active use is important, but in some cases, active use is not possible. Example, fire extinguisher. You can't use the fire extinguisher unless otherwise there is an accident. Kada? Yes. You can't use the gun unless otherwise there is a theft or something. Therefore, you can claim depreciation. Okay, chalo. Next, what date is relevant? Date of purchase or date of put to use? Data put to use. Chalo. Next, depreciation is allowed in the hands of lessor or lessee. Lessor or lessee? I already told you, owner only can claim depreciation. Owner means lessor. In case of hire purchase, who can claim depreciation? Hire purchaser or hire vendor? Hire purchaser, because he is only the owner. Correct? Yes. Chalo. Next number. How many assets are there? Two. Tangible, intangible. Intangibles are as follows: know-how, trademark, patent, license, etc. Whereas tangibles are three in number. One is building, furniture, plant and machinery. Only three in numbers. Okay. Chalo. Next number. The depreciation rates are as follows: building 10%, building always 10%, furniture and features 10%, plant and machinery 15%. Kada? Yes, sir. Intangible asset, what is the rate? 25%. But there are some changes one by one. Follow. First one, building, which are used for residential purpose. What is the answer? 5. Temporary wooden structures. What is the answer? 40. Temporary wooden structure 40. Important. Without depreciation, you will never ever get the question paper. Compulsory depreciation, one question will be placed. Chalo. Next number, furniture and features. No need to discuss. Only one word. What is the rate? 10%. Plant and machinery. Answer would be different. Answer, motor car. What is the answer? 15%. Next one, hire business. Hire 30%. Rapido, Uber, automatically wear and tear will be higher or not? Yes. Aeroplanes, what is the answer? 40. Next number, life saving equipment. What is the answer? 40. All are 40. Correct? Yes. Next number, Nana, books. What is the answer? 40. Ships and vessels. What is the answer? 20. Correct? If you don't know the answer, generally what is the rate for plant and machinery? 15%. Intangibles, what is the answer? 25. But one good news as well as bad news. What is the goodwill? Goodwill is eligible or not eligible? Rate of depreciation for goodwill is nothing, because goodwill is non-depreciable assets. Next one, how to calculate depreciation? Block method. How to follow depreciation method? That is a WDV. First one, opening WDV of last year plus additional additions minus deletions, then you will get the block. Out of that block value, you have to deduct the depreciation, then you will get the closing WDV. This year closing will be opening for the next year. Next number, reduced depreciation. If any newly purchased asset put to use for a period less than 180 days in the current year, half of the normal depreciation will be allowed. But this is not applicable each and every year. It is only applicable in the first year of purchase. Very good. Next number, all expenses incurred to bring the asset to present condition and present location must be capitalized. Taxes paid. Okay, add back. All the things must be added. GST to be added or not to be added? Your choice. If you added the GST figure, automatically ITC will not be allowed. Next number, additional depreciation. Additional depreciation applicable for all essays being manufacturer or producers. The two, they have to purchase new plant and machinery. What is the rate? 20%. If you put to use for a period less than 180 days, only 10% in this year, and remaining 10% will be allowed in the same year or next year. In the next year. With this, we have done with these are the topics. 28 completed. What is 28? Charging section. 30 building. 31 furniture and features and plant and machinery. 32 depreciation. 35 AD important, sir. What is 35 AD? Specified business. In those days, Sonia Gandhi, she only introduced some special businesses, 35 AD, which are most important for our Indian economy. Number one, cold storage. Underline the keywords, cold storage, number one. Number two, warehouse for agriculture purpose. Number three, petroleum and natural gas pipeline. Number next, hotel with a 2-star facility. Hotel with a 2-star. Hospital with 100 beds. Beds are chairs, beds. Next number, another topic, housing project for slum area development. Which area? Slum. Next number, housing project for affordable pricing. Affordable pricing. Next number, fertilizers in India. Next number ICD, inland container depot. Next number beekeeping. Bee means honeybee, honeykeeping. Next number warehousing for storage of sugar. Next number pipeline for supply of iron ore. Next number semiconductor, semiconductor. Next number, what do you call, new infrastructure facility for development of the business. If you start any one of these businesses, answer RX will be allowed or not allowed? Allowed. CapEx will be allowed or not? Yes. RX also will be allowed, CapEx also will be allowed. But I would like to tell you three words. Three things are not allowed. What is the first one? Land. Land is not allowed. Goodwill, not allowed. Financial assets, shares, securities, bonds, allowed or not, not allowed? These three are not allowed. All other things will be allowed or not? Yes. Next number, prior period expenditure also will be allowed or not? Yes. But very important word. If you sold the 35 AD asset, which head is affected? PGBP or capital gain? PGBP. I told you, no? Yes. Important topic. Take care. 35 AD. Tell me, what is 28? Charging set. 32 depreciation. 35 AD specified business. 35 R&D, research and development. If you do research and development, you are eligible for 100% deduction. Whereas RX 100% is also allowed, CapEx 100% also allowed. Next one, 36, 37. Without these two topics, you will never ever get the question paper. Three figures pakka will be given in exam. One is depreciation 32, one is 36, one is 37. 100% they will give. Check any kind of question. These three words are common. Under that, first one, insurance premium. Insurance premium paid for three things are only allowed under 36. One is stock in trade. Number two, life of the animals. Number three, health of the employees. That is nothing but insurance premium. Number two, insurance premium for stores allowed, life of the cattle allowed, health insurance premium for employees health also it is allowed. Next number, bonus and commission allowed or not allowed? Allowed. But good news, it is allowed as deduction only on what basis? Payment basis. That is nothing but 43B. Next number, very important topic, interest on borrowed capital, interest on loan taken. Allowed or not allowed? Allowed. But one good news and bad news, if it is a banks or financial institution, it is allowed as deduction on what basis? Payment basis. If it is other than banks and financial institution, it is accrual basis. Not accrual, based on your method of accounting, it is allowed. Correct? Yes. Only banks and financial institution compulsory allowed only on what basis? Payment basis. Next number, discount on zero coupon bond. Not important, but anyhow it is allowed. Next number, employer's contribution to employees welfare fund. I repeat, employer contribution to employees welfare fund. Allowed or not allowed? Allowed. On what basis? Payment basis. Whereas employee contribution to employee welfare fund also will be allowed as deduction on what basis? Payment basis. But only the difference is employer to employee that is subject to 43B. Whereas employee contribution to employee welfare fund is as per the due date specified in the respective act. Many times I told you this point. Okay, important topic. Take care. I repeat, employer contribution to employee welfare fund is allowed as deduction on payment basis subject to 43B. Whereas employee contribution to employee welfare fund is also allowed as deduction on payment basis subject to respective act. Okay, with this we have done with the topic. Okay, fine. Next number, dead animals. In case of dead animals or useless animals, whatever the loss will be allowed or not allowed. Next number, most important topic, bad debts. Provision for bad debts are allowed or not allowed? Not allowed, but only bad debts will be allowed. Very important topic, bad debts will be allowed as deduction. Next number, family planning expenditure. As I told you earlier, it is not related to our business, but still it is allowed. But it is allowed only in the hands of companies. The two RX will be allowed, but CapEx will be allowed over a period of 5 years. Correct? Yes. But in one examination, they asked the question, one partnership firm incurred some CapEx and they want to claim for 10 years. Is it allowed? No. Only for companies. Companies. STT, allowed or not allowed? STT, security transaction tax, allowed. CDT, commodity transaction tax, allowed or not allowed? Allowed. With this, we have done with the topic called as section number 36. Last section of its kind, 37. Case laws. Nothing but general expenses. These are the condition. Number one, there must be expenditure. The two not allowed elsewhere. Not allowed elsewhere. The two revenue in nature. Not two not penal in nature. Then only it will be allowed as deduction under section 37. I repeat. If I purchase water, bubble water for students, allowed? Yes. But not under 30, not under 31, not under 32, not under 33, not under 35, not under 36. Then where it is? 37. On Diwali or Christmas, so many companies will distribute the gifts. Now, whenever the company formation day is there, they will distribute the gifts. Whenever any employee birthday, they will distribute the gifts. Whenever chairman's birthday, they will distribute the gifts. Tell me, where it is allowed as deduction? 37. Where it is not covered under 30 to 36, it may be covered under 37, subject to this condition. RX or CAPEX? RX. This year or last year? This year. Related to personal or business? Business or profession. Next, not in capital nature and not a penal nature. Correct? Then only it will be allowed as deduction. But there are so many case laws. One by one case law. Case law number one. CSR allowed or not allowed? Not allowed. CSR is not allowed as deduction as per Income Tax Act. Penal nature allowed or not allowed? Not allowed. Revenue nature will be allowed. Correct? Yes. Now case laws. Heart surgery expenses. Heart surgery expenses. Allowed or not allowed? Not allowed, because heart surgery is a personal. Ransom money paid to kidnappers to release our company MD. Allowed. I told you no. Sridevi heroine undergone for facial surgery for business or position. Allowed or not? Allowed. I told you that is a transformation for the purpose of movie. Allowed kada? Yes. You should able to link like this, then only it is. Next one. To increase authorized share capital, some expenses are incurred. Authorized share capital means CAPEX. CAPEX. Sorry, not allowed in this year. It is allowed under 35D. 35D. Amortization of preliminary expenditure. Issue of bonus shares. Allowed or not allowed? Allowed. Issue of right shares. Not allowed. Because of bonus share, you will get nothing. Correct? But because of right share, you will get something. Therefore, bonus share issue expenses are allowed. Right share issue expenses are not allowed. Advertisement RX allowed. CAPEX not allowed. Political party books related expenditure is not allowed. Correct? Over. With this, done with the topic, section number 30 to 37. Very, very important topic. Take care. Compulsory, they will ask one question out of expenses part, income part also. Income part is 28. Expenditure part is 32. 37. Okay, na? Chalo. Any doubts? Tell me. Retention money is taxable or not taxable? Taxable. On what basis it is? As per retention money is taxable as per POCM, percentage of completion method. Provisions will be allowed or not allowed? Allowed. Next number. When there is a reasonable certainty about cash inflows or outflows? Outflows. Sale of capital asset is affected under capital gain chapter, whereas sale of 35 AD asset is covered under PGBP. Very good. Next number. Ransom money paid to kidnappers. Allowed. Next number. Illegal expenses are allowed or not allowed? Not allowed. Illegal business laws allowed. I told you illegal laws as well as illegal expenditure. Okay, na? Fine. Chalo. Next number, section number 40. What is that? Disallowance. When you are making the payment to resident, compulsory you have to deduct the TDS. That part you have to remit to government. When you are making the payment to foreigners, non-resident, compulsory you have to deduct the TDS and you have to remit. If you have not deducted, not remitted, automatically 100% of such amount will be disallowed. But in case of residents, if you have done the same, How much percentage? 30. Important, take care. Next number, another topic, 40 small b, most important topic, amendment. Partnership firm is paying salary, interest, remuneration to partners. Partners, allowed or not allowed? Allowed. Under which head it is allowed? PGBP. Now, the point is as follows. Here, how much amount will be allowed as deduction? Answer, interest, 12%. Remuneration, what is the answer? In case of book profit, up to 6 lakh. 3 lakh or 90% of book profit, whichever is higher. Balance 60%. 40 capital A subsection 2. What is that? Too much payment. Excess payment made to relatives. Excess payment made to relatives or specified person. Entire amount or excess amount? Excess amount will be allowed or disallowed? Disallowed. Okay, chalo. 40 capital A subsection 3. What is that? 3 much. Payment more than 10,000. Single day or any day? Single day. Single day to a single person with respect to business or profession. If the payment exceeds 10,000, compulsory you must pay by dash dash dash. Account pay check, account pay draft, ECS, electronic clearance system. Otherwise, 100% of such amount will be allowed or disallowed? Disallowed. But there are so many exceptions. Number 1, holiday, strikes kada? Yes. Number next, payment made for purchase of agriculture produce or forest produce. These are the exceptions, correct? Yes. Now, I will ask the exam questions. Tell me. Number 1, payment made to resident without deduction of TDS. How much is the disallowance? 30%. Payment made to non-resident without deduction of TDS. 100% disallowed. But it is allowed in the next year or not? Yes. Next number. What is the depreciation in case of intangible assets? 25. What is the additional depreciation for traders? Traders? No. Traders not allowed. Manufacturers and producers. Next number, 43B. What is that? Payment basis. Very, very, very important topic. If you follow mercantile method, it is allowed on due basis. If you follow cash method, it is allowed on receipt basis. Kada? Yes. But as for 43B, not like that. Irrespective of method of accounting, irrespective of whatever the method you followed, compulsory it is allowed as deduction on what basis? Payment basis. The methods are as follows. The points are as follows. Number 1, sum payable to government. Amount payable to government. Number 2, employer contribution to employee welfare fund. Number next, bonus and commission. Number next, interest payable to dash banks or financial institution. Number next, leave salary. I'll repeat, leave salary. Number next, amount payable to Indian Railways for usage of railway assets. We covered already, kada? Yes. And most important question, which I am expecting for this attempt, payment made to MSMV. MSMV also will be allowed as deduction on what basis? Payment basis. What is the due date, ma? Due date for filing of ROI under section 139 subsection 1. Correct. Last but one, section 41. What is that? Deemed business income. It's not a real income. It is only deemed business income. What is that? Remember this word, very important. Okay, DR. D for debit or deduction claimed earlier, plus R for recovered now. In this case, it is taxable as deemed business income under section 41. Come again. Once upon a time we have claimed the deduction. Today we got the recovered. Then automatically it is taxable. Example I will tell you. Start. All of you follow. We need to pay wages to our employee. Okay, employee wages 100 lakhs we have to pay. But all of a sudden what happened? This employee transferred to USA. He never come back. Tell me, wages will be claimed as deduction on due basis earlier or not? Yes, I have claimed deduction, but I am not paying at all. So waiver. So waiver of certain debit, waiver of certain expenses is pakka taxable as what? Deemed business income under section 41. Remember the mantra DR. D for debit claimed earlier, R for recovery. Okay, na? Yes. With this, section 41 completed. Very, very important. See the word recovery of any allowance or any deduction which was claimed earlier is pakka taxable. Condition number 1, deduction must have claimed earlier. Number 2, recover. Next number, say recovery of bad debts which was claimed earlier, that is also taxable under which head? PGBP. Next number, in case of sale of R&D asset, research and development asset, generally it is covered under which head? PGBP. That is the topic called as 43B. What is 43B? Payment basis. Only few items are only covered. Okay. Next one, 44AA. What is that? Maintenance of books. 44AB. What is that? Tax audit. Very, very important chapter for you. It's not a topic for you. It is a new chapter which was introduced recently. See the word? Business people whose turnover exceeds how much? 1 crore. But in some cases, the turnover limit has changed from 1 crore to 10 crore. Next number, provision, where the provision amount exceeds 50 lakh. Next number, in case of other assets who are claimed under section 44 ADA but offered lower income than the presumptive income and their income exceeds bill. Whereas the SC claimed under 44 AE but is offering lower income than the presumptive income. In all the cases, he must go for tax audit. What is the due date for tax audit? The tax audit due date is nothing but 1 month prior to due date specified under section 139 subsection 1. That is nothing but October. For October, 1 month prior means what is the answer? 30th September. What are the forms? Form number 3CA plus 3CD in case of companies. Whereas other than companies, what are the forms? 3CB plus 3CD. Okay, chalo. Next number, presumptive taxation provisions are as follows: 44 AD, 44 AE, 44 ADA. First 44 AE, what is the condition? Any SC, only resident SC is the owner of vehicles, goods transport vehicles, maybe higher vehicles, higher or medium or else light vehicles, anything is covered. What is the answer? In case of heavy vehicles, per ton, how much must be considered? 1000. Whereas other than heavy vehicles, what is the answer? 7500 per month or part of the month. Next number, expenses will be allowed or not allowed? Not allowed. Deemed to be allowed. But here, interest on capital of partners will be allowed as deduction. Next, come to the next topic, 44 ADA, specified provisionals, applicable for resident individual, resident partnership firm, as well as resident partnership firm only covered. LLP is not covered. In that case, they are carrying specified business. Their gross receipt does not exceed 50 lakhs. In that case, what is the answer? 50% of their turnover will be considered as presumptive income. But amendment, nowadays the 50 lakh limit has changed to 75 lakh, provided their aggregate receipt does not exceed 5% of total receipts. Okay, chalo. Last topic, 44 AD, presumptive income in case of SC carrying any business other than goods transport vehicles. In that case, their turnover does not exceed 2 crore. But amendment from this batch onwards, 3 crore is the limit, provided their gross payments or gross expenses as well as receipt does not exceed 5%. Next number, what is the answer? 8% of turnover will be treated as presumptive income. Whereas in case of bank transfers or bank receipts, what is the answer? 6%. Expenses are allowed or not allowed? Not at all allowed. Okay, chalo. This is the chapter with respect to PGBP is concerned. Sir, see the word. So far we have completed first basic concept ICDS. Next number PGBP. Out of PGBP, minimum 8 marks, maximum 20 marks. But these 20 marks is because of total income computation plus other essays like partnership firm or else companies. All combination questions will be placed under the head PGBP. ICDS maybe MCQs or maybe PGBP question combination will be given. 100% they will give. Basic concepts, 100% tax rates will be placed in the exam, but no direct question. They will ask only combination questions. They will ask you company assessment as well as tax liability of company they will ask. If you want to calculate this, first you should know the tax rates, correct? Yes. So these are the three important topics we have completed so far. In PGBP, 36 important, 37 important, 32 important, 35 important, 35D important, 35 AD important. 36 other deductions, general deduction, depreciation, R&D, 35D amortization of preliminary expenditure, specified business. 40 series important, 40 small a disallowances, 40 small b partners capital, partners interest and all, 43b expenses allowed on deduction on what basis? Payment basis. 28 charging section. So these are the topics related to PGBP important areas are concerned. Okay, chalo comrades, now we are going to start the topic. Next topic, DTAA, exam point of view most important chapter. Without this topic you will never ever get the question paper. The topic is DTAA, and we are going to cover another part that is called as equalization levy. First let me explain the topic, that is DTAA, double tax avoidance agreements. I need your participation. So far we have completed basic concepts as well as ICDS as well as PGBP. For a change, I am going to start the DTAA right now as well as equalization levy. Please follow. If same person income is taxable twice in that case, that is called as double taxation. To avoid double taxation, our central government may enter into agreement with other countries' government, that is called as DTAA agreement, double taxation avoidance agreement. Government don't want to continue to collect the tax twice from a same person. For that purpose, they want to give the relief, that is called as bilateral relief. I repeat, reliefs are two in number. One is called as bilateral relief. Second one is called as unilateral relief. Bilateral relief is covered under section 90. Unilateral relief covered under section 91. But 90A also there, that is called as bilateral relief with respect to specified association. Now what is the bilateral relief? First one, there must be income that is earned from outside India. The two, the income is taxed in India as well as outside India. There was a double taxation. In order to avoid double taxation, our government may enter into agreement with foreign government. As far as this agreement, we can give the relief. The relief is two in numbers. One is called as exemption method. Second one is called as tax credit method. Exemption method means if you pay the tax in one country, automatically that amount is fully exempted in another country. Tax credit method means whatever the tax you have paid in another country will be allowed as credit and it can be adjusted against tax payable in another country. This is the topic called as tax credit method. Ultimately, these two methods are recognized under bilateral relief. And next number, the concept of bilateral relief is nothing but the government of India and the government of other country may enter into agreement in order to avoid double taxation, to grant the relief, exchange of information, collection and recovery of taxes. Okay, chalo. Next number, when there is a conflict between Act versus ICDS, which will prevail ante Act. When there is a conflict between Act versus DTA, which will prevail? Most beneficial things to the SSC will prevail. I repeat, most beneficial things to the SSC will prevail. Okay, chalo. Now it's time for DTAA, bilateral relief material follow. Double taxation occurs when the same income is taxed more than one country, then the double taxation is applicable, which result into undue hardship. For that purpose, Government of India wanted to give the relief. That relief may be bilateral or may be unilateral. Actually, income is taxable based on two rules. One is resident rule, second one is source rule. If you are a resident in India, you have to pay the tax. If it is Indian income, you have to pay the tax. That is called as resident rule and source rule. Unfortunately, in India, we are following both the rules. Therefore, so many people are come under double taxation. For that purpose, government wanted to give the relief, bilateral relief, as per section 90 or 90A. Specified association that is covered under 90A, other than specified association covered under section 90. There are two concepts. One is exemption method, second one is tax credit method. If income is taxed in one country, automatically that is exempted in another country. That is exemption method. Tax credit method. Tax paid in one country will be allowed as credit for the tax payable in another country. These two are bilateral reliefs, okay? Unilateral relief, most important topic. Exam point of view, 99.99% important topic is 91 section unilateral relief is most important, and 0.001% important is bilateral relief. The reason, most of the things are theoretical questions with respect to bilateral, whereas with respect to unilateral, that is practical oriented question. Take care. Next number, objectives of DTAA. Answer: to grant the relief, avoid the double taxation, exchange of information, recovery of tax. And most important word, when there is a conflict between Act versus DTAA, the most beneficial things to the SSC will prevail. But one exception is there, that is called as GER. In case of GER, when there is a conflict between Act versus GER, or rules versus GER, or DTAA versus GER, always GER prevails. General anti-avoidance rules will prevail. Okay, chalo. Exam question: Act versus DTAA, which will prevail? Most beneficial. Generally DTAA. Correct? Yes. Next number, GER versus what is that? DTAA. Which will prevail means GER only will prevail. Okay, take care. Next number, section number 91. What is section 91? Unilateral relief. In the world, so many countries are there, but India may not enter into agreement with each and every country. Okay, whenever we don't have any exchange of information, when we don't have any kind of agreements, then in that case, our government cannot grant bilateral relief. Our government can grant only independently, they can grant the relief, that is called as unilateral relief. For that, there are some steps. The steps are as follows. There must be some income. The income is occurred in India or outside India? Outside India. Foreign income. That too, the income is already taxed in India and taxable in foreign, are both the cases. Kada? Yes. That too, now agreement is there or no agreement? No agreement. Because India may not have cordial relation with that country, there is no agreement. In that case, our government voluntarily want to give the relief under section 91. In exam hall, they will give, the examiner will give one word, there is no agreement under section 90. Once they given the word there is no agreement under 90, then go for 91. How to grant the relief? For that, we have to do the steps up. Step number 1, compute total income. Compute total tax. Compute average Indian tax rate. Step 4, compute average foreign tax rate. Step 5, unilateral relief is equal foreign income which is subject to double taxation into lower of average Indian tax rate or average foreign tax rate. I would like to highlight one word here. Foreign income which is subject to double taxation means that income after claiming deductions, that income after claiming exemptions, after claiming set off and carry forward of losses. Kada? Yes. Only the net income which is subject to double taxation, that income only must be taken, because relief always will be given for affected things. Kada? That means those income which are taxable there and here, that is only covered. So be careful. Once the income is subject to double taxation, then only should be considered. Most important thing. I will take one example. Our friend, she is a book author. Her books are sold in abroad, foreign. Okay. So she got the income of 10 lakh. This is foreign income. Okay. She paid the tax in foreign country also on this 10 lakh. How much? Let us say 20% tax, 2 lakh she paid. Well and good. Come to India. In India, this income again taxable, because as per resident rule, when you are a resident, global income is taxable now. Yes. But wait, in India, 80 QQB deduction will be allowed 3 lakh rupees. Kada? Yes. 7 lakh is only taxable in India. On this 20% means only 1 lakh 40. Common sense. Now there 10 lakh is taxable. In India, 7 lakh is taxable. But you have to consider 10 or 7, whichever is lower. Correct? Yes. Foreign income which is subject to double taxation must be considered. Very, very important. So, moral of the story, foreign income before deductions or after deduction? After deduction. Before set off or after? After set off. Before exemptions or after? After. Net figure only must be considered. Or after that, into lower of average Indian tax rate or average foreign tax rate. That must be considered. Last number, net tax liability is equal final tax liability minus unilateral relief shall be considered. After that, you will get the deduction. Correct? You will get the net tax liability. Chalo. With this, done with the topic called as unilateral relief. Once again, please follow the topic DTAA. Now, once same income is taxable in more than one country, that is double taxation. Unfortunately, in India, resident rule we are following and source rule we are following. Resident rule means if you are a resident, taxable. Taxable, kada? Yes. Source rule means even though you are a foreigner, even though you are a non-resident, you earn the income. That income is also pakka taxable. I will tell you the example. South Africa versus India cricket match has taken place between South Africa and India World Cup match taken place. So South African players are non-residents, kada? Yes, but they played in India. Automatically, as per source rule, they are liable to pay tax or not? Yes. But in one match, our Indian players played the match in abroad. Abroad. Now tell me, they are residents, but they played in abroad. Still, it is taxable or not? Yes. Moral of the story: resident rule means if you are a resident, it is taxable. Source rule means if the income is in India, even though you are a foreigner, it is taxable. India adopted this concept. Therefore, there is a chance of double taxation. For this purpose, our government and foreign government entered into agreement. That agreement is called as bilateral. Bilateral. That is the reason they may give exemption method benefit or tax credit benefit. In exam, which method we can take? Answer: exemption method you can take if nothing is mentioned. Okay na? If examiner asked you to consider tax credit method, that also can be considered. Okay? Chalo, last one. If there is no such method is specified, there is no such agreement is mentioned, in this case we need to go for unilateral relief. Income is subject to double taxation. Which income? Foreign income into lower of average Indian tax rate or average foreign tax rate must be considered. Correct? Yes. How to calculate unilateral relief? Step number 1, compute total income including foreign income. Compute total tax. I already told you, you have to calculate the tax as for Indian laws or foreign laws. Indian laws. Examiner will tell you standard deduction not allowed while computing house property income as per foreign laws. Still, allowed or not? Yes. We have to do the problem as per the provisions of Indian income tax laws. After that, you have to calculate average Indian income tax rate. What is that? Total tax divided by total income into 100. You have to calculate average foreign tax rate. Average foreign tax rate is equal foreign tax divided by foreign income into 100. Relief, unilateral relief under 91 is equal foreign income into lower of average Indian tax rate or average foreign tax rate. Net tax liability is equal total tax minus relief. Correct? Yes. Chalo. Next number. Relief you have to calculate country wise or consolidated wise? Country wise. Because country to country provisions will be changed. Kada? Yes. Next number. You have to take the foreign income which is subject to double taxation before deductions or after? After. Before set off or after? After. That's all. Next number. Another topic. Whereas in case of foreign tax creditor, that also shall be considered. Okay na? Chalo. With this, we are done with the topic section 9091. Next number P, permanent establishment. All of you, please follow. Non-resident, when they have PE, non-resident have PE, then only their business income is taxable. I repeat, non-resident who is having PE, then only they are liable to pay the tax. For your information, Tesla, they don't have any operations in India. They don't have any permanent establishment in India. Therefore, Tesla company MD is liable to pay tax or not? No, because that non-resident does not have PE, therefore not taxable. Other example, some foreigners, they have operations in India, they are liable. Example, Honda. Come on, Honda, they have permanent establishment or not? Yes. Now in Tamil Nadu, they have unit. Therefore, their business income is taxable. Moral of the story, PE will play a vital role here. Okay. Therefore, in case of non-resident, first you have to check whether PE is there. What is the PA? Permanent establishment. It is a fixed place of business. For that, I told you one word, BOW, SFMM. What is the BOW? B for branch, office, warehouse, sales outlet, factory, mines, place of management. See the word, memory code I have given here, BOW, SFMM. If non-resident have PE, then only that income is taxable. If non-resident does not have PE, it is not taxable. That's all. With this, we have done with one important topic that is called as DTAA. I want to revise the exam questions here. Follow one by one. Now, what is the significance of PA? First, you have to write about the PA. What is PA? Fixed place of business, which includes the following: BOW, SFM, AM. Next number, in case of non-resident or resident, where it is relevant? Non-resident, not for resident, because for resident global income is taxable, only for non-resident. Next number, one person have income from one country where DTI is there, another country DTA is not there, then how to do the problem? Consolidated or country wise? Country wise. Next number, one person has income from only one country, with that country there is no agreement, then you have to go for unilateral relief. Correct? Yes. But one person have income from foreign companies, foreign countries, that too, as for Act one answer is there, as for DTA another answer is there, which is beneficial to the SSC can be followed. Correct? Yes. Next number, another beautiful topic, important topic, equalization levy. What is equalization levy? Please follow. In case of resident, they are making the payment to non-resident who does not have P. Few seconds back I told you, if non-resident does not have P, they are not liable to pay the tax. Because of that reason, these payees are getting the advantages. Kada? Yes. Therefore, Government of India introduced one concept, equalization levy. Whenever payment made by resident or non-resident having PE to non-resident does not have PE, in this case they made the payment for only two purposes are covered right now: online advertisement or digital marketing. In that case, if you make the payment, that too the payment amount exceeds 1 lakh, that too for business or profession purpose, in this case the payer has to deduct that amount at the rate of 6%. After that, he has to remit to the Government of India on or before 7th of the next month. Correct? Yes. If you have not deducted like that, in your hands, deduction will be allowed or not allowed? No deduction will be allowed. 100% it will be disallowed. Kada? Yes. Next number, if you have deducted, good news, in their hands it is fully exempted under section 10 subsection 50. Correct? Yes. Chalo. Now here some exceptions are there. If the amount is made for personal purpose, no, not covered. Kada? If the amount is made for business purpose, but he paid only 1000 rupees, covered? No. It exceeds 1 lakh. Next number, I paid the amount to resident. Is it covered? No. It is only payment made to non-resident who does not have PE. I paid the amount to non-resident who has PE. Is it covered? No. Correct? Yes. Payment made by non-resident who does not have PE. Equalization levy applicable? No. Correct? Yes. Next question. Important topic. Take care. Very important, especially for MCQ, equalization levy. When I say the word international taxation, that is core topic for your exam. and core topic for your practice. Okay, chalo. Now all of you, the rate 6%, levy only specified services. Our specified services are as follows: online advertisement, digital marketing, ad space, and payee. Payee is a non-resident having no PE. Payer is resident as well as non-resident having PE. Exemption, what is the amount? 1 lakh. That too, another exemption, what is that? Personal purpose. In if you have not deducted 100% or 30% or disallowance, 100%. The specified services, just now I told you, online advertisement and digital marketing. And if you have deducted in subsequent year, it will be allowed as deduction in that year or same year, in that year. Correct? Yes. With this, done with the topic called as online concept, the digital marketing, online advertisement concept, equalization levy, and we have completed DTAA. 100% you will get one question with respect to DTAA. 100%. Okay. Minimum 6, maximum 8 marks. Okay. And PGBP one question pakka compulsory. That's all. These two chapters are most important chapters. And another important chapter, game changer, transfer pricing. Out of this chapter, minimum 8 marks. Minimum you will get 8 marks. Out of this chapter, 8 marks to 20 marks compulsory. Okay. As I told you earlier, without these 3 chapters, you will never ever get the question paper. Okay. I can add a non-resident chapter also. Anyhow, now we are going to start the topic TP, transfer pricing. What is this? Please follow. Ready? Start. Very, very important. Nowadays, Tesla company, they already have operations in USA, and similarly they wanted to start their branches in India, and they already had operations in China. They may start in future in Bangladesh also. Obviously, this company is a MNC right now, so multinational company where it has branches across the globe. Now come to our country India. Whenever foreigners having branches across the globe and having operations in India, automatically they tempt to reduce their income, correct? Or they tempt to increase their expenses. They're ready to pay low amount of tax because they are humans, right? That is the reason government of India wanted to collect the tax on genuine profits. To calculate genuine profit, they introduced the concept called as TP, transfer pricing. For that, the provisions of 92, 92A, 92B, 92BA, come on, 92C, subsection, come on, 1, 2, 3, 4. Next number, 92CA, 92CB, 92CCCD, 92CE. Next one, 93, 94A, 94B. These are the topics we need to consider. Don't worry, I will try to revise. I will explain in detail. Okay, just follow. Ready, start. First one. Whether you know it or not immaterial, just listen. Okay, automatically the files, already you throw the files in your subconscious brain. No one will delete. 100, no one will delete. But you will keep other files on that main file. One is World Cup, one is cinema, one is regarding someone else. Okay, we will have different file. So today what we are doing, I am telling you the address of that particular file. Some people will bring the file to the top of all the files. Okay, they will clear the exam in the immediate attempt. Otherwise, some performing assets will be there. Every 6 months, they will contribute to institute. Okay, fine. Chalo. Fine. It's time for first one, section number 92. What is that? Nana, follow. Very, very important. Section number 92, income or expenditure or interest or allocation of cost. I repeat, income, expenses, interest, allocation of cost with relation to dash, with relation to step number 1, international transaction. But afterwards they added one more word, specified domestic transaction shall be computed having regard to ALP. ALP means arm's length price or TP subject to following conditions. Condition number 1, there must be two parties. How many parties? Two parties. But the two parties must be jiggeries. Okay, na? Fine. Not Peddi song. What is that song? Fine. There must be minimum two parties. The two parties must be associate enterprise. And the two, question number two. The two parties must have national or international. International transaction or specified domestic transaction. And the two, they must maintain the books of accounts under section 92D. Correct? Yes. And audit report also required under section 92E. 92E. And next number, computation must be made as per section 92C. So these are the conditions. Correct? Yes. Now one by one we are going to cover. First one, there must be two parties. Two parties must have the relation called as associated enterprise under section 92A. What is the associated enterprises? That is the question. Question number one, in case of shareholding, what is that? Not less than 26%. Common shareholding also same kada? Yes. In case of loans guaranteed, what is the answer? 10% of borrowings. Next number, in case of loans given, what is the answer? 51% of total value of assets. Correct? Yes. I told you. Now Battu, okay, and this Chandrakala. Battu sponsored the assets to Chandrakala, which equivalent to 51% of our total value of assets. I told you no. Now the relationship is called as associated enterprise. And in case of purchase of raw material, 90%. In case of sales, 100%. Very good. In case of intangibles, 100%. Very good. In case of BOD, Board of Directors, not less than 50%. Correct? Yes. In case of individual, opposite organization owned by relatives. Yes or no? In case of partnership firm or AOP, BOI, minimum 10% of profit sharing ratio you must have. Correct? Yes. If any one of the conditions satisfied, then you both are treated as associated enterprise. First, in the problem, you have to check whether they are jiggeries or not. Kada? Yes. All of you see the problem. First one, transaction of international transaction. ALP provision shall apply. Condition number one, there must be two parties, and the two parties must have the relationship called as associate enterprise, and the two, they must have international transaction. So I told you, whenever there is a and there is a B, automatically C is applicable. A for associated, 92B for international transaction. When A and B is there, automatically computation under C applicable or not? Yes. Oh, 92A, 92B, 92C. Kada? Yes. But sorry, ALP provisions are not applicable when it leads to reduction of income, when it leads to increment of expenditure. See the word 92 apply, does not apply when it leads to reduction of income or increment of loss. Correct? Yes. Next question, Nana. What are the specified what is the associated enterprise? Number one, shareholding. What is that? Not less than 26%. Common shareholding, not less than 26% in each. Next one, lender given the loan, but to given the loan. What is that? Not less than 51% of book value of total assets of the fellow. Kada? Yes. Next number, bank guarantee how much? 10% of total borrowings. Next number, board of directors, more than half of board of directors or more than half of directors in common. Okay, chalo. Next number, technical know how much? 100%. Raw material how much? 90%. And one enterprise conditions are influenced by others. Next number, individuals. Opposite is relatives. One is HUF. Opposite is relative or karta. One is AOP partnership firm. What is the percentage minimum? 10%. So this is the relation. Correct? Yes. Next question. 92A is completed. Next one, 92B. What is 92B? Associated enterprises must have one international transaction. What is the rule? Answer. At least one of the fellow must be a resident or non-resident. Non-resident. Correct? Out of two parties, at least one fellow must be non-resident. See the word. Now all of you, resident. Applicable or not? No. Resident or non-resident? Yes. Non-resident and resident? Yes. Non-resident, no. but at least such income must be non-resident, yes, provided at least the income must be taxable in India. Correct? If this condition satisfied, then only provisions are TP are applicable. Correct? Yes. But recently they introduced one more topic, 92 BA. What is that? Specified international or domestic. Specified domestic transaction. At least the transaction value must exceed 20 crore. The following are only covered. Number one, I repeat, inter-unit transfers. Transfer of goods or services from eligible entity to non-eligible entity. In that regular class, I told you one topic that is called as GMR. Okay, GMR Infra. They have two organization. One is eligible business. One is eligible under Section 80IA. Second one is non-eligible for 80IA. Already you know, if it is eligible under 80IA, they are eligible for 100% deduction. Kada? Yes. Whenever it is eligible for 100% deduction, that is called as eligible entity. Other than that is called as non-eligible entity. Whenever you have transaction between eligible to non-eligible, you may manipulate the figures. Kada? That is the reason. If the transaction value exceeds 20 crore, automatically the actual profits of this transaction shall be computed having regard to the provisions of ALPR TP. Correct? Yes. Once upon a time, TP provisions are only applicable for international transactions, but nowadays it is also applicable for specified domestic transaction, provided transaction value must exceed 20 crore. So, specified domestic transactions are as follows. One is a transaction between eligible to non-eligible. Second one, inter-unit transfer of goods or services between 80IA organization to non-80IA, whereas 80IA subsection 10 to non-80IA. And next one fellow is following the provisions of 115 BAB. Already I told you, if you follow 115 BAB, 22% or 15% generally applicable. Correct? Yes. I am eligible for 30%, you are eligible for 15%. Then automatically we can manipulate or not. Therefore, Government of India decided to apply provisions of TP to specified domestic transaction, provided the transaction value must exceed 20 crores. Okay, chalo. With this, we have done with the topic called as introduction. What is that? Section number 92. Tell me, what is the introduction? Income, expenditure, interest, allocation of cost between two entities shall be calculated having regard to the provisions of ALPR TP, subject to fulfillment of these conditions. Number one, there must be two parties. The two parties must have the associated enterprise relationship. Number two, there must be international or specified domestic transaction. Number three, documents must be maintained. Number next, audit must be done. Number next, shall be calculated having regard to the provisions of ALPR TP under the provisions of section 92C. Kada? Yes. Next number 92A. What is that? Associated enterprise. Shareholding not less than 26. Common shareholding 26. R&D 100. Raw material 90. Sales 100. If examiner 100% they will give the question. In that question, first you must check whether they are associated or not. Next number, at least one party must be non-resident. Then only it will be called as associated enterprises having international transaction. And the specified domestic transactions also covered, provided the value of transaction must exceed 20 crore. Next number 92C subsection 1, that is nothing but methods. Okay, I told you in the regular series, first one, these are the political parties. One is CUP, one is CPM, one is resale price method. Next number, profit split method. One is a comparable uncontrolled price method, cost plus method, profit split method, resale price method. Next number, transaction net margin method, any other method. Correct? Yes. I repeat, comparable uncontrolled price method. When we have transaction with jiggeries as well as non-jiggeries, then this transaction can be compared with that transaction. This is called as which method? CUP. Most of the examination they asked the question called as CUP. Next number, cost plus method. I am only manufacturing, I am only selling to my jiggery. Automatically CUP method to be followed or not? No. CUP method can be followed when you have comparison. Kada? Yes. When we don't have comparison, I need to do at my own. For that purpose, I need to follow which method? Cost plus method. But it is only applicable when I am only manufacturing, when I am only producing and supplying to jiggeries. Kada? Yes. Next one, profit split method. When I also participated as a single one unit among the different players, automatically the total profit can be splitted. Kada? Yes. Next number, resale price method. I am buying from my jiggery and I am selling to non-jiggeries. Automatically resale price method shall be followed or not? Yes. Same way, transaction net margin method, root level we need to check it, and any other method if possible. CBDT, central government, as well as CBDT may notify in future. These are the different methods are available. Okay, chalo. Next number 92C subsection 2. What is that? More than one method. Everybody in the class, whenever more than one method is available, which method we need to follow? Arithmetical mean. Correct? Yes. But the differentiation between actual price and arithmetical mean that does not exceed how much percentage? 3% of actual price. If it exceeds 3% of actual price, then we need to consider arithmetical mean. Otherwise, we need to consider actual price. In case of wholesaler, what is the answer? 1%. Don't take 3%, you can take 1%. Benefit? No? Yes. But it's not applicable for NJA people. It is only applicable for other than NJA. Next number, I told you another topic earlier, 92C subsection 3, mood. Okay, what is that? Assessing officer wanted to determine ALPR TP. Step number 1, your books of accounts are not maintained. Number 2, maintained but not produced. Correct? Maintained and produced but the information is wrong. Last number, your method is not followed. You have not followed cup method, you followed saucer method. What is saucer method? And a fake method only you have adopted. Immediately we can follow. Assessing officer can determine by himself or not? Yes. But handkerchief oppo must be given or not? Yes. Opportunity of being heard must be given while determining officer wanted to determine any particular TP. Correct? Yes. Chalo. Last number 92C subsection 4. What is that? Effect of ALP determined by assessing officer. Step number 1. Any deductions will be allowed? No. No deductions will be allowed. 10A deduction will be allowed? No. Other person's income will be recomputed? No. Others' income shall not be recomputed. Correct? Yes. Nana, with this we have done with the topic 92, 92A, 92B, 92BA. Next number 92C, subsection 1, 2, 3, 4. So far, these are the topics we have covered. What is 92? Intro. Income or expenditure or interest or allocation of cost of international transaction shall be computed having regard to ALP or TB subject to following condition. There must be two parties must be associated enterprise. The transaction must be international or domestic transaction. And the documents must be maintained under section 92D. Audit report under section 92E. Then computation as for 92C subsection 1. Cup method, cost plus method, resale price method, profit split method, transaction net margin method, any other method notified by the government. Kada? Whenever more than one method is there, more than one method is there, arithmetical mean shall be considered. But arithmetical mean shall not be considered if the differentiation between arithmetical mean and actual price does not exceed 3% of actual price. But in case of wholesaler, it is 1%. Whenever your books of accounts are not correct, whenever your books of accounts are correct but not produced, whenever you not followed particular method for the computation of ALP or TP, then assessing officer can determine after giving the opportunity of being heard. Once they calculated under 92C subsection 3, then deduction under 10AA will not be allowed with respect to particular income. Kada? No deductions will be allowed under particular section. Correct na? Yes. Chalo. With this, we have done with the topic 92C. Next one, 92D. If the transaction value exceeds 1 crore, you have to maintain the books of accounts for the minimum period of 8 years. If you have not maintained, compulsory you have to pay the penalty and you have to pay the interest. 2% of transaction value must be paid as a penalty. Yes or no? Yes. How many years you have to maintain? 8 years. Next number 92E. those people who have international transactions, compulsory they have to obtain CA certificate, okay, chartered accountant certificate. And correct, yes, in form number 3CEB, it must be filed on or before 30th November of assessment year. Come again, 30th what? November of assessment year. Compulsory you have to obtain report from chartered accountant, must be filed in form number 3CEB, that too on or before 30th November you have to submit. Otherwise, you have to pay the penalty of how much? 1 lakh. Yes or no? Yes. That is the topic called as section 92E. Okay, fine. So far these are the topics covered. 92 intro, 92A associated, 92B international, 92BA specified domestic transaction, 92C subsection 1 computation, subsection 2 more than one, subsection 3 determination by the assessing officer, subsection 4 effect of ALP determined by assessing officer, 92D documents, 92E audit report. Now it's time for 92CA. What is that? ALP or TP determined by TPO, transfer pricing officer. Let us start. Whenever any SC has international transaction, in that case, he will declare certain TPs, transfer pricing he will declare. At the time, assessing officer has, these are the pass. Power number 1, he can accept the same as it is. Kada? Or else, if you want, he can determine under section 92C subsection 3, determined by assessing officer. Or else, he may refer the matter to TPO, transfer pricing officer. Once he refer the matter to TPO, TPO will determine TP or total income, only TP. Correct? Yes. He does not have power to determine total income. He does not have power to do assessment. After all, he will determine the TP. Next one. If he comes to know any other transaction, he can do or not? Yes. OPPO must be given or not? Yes. Next one. Is it binding on SC? No. But binding on assessing officer? Yes. 100% binding on the assessing officer. Based on the TP, assessing officer shall determine the total income. Correct? Yes. Chalo. Next number, we covered another topic, 92 CC and 92 CD. APA, Advanced Pricing Agreement. What is that? So many business tycoons have so many international transactions. Therefore, doing these provisions are time consuming. That is the reason, with the permission of central government, our Indian business people, SSC and CBDT may sit across the table, they enter into chai pe charcha, they will come up with one proposal that is called as ALP purpose. They will introduce one topic that is called as APA, Advanced Pricing Agreement. In advance, they want to determine the TP in advance, that is called as ALP or TP, they want to determine in advance. That is the reason it is called as APA, Advanced Pricing Agreement. It is valid for a period of 5 years. It is valid only for the applicant, not for his brothers and sisters, only for applicant. That too, it is valid for how many years? 5 years. If it is obtained by fraud, void ab initio, then normal provision shall apply as if you have not entered into APA. Correct? Yes. Chalo. Next number, another topic, which will prevail? Transaction, normal computation will prevail or APA will prevail? APA. Next number, rollback. Rollback is mandatory or optional? Optional. How long we can do? 4 years. Not mandatory, it is optional. But two condition, you must have filed the return earlier in time, and the two, the transaction where what you have entered earlier must be the same what you are seeking right now. Kada? Yes. The day transaction and the today transaction business must be the same. Then you can enter into APA. But wait, in case of rollback provisions, can I reduce my income? No. Can I increase my losses? No. No, no, no. Correct? Yes. This is the topic called as 92CC, 92CD, APA, Advanced Pricing Agreement. Next number, another beautiful topic is there, that is called as 92CA. What is that? Secondary adjustment. Listen, whenever our friend Sai he do export to foreign countries, in that case, the transaction is covered under international transaction. So APA provisions or TP provisions are applicable. Then you have to declare the ALP or TP, or else a SING officer will determine, or else TPO will determine. When there is a difference between your price versus this department price, then automatically you have to do primary adjustment. Correct? Yes. Adjustment to net profit is called as primary adjustment. After primary adjustment, lawmaker wanted to do adjustment in your books of accounts also. That is called as secondary adjustment. That is nothing but change your balance sheet figures. You have to take it as a loans and advances, and you have to repatriate the amount within how many days? 90 days. If you have not repatriated within 90 days, you have to calculate the interest. On that interest, you have to pay the tax. How to calculate interest? That amount into what is the rate you have to take? If it is in Indian currency, you have to take SBI rate plus 3.25%. If it is a foreign currency, you have to take 3% plus Libar. Correct? Yes. Instead of doing all the things forever, you can do one thing. Additional income tax you can pay at the rate of 18% plus surcharge plus health and education cess. This is called as secondary adjustment. Very, very important topic. Take care. Very, very important. Next, another topic we have completed, that is called as 94A. What is that? NJA. Only one liner. India does not have agreement with some foreign countries for exchange of information. We don't have agreement. When India does not have agreement with some foreign countries where for exchange of information, some people in India may enter into transaction with such countries. That countries are notified by Government of India as what? NJA. If any Indian entered into transaction with NJA, both are deemed as what? Associated enterprise. And that transaction will be deemed as what? Deemed international transaction. Automatically ALP or TP applicable or not? Yes. You Indian, when you are making the payment to people located in NJA, compulsory you have to deduct TDS at the rate of 30% or rate specified in the act, whichever is higher. Whatever the amount you have received from these people, compulsory you have to explain the source. If you have not explained the source, that should be considered as income. Income, correct? Yes. That is the topic called as 94A. What is 94A? NJA. If examiner mention the word NJA, immediately you have to put the heading computation of ALP or TP as per provisions of so and so and do the problem, because you no need to check 92A, no need to check 92B, because by default they are degrees. By default the transaction is called as international transaction. Another topic, last topic of this kind, 94B. B for bar on interest. What is bar on interest? So many degrees, they are paying higher amount of interest to others. Kada? Yes. Now you interest is above the line item or below the line item? Dividend is below the line item, but interest is above the line item. Whenever interest is above the line item, automatically it will affect your tax computation. Correct? That is the reason many people are doing this payment instead of paying off dividend. Therefore, government wanted to restrict that interest amount maximum of some level, that is called as 94B, bar on interest. How much will be allowed? List of the following allowed. How much? Actual interest or 30% of EBITDA. E for earnings before interest, tax, depreciation, amortization. Out of these two, whichever is lower will be allowed. And actual interest, how much you are making minus this permissible interest, the differential amount is allowed or disallowed? Disallowed. But don't worry, it can be carried forward for maximum period of 8 years. Correct? Yes. But one thing for sure, these provisions are not applicable to those SCs who are already engaged in the business of insurance and banking. Correct? Yes. Next number. These provisions are applicable if you are following, if you are having, what do you call, any transaction like taking the loan or giving the guarantee, bank guarantee, whether directly or indirectly, is also covered. This is the chapter called as 92 to 94B. Very, very important chapter. As I told you earlier, out of this chapter, minimum 8 marks for sure you can expect. All of you open the material and see this one. Now I have given the simplified material. Chalo, see this one. First one is conditions. Conditions are as follows. There must be two parties, two associate enterprises, and the two they are having international transaction. And these provisions are not applicable when it reduced the total income or increased the loss. And international transaction means out of these two parties must be associated. The two, at least one party must be non-resident. See this example. If both are resident, provisions of TP applicable or not? No. If one person is non-resident, automatically both are TP provisions to be followed or not? Yes. If both are non-residents also to be followed, but at least the income must be deemed to accrue arise in India. Next number, domestic transactions also covered, provided the transaction value must exceed 20 crore. The two, associate enterprises relation is directly or indirectly, may be deemed or actual. Deemed means shareholding how much? 26. Common shareholding 26. And loans are bank guarantee. Bank guarantee 10% of borrowings, whereas loans 51% of total book value of assets. And board of directors, more than half of the directors are appointed. And technical know-how 100%. Raw material 90%. Now individuals means opposite fellow is relative. And AOP partnership form, what is the percentage minimum? 10%. What are the methods we have? CUP. What is the CUP full form? Comparable uncontrolled price method, resale price method, cost plus method, profit split method, transaction net margin method, any other notified method. The methods I have given here, see the word. First one, comparable uncontrolled price method. Different format I have given intentionally. Simplified version, see the word. First you have to take the price between unrelated or related. Unrelated. See the word. Identify the price in uncontrolled transaction plus or minus adjustments. That's all. This method is applicable when identical and similar transaction, comparable transactions are there. Kada? Yes. Next one, resale price method. First you have to purchase the same from your jigri and you are selling to others. See the word. Resale price is to unrelated party. Their price you can take minus industry profit you can deduct minus expenses plus or minus adjustment you will get resale price method. This is only applicable when you purchase from your jigri and resold to unrelated. Correct? Cost plus method. I am only manufacturing or producing. I am only exporting to jigris, then only covered. You have to follow your cost sheet method. Direct, indirect cost, normal industrial profit plus or minus adjustment, then you will get LPR TP. This is applicable when you are only producing and you are only selling to your jigri. Last one, profit split. In a combined work, you are one of the participant and you participated and you got the income, then profit split method is applicable. One liner, whenever multiple ALPs are there, what is the answer? Arithmetical mean. But what is the tolerance limit? 3%. But in case of wholesaler, 1%. 92C subsection 3. ALPR DP determined by assessing officer. 4 cases. Number 1, books are dash. Maintained or not maintained. Number 2, maintain but not produce. Number 3, maintain and produce but not correct. Kada? Last one, method is correct method or incorrect method. Next number, see the word 92C subsection 4. Effect of ALP determined. See the table. These symbols intentionally given. Number 1, total income shall be recomputed. Yes. Others income will be recomputed? No. Deductions under 10AA, 80IA, no. Next number, another topic, penalty provisions shall apply or not? Yes. Okay. Next number 92CA, reference to TPO. Whenever assessing officer decided to give, he can transfer the case to TPO. TPO will determine after all TP or total income. TP. Who is TP? I told you JCIT or DCIT, Joint Commissioner or Deputy Commissioner. And next number, TPO will collect the evidence and he will determine the TP. Okay. Next one, is it binding on SC? No. Is it binding on the assessing officer? Yes. See the last one, binding on assessing officer. Assessing officer must follow ALPR TP determined by the TPO. Next number 92, CC and CD. Most important topic. What is that? ABA. Authority. Which authority? CBDD. With the approval of whom? Central government. They will enter into APA with whom? Any person. The purpose. What is the purpose? To determine the ALPR TB. Which method? Any method decided by the CBDT and SSC. Effect. Once APA is assigned, ALP shall be determined as per APA. How many years it is valid? 5 years. It's binding on whom? Only applicant, only for the transaction, unless there is a change in the law and change in the facts. In case of fraud, what is the answer? Void ab initio. Procedure. Board may specify the so and so. Next number. What is the rollback? Rollback is mandatory or optional? Optional. How long it is valid? 4 years. C. If case already pending before department, rollback is applicable? No. That's all. Next one, other topic I have given 92D. If the transaction value must exceed 1 crore, then how long you have to maintain? 8 years. 92E, audit report. Come on, what is the form number? 3CEB. Now, how many months? 1 month. What is the 1 month? That is 30th November. If you have not maintained the books, how long? How long you have to maintain? 8 years. If you have not maintained, what is the answer? 2% of transaction value is the penalty. Correct? Yes. If you have not submitted audit report in form number 3CB, what is the answer? 1 lakh. Next one, secondary adjustment 92C I have given. After primary adjustment, compulsory you have to remit the amount to India within 90 days. Otherwise, you have to adjust in the books. That is called as secondary adjustment. I repeat, secondary adjustment is applicable only if the primary adjustment amount exceeds 1 crore. Then you have to calculate interest, deemed income interest. That is nothing but Indian currency. What is the rate? SBI plus 3.25. Foreign currency. Come on. 3% plus LIBOR. Next number. If you don't want to do this one, we have to pay extra income tax at the rate of 18%, such as 12%, health and expenses 4%. One time settlement you can do. Last but one, 94A. What is that? AJA. What is that? Whenever these parties are having transaction with the fellows located in non-jurisdictional area, automatically these two are called as deemed associated enterprises, and that transaction is treated as deemed international transaction. TP provisions are applicable or not? Yes, everything applicable except tolerance limit. 3% tolerance limit not applicable, and documentation must be maintained. TDS is applicable at the rate of 30%, and whatever the amount you received must explain the source. If not explained, that amount will be treated as income. Last and most important one, 94B. What is that? Bar on interest. It is applicable loan given by Indian company or foreign company who is having PA, and loan given to other associated enterprises, whether directly or indirectly. But it is not applicable if the amount is not exceeding 1 crore, and it is not applicable when the SC is engaged in the business of banking and insurance. And that too, how much will be disallowed? List of the following. Actual amount, or how much extra you paid over and above 30% of EBITDA. How long we can carry forward? 8 years. That's all, Nana. This is the chapter called as TP, transfer pricing. Okay. Compulsory you have to solve each and every problem. Whatever the material you are following, that each and every problem you have to solve. No relaxation for the TP chapter, because compulsory question. Especially computation methods are important. Take care. And MCQs also they may place the question. And next one, DTAA chapter also important for direct questions. And equalization levy is only important for generally MCQs. Okay na? Chalo. Next one, another important chapter, examiners another favorite chapter, that is nothing but non-resident. But if we want to do computation of non-resident income, first we should know residential status, as well as we should know total income. Nana, persons are two types. One is called as resident, Second one is called as non-resident. Incomes also two types. One is Indian income, second one is foreign income. In the hands of resident, Indian income pakka taxable. Foreign income is also taxable. In the hands of non-resident, Indian income taxable, foreign income is not taxable. Therefore, taxability of any income is depend upon your residential status. How to calculate residential status? In case of individual, residential status shall be calculated based on period of stay. When case of HEF, AOP, BOI and AJP as well as partnership firm, it shall be calculated based on control and management. Whereas in case of companies, we need to follow POEM. I repeat, place of effective management. First, let's start the topic called as individual. In case of individual, there are two basic conditions. If you are satisfied any one of BC, then you are called as resident. Correct? Yes. If you satisfied none of BC, you are called as non-resident. I will take the illustration here. In case of individuals, I repeat, if you satisfied any one of BC, then you are called as resident. If you satisfied none of BC, then you are called as non-resident. Come to the first one, resident. If you satisfied any one of BC, you are called as resident. After that, we have to go for further bifurcation. What is that? If you satisfied both AC, two ACs, if you satisfied, then you are called as RB or if you satisfied one or none AC, then you are called as RB and or resident but not ordinary resident. Next one, another concept has introduced recently, deemed resident. Come again, deemed resident. Now, one by one, we are going to cover who are deemed resident. Number one, individual. The two, Indian citizen or Indian origin. The two, who is having Indian income or foreign income. Indian income minus all total income minus foreign income. That means Indian income must exceed 15 lakh. The two is not liable to pay tax as for other foreign country. He is not liable to pay the tax elsewhere in the world. Kada? Yes. I will tell you the best example, Dubai. So many Indians nowadays working in Dubai. In Dubai, there is no tax. And that means the fellow is a Indian citizen, but settled in Dubai. Okay, fine. In that case, individual, Indian citizen, the two Indian income must exceed 15 lakh. Then is not liable to pay tax in foreign country. Then automatically our government want to collect the tax from this fellow in the name of deemed resident. Okay, follow. I will tell you one example. Mohanlal or Shah Rukh Khan, these people, they got the golden visa from Dubai. That means whenever they want, they can go just like that. How you will go to washroom, no? Same way, they can go to Dubai. Seriously, they got the permission like this because Dubai is the country where their major source of income based on petroleum and second one based on the tourism. Otherwise, they don't have any other option. They have only ska, okay, sand. That is the reason they decided to give golden visas to celebrities. That is the reason they have given one celebrity, Mr. Mohanlal Kerlite. They have given the golden visa. In that case, Mohanlal is a individual. The two is a Indian citizen. The two is a person who is having Indian income more than obviously 15 lakh. For example, is settled in Dubai. Settled in Dubai and is a non-resident for India. Correct? Yes. Still, we will consider him as a dash deemed resident subject to this condition. He must be a dash individual, Indian citizen or Indian origin. The two, Indian income must exceed 15 lakh and is not liable to pay the tax other country. Automatically that fellow is called as deemed resident. All these deemed residents are considered as RBNOR. By default RBNOR. Chalo. But for others, not like that. First, we have to check the basic condition. There are two basic conditions. Condition number one, you must stay in India for a minimum period of 182 days or more. 182 days or more. Minimum 182 days you have to stay in India. Basic condition number one, 182 days or more you have to stay. Come on, tell me. At one place or any place? Any place. at SH or anytime, but altogether 182 days or more. Correct? Yes. Second basic condition is there 60 days or more in the current year and 365 days or more during the period of last 4 financial years. Correct? Yes. In the current year 60 days, in the current previous year 60 days, and the last 4 years you must stay in India for minimum period of 365 days. But for second basic condition, there are three exceptions. Number one, first exception, individual Indian citizen leaving India as a for a employment outside India. Those people who are leaving India for a job purpose, it is covered or not covered? Not covered. Correct? Yes. First BC only applicable. Second BC is applicable or not? No. Second one, individual Indian citizen leaving India as a member of crew, ship crew member. Correct? Yes. In that case also it is not applicable. Second BC is not applicable. Kada? Yes. But in second BC there is a small change. What is that? Here from the date of signing of agreement to up to date of discharge, whatever the period you have, that period shall be excluded out of 365 days. Remaining days you have to check it. The remaining days must be more than 182 days, then only you are a resident. If it is less than 182 days, anyhow second BC is not at all applicable. Last but not least, individual Indian citizen or Indian origin visiting India. I repeat, visiting India. The two, their Indian income does not exceed, come on, not exceed 15 lakh. Total income minus foreign source does not exceed 15 lakh. Then second basic condition applicable or not? No. But here one small change. Individual, the two Indian citizen or Indian origin, the two whose total income minus foreign source of income exceeds 15 lakh. In that case, modified basic condition 2 is applicable. In the current year, you must stay for minimum period of 120 days or more. Okay. And in the last 4 years, how many days you have to stay? Minimum 365 days. Okay, na? Chalo. Next number, residential status of other people we can calculate. Other people means in case of HEF or in case of AOP or in case of BOI or in case of AJP or in case of partnership firm or in case of LLP. The answer is as follows. We have to check the control and management. Fully or partly in India, then they are called as resident. Fully outside India, then they are called as non-resident. Correct? Yes. If fully in India or partly in India, then they are called as resident. Otherwise, they are called as non-resident. Yes or no? Yes. But here, one good news, in case of HEF, you have to determine the residential status. Once you determine the residential status, if it is a resident HEF, then we need to classify as RBOR, RBNOR. How do you know RBOR and RBNOR? If Karta satisfied both of additional condition, then HEF is called as RBOR. If Karta satisfied one or none of additional condition, then HEF is treated as RBNOR. Correct? Yes. Okay, na? Yes. This is the residential status of other than individuals are concerned. Last one, residential status of company. In case of company, that is two in numbers. One is a Indian company. You did the pledge, right? All Indian companies are residents. Whereas in case of foreign company, we have to apply the poem. If poem is in India, then that is called as resident. If poem is outside India, then that is called as non-resident. Correct? Yes. What is the meaning of poem? Place of effective management. Poem is applicable if their turnover exceeds minimum 50 crore. That too, poem purpose, you have to check the word PACE. PASE. P for passive income, A for assets, S for salaries, E for employees. If active business is located outside India, correct? Yes. If this test is passed, then you have to check the board meetings. If majority board meetings held in India, then they are called as resident. Otherwise, they are called as non-resident. This is the topic called as poem. P for passive income. Your passive incomes are as follows: dividend, royalty, correct? And next one, purchase from Jigri and sales to Jigri also dash. Passive or active? Passive. Very good. A for assets. S for salaries. E for employees. Passive income, assets, salaries, and employees. Chalo. Now, another topic, scope of income. Very important topic. With respect to scope of incomes are concerned, first you have to determine whether that fellow is a resident or non-resident. All of you, your people are two in number, resident as well as non-resident. Again, residents again two in number. First one is called as RBOR, RBNOR. Last one is non-resident. Income is two types, Indian income as well as foreign income. Number one, income received in India. What is the answer? Taxable, taxable, taxable. Accrued in India. Taxable, taxable, taxable. Received in India, accrued outside India. Taxable, taxable, taxable. Anyone is in India. Taxable, taxable, taxable. Both are in India. Taxable, taxable, taxable. Next one, non-Indian income, foreign income. Both are outside India. What is the answer? Taxable, not taxable, not taxable. Next. Earned outside India, received outside India, but from a business or profession controlled from India. Taxable, taxable as well as not taxable. This is very important. Kada? Yes. Past year untaxed income remitted to India. Taxable? No. Not taxable. Income means income of this year or last year? This year. That is a topic called as scope of income. So from the scratch, see the word here, scope of income, three numbers, RBOR, RBNOR, NR. Number one, listen, underline, received in India. What is the answer? Indian income. First tell me Indian income. Taxable, taxable, taxable. Second one, accrue in India. What is the answer? Taxable, taxable, taxable. Next one, received, accrued outside India from a business or profession controlled from India. Most important. Third one is most important. What is the answer? Taxable, taxable, not taxable. Next number, both are outside India. Taxable, not taxable, not taxable. Next one, past year untaxed income remitted to India. Is it income? No. Not taxable, not taxable, not taxable. Please put the star mark for third and fifth point. Next one, income accrued or received outside India during the current year, but later on remitted to India. What is the answer? That means not this year, past year. Income accrued, past year remitted to India. Taxable? No. Current year income remitted to India. Taxable, not taxable, not taxable. Income is exempt elsewhere. All the way it is exempt. Not taxable, not taxable, not taxable. That is scope of income. Next one, residential status of individual. We covered. HUF and all covered. Company. I told you companies are two in number. Indian companies are resident. Foreign company. Poem is in India. Resident. Outside India, non-resident. How to calculate poem? Poem purpose, you have to check the pace. P for passive income up to 50% of total income. Assets less than 50% of total assets in India. Employees less than 50% of total employees are in India. And payroll expenses, salaries does not exceed 50, less than 50% of total. That is called as pace. If pace satisfied, then they are called as poem. If poem is in India, then you have to check the majority board meetings. Majority board meetings are held in India means they are called as resident. Otherwise, they are called as non-resident. Any doubts? Next one, we need to cover one topic, very important topic, section number 9. What is section number 9? That is income deemed to accrue arise in India. There are many topics, one by one. First one is called as income from business connection. Come again, what? Business connection. And the second one is called as income from any source located in India. Number 3, income from transfer of source located in India. Number next, salary or allowance or perquisites paid by resident or anyone to non-resident for services rendered in India. Next one, salary or allowance or perquisites paid by Indian government to Indian citizen for service rendered outside India. Next one is called as dividend paid by Indian government. Next one is called as interest, royalty and fees for technical services. Okay, one by one. Come on, tell me. Salaries paid by India to foreigners, that means non-resident, for services rendered in India. What is the answer? Salary paid for services rendered in India. What is the answer? Deemed to occur or arise in India. Next one. Salary paid by Indian government to Indian citizen for rendering services outside India. Then also it is called as Indian income or not? Yes. But two are exceptions. Number one, allowances and perquisites. Next one, dividend paid from any source that by Indian government. What is the answer? Indian income. Next one, interest, royalty, fees for technical services. In the three cases I told you one word, paid by resident, paid to non-resident for the purpose of business or profession in India means taxable. Outside India is not taxable. I repeat, paid by resident, paid to non-resident for the purpose of business or profession outside India, that income is not taxable. I told you, kada? Yes. Otherwise, it is pakka taxable. Next one, business connection. Business connection means that includes certain things, excludes certain things. What is that? It includes conclude the contract, costs. C for conclude the contracts. O for secure the orders. S for significance economic presence. S for secure any kind of particular transactions or particular business transactions if they entered on behalf of someone else, then that is called as business connection. I repeat, conclude the contract. Now orders. Next number, significance economic presence. Now next one, maintain the stock. These are called as business connection. When business connection is there, the income is deemed to accrue or arise in India. But certain things are not covered as follows. Number one, collection of news and views. Only cinema production and licensing office. And next number, exhibition of unasserted diamonds by foreign companies. These are not covered as a business connection. Okay. All of you see the word. So far we covered residential status and scope of income. There most important for you is poem. In case of poem, you have to check the phase. P for passive income, A for assets, S for salaries, E for employees. After that, you have to check business connection. One bro is there. Bro for agent. Kada? Agent is concluding the contract, procurement of orders, or securing the orders, or significance economic presence, or else that fellow is maintaining the stock. If cost is there, C for, come on, contracts, O for orders, S for maintain the stock. Last one, significance economic presence. In all the cases, same answer. Business connection is there or not? Yes. And another point I told you, in case of interest, royalty, fees for technical services, it is not taxable if paid by resident to non-resident for carrying business or position in India or outside India. Outside India. Very, very important. Intentionally, I have given the very simplified material that is most relevant. Take care. That is called as residential status and scope of income. Okay, na? Chalo. Next topic is residential status as well as scope of income, followed by another topic, non-resident and NRI. NRI, what is that? Non-resident Indian. In case of NRI, special provisions are applicable. NRI. I repeat, NRI means that fellow is a non-resident, the two individual, the two, come on, Indian citizen or Indian origin. Indian origin mean himself or parents or grandparents must born in undivided India. If all the conditions satisfied, then you are called as NRI. NRI means non-resident individual. Correct? Huh? Yes. Provisions of 115C to 115I are applicable. The fellow must have investment income. Correct? Yes. The investment income means the income must be earned on specified foreign exchange asset. He has to purchase some Indian assets only, that too in convertible foreign exchange. What is the rate? What is the rate? 20%. Interest and dividend is taxable at the rate of 20. Long-term capital gain is taxable 12.5%. Okay. NRI. What is the NRI? Non-resident individual. All of you see the word. What is the Indian origin? Individual. His parents or grandparents must born in undivided India. Now in New Zealand cricket team, you can find Rachin Ravindra. That fellow is a individual. That too, his parents and grandparents from India. Therefore, that fellow is called as a Indian origin. Today, actually, is not Indian citizen. He is a citizen of New Zealand, but still is a Indian origin. Next one, Kamala Harris. That fellow is a individual, but foreigner. She is American vice president, right? Not vice president. She is about to contest for the election, next election. Now, moral of the story, that fellow was Indian origin because her mother from India. Therefore, they are called as Indian origins. Next one, non-resident Indian means non-resident plus individual plus Indian citizen or Indian origin. They must purchase these assets, shares of Indian company or debentures issued by Indian company, which is not a private, means public company. Next one, deposit with the Indian public company. Next one, GSEC, government securities, or any notified assets by central government. Now tell me, which are public, which are private? Shares of private company also allowed. Shares of public and private, but remaining things are only public. Tell me, debentures of private company covered or not covered? Debentures of public company, deposit with public company, and GSEC, government securities. And last number, shares of which country? Indian public as well as Indian private. What is the rate? Interest income as well as dividend income. What is the rate? 20%. But long-term capital gain on foreign exchange asset, what is the answer? 12.5. Next number, you can claim exemption also. You have to purchase another asset within how many months? 6 months. If you purchase it, is pakka exempt. And expenditure is allowed or not allowed? Not allowed. Indexation benefit available or not? Not available. Chapter 6A deductions are available or not available? Not available. Return is required or not required? Not required. No need to file the return. And next number, this is mandatory or optional? Optional. Okay. Bell is applicable or not applicable? Not applicable. Already we completed this topic in detail. That is called as NRI. 115C to 115I. So slowly just follow. Mandatory or optional? Optional. Individual, Indian citizen, Indian origin, they must have foreign exchange asset. In that case, if they have interest or dividend, 20%, otherwise 12.5. In case of long-term capital gain, exemption also allowed, provided within 6 months you have to purchase the asset, then only you are eligible for deduction exemption at the rate of amount into long-term amount invested divided by net consideration. Okay, next one. No expenses are allowed, no benefit of indexation, no return is required. Once you became resident also you can continue this provision. Correct? Yes. That is the topic called as NRI. Most important topic. Take care. The last sentence of this class right now, that is called as 115 BBA. B for Brian Lara, B for Britney Spears, A for Australian cricket. I told you this word. B for Brian Lara. That means non-resident foreign sports person. Correct? Yes. Next one, Britney Spears or Justin Bieber. What is that? Non-resident foreign entertainer. Last one, A for cricket board, Australian cricket board, memory code. Okay. Non-resident foreign sports body. Yes or no? If they have any kind of income that is taxable as per the provisions of 115 BBA at the rate of 20%. And for your information, ROI is required or not required? No ROI is required. Expenses are allowed or not allowed? Not allowed. First one, come to non-resident foreign sports person. Non-resident foreign sports person. Which sport is covered? Anything. Any sport is covered. But is a Indian or foreigner? Foreigner. What is the rate? 20%. What is the TDS section? 194E. E for entertainers. So many players are coming to India and making the money by playing IPLs. Immediately our Indian companies will deduct TDS at the rate of 20%. Is it applicable for Indians? No. Is it applicable for Indian player being a non-resident? No. No. Virat Kohli, for your info, he already settled in London. Already settled. Okay. Surely he will become foreign citizen. British citizen he will be. Now tell me, what would be the answer? Is a non-resident? The two. Foreigner. Correct? Yes. But is a Indian origin. Is it applicable or not? No. It is only applicable for Pakka purely foreign citizen. The two non-resident having these income. What are the sports person income? Number one, playing the sports, endorsing the products advertisement, contributing articles to media. Correct? Yes. Then tax rate is 20%. Next one, entertainers. What is that? Sports events or games or any kind of events, dance program, singing competition, anything. That is also 20%. Last one, non-resident foreign sports body. If they played the match, for example, Indian World Cup, Women World Cup, at that time India versus South Africa. South Africa is a runner-up. They also got the compensation, means some prize money, right? That is also taxable at the rate of 20% under section 115 BBA, but TDS is applicable under section 194E. That's all. But RY is required or not required? Not required. And another last sentence here, 115 BB, bad boys. Casual income. In case of non-resident also, if they have casual income, as I told you earlier, so many foreigners coming to India, especially Goa, they are participating in casino, horse races like this, taxable at the rate of 20 or 30% under section 115 BB. But gross amount only taxable. TDS provisions are applicable under section 194B or 194 BB as the case may be. Correct? Yes. Online games are also covered or not? Yes. But recently government of India, they banned online games. Yes or no? Yes. Now, once upon a time, few months back, our Indian cricket sponsored by Dream 11, kada? But nowadays, Dream 11 is not there because that was a startup actually. They got super duper success. After that, what happened? Our Indian government decided to decided to ban online games which are injurious to health. Okay, that is the reason what happened. So many startups, they close it down. Otherwise, once upon a time, Rummy, these kind of companies were there, but nowadays it is not there. 115 BB, that is nothing but casual income, whether resident or non-resident. If they have these kind of casual income, horse races, any kind of lotteries, winnings, taxable at what rate? 30%. Okay, chalo. With this, we have done with the topic 115C to 115I, and in non-resident we covered only simple two topics, that is 115BB as well as 115BBA. Okay, chalo. After that, we have completed the topic, that is NRI. What is NRI? Non-resident individual. Today we are going to continue next topic, that is called as non-resident. Most important topic, please follow. Exam point of view, most relevant. Section number 115A, that is very important topic. Nana, that is nothing but special tax provisions applicable for non-resident as well as foreign company with respect to following incomes. The first income is called as royalty, second one is called as fees for technical services, last one is called as interest, and one more thing is called as dividend. These are the incomes are covered. Come again. Special tax for non-resident as well as foreign company. Important topic. Without 115A, you won't get any kind of non-resident question paper. Very important. Special tax provisions applicable for non-resident as well as foreign company with respect to interest as well as with respect to royalty as well as fees for technical services. Okay, now let's continue the topic. Very important topic, section 115A. That is nothing but special tax provisions applicable for special tax rates applicable for non-resident as well as foreign company with respect to following income. First one is called as interest, second one is royalty, next one is fees for technical service, last one is dividend. I repeat, dividend. These are the incomes covered. I am going to cover these points in detail. Listen. First one, the persons are two in number. First one is called as non-resident and another fellow is called as foreign company. Nana, most important, 100% you will get one bit or one question out of this topic called as 115A. What is that? Please follow. First one is called as interest, next one is called as royalty as well as FTS, fees for technical service. What is the rate? Tell me. Answer. Once upon a time it was 10%, but nowadays it is 20%. For your information, here no expenses will be allowed. I repeat, no expenses, and no return is also required. Income tax return also not required, and deductions generally not allowed, but deductions will be allowed year itself. I repeat, deductions not allowed for non-resident in general, but here in case of royalty and fees for technical services, it is allowed. Deductions will be allowed. This is the special point. Chapter 6A, 80C to 80U deductions will be allowed. Please come to the next topic, interest. As far as interest is concerned, first one is called as infrastructure debt fund. I repeat, infrastructure debt fund. They paid the interest to non-resident and foreign company. It is taxable at the rate of 5% and TDS applicable under section 194 LB. I told you the memory code, local bonds. Okay, what is local bonds? You know, interest paid by infrastructure debt funds to the non-resident or foreign company is taxable at the rate of 5% and TDS is also applicable at under section 194 LB. Next number. I repeat, another topic. In case of foreign company, they have given the loan to Indian companies. In return, Indian company is paying the interest to foreign company against the loan taken in foreign currency, convertible foreign exchange. In that case, that interest is taxable at the rate of 5%. TDS applicable under section 194 LC. How to memorize? LC, local company. I repeat, interest paid by whom? Indian company. Interest paid by local company means Indian company to foreign company against the loan taken in which currency? Foreign currency is taxable at what rate? 5%. TDS under section 194 LC. Next number. Rupee denominated bond. Rupee denominated bonds, on that interest paid to FII, foreign institutional investor, is taxable at the rate of 5%. TDS under section 194 LD. Memory code, local denomination. What is the local denomination? Rupee denominated bonds. In all the cases, TDS is applicable under section 194 LB, LC, LD respectively, but rate is same. What is that? 5%. Whereas interest from Indian government, I repeat, interest from Indian government, then the tax rate is at the rate of 10%. I repeat, at the rate of 10%. And dividend from, I repeat, dividend from Indian company, that is also taxable at the rate of, what is the rate? 20%. Nana, this is the topic with respect to 115A is concerned, but take it for granted, no expenses will be allowed, no return of income is required, and no chapter 6A deductions. No deductions will be allowed under section 80C to 80U. I am going to explain in detail. Please follow. 115A topic is most relevant, most important topic. Here, two members are there. One is non-resident. Example, Elon Musk. and foreign company. Example, Microsoft. So maybe foreign company or individual or anybody, but being a foreigners or non-resident. They may have interest income, or they may have royalty or fees for technical services or dividend. What is the tax rate? One by one we are going to cover. Follow. Interest received from Indian government. What is the answer? Example, Indian government, Elon Musk has given the loan to Indian government for the purpose of Gujarat Metro something. For that purpose, he is getting the interest. That interest is taxed at what rate? 20%. Because you are getting safe and risk-free interest. Kada? Yes. Government of India want to collect highest tax. What is the rate? 20%. Oh, foreigners, if you receive any interest from Indian government, what is the rate? 20%. I repeat, non-resident or foreign company received any interest income from Indian government, that is taxable at the rate of 20% under section 115A. Next topic, dividend received from Indian companies, then tax rate at the rate of 10%. Example, I will tell you, so many foreigners nowadays, they are investing in Indian companies. Example, now one fellow, he invested in Paytm. Because of that, he got the dividend. If any foreigner got dividend income from Indian company, taxed at the rate of 10%. That's all. Last other topics. Infrastructure debt fund paying interest to non-resident and foreign company. What is the rate? 5%. Foreign company getting the interest from Indian companies from the loan taken in foreign currency. What is the rate? 5%. And FIIs getting the interest from rupee denominated bond. What is the rate? 5%. 194 LD is the TDS section. Okay. Here no expenses will be allowed. No return of income is required. Deduction under section 80C to 80U will be allowed or not allowed? Not allowed. Only allowed with respect to royalty and fees for technical service. What is the rate? 20%. Enough, Nana. With this, done with the topic. Please follow. Now, we are discussing the topic called as 115A. See the board. Interest, royalty, FTS, fees for technical service received by non-resident or foreign company. Answer number 1. Infrastructure debt fund. I repeat, infrastructure debt fund, rate 5%. Next one, loan taken in foreign currency by Indian company and paying the interest. What is the rate? 5%. And next number, interest payable to FII, foreign institutional investors, in rupee denominated bond. What is the rate? 5%. TDS sections are as follows: 194, 194, 194. L. But here B, here C, here D. Memory codes I told you: local bonds, local companies, local denomination. Next number, this is another topic, business trust, to be covered within few minutes. Next number, all of you, interest from Indian government. That is answer. What is the rate? 20%. Because that is a risk-free interest they are getting. Therefore, government of India wanted to collect highest tax. What is the rate? 20%. Next number, anybody? If any dividend received from non-resident or foreign company from Indian companies, that is taxed at what rate? 20%, not 10%, that is 20%. Enough, Nana. This is the topic with respect to section number 115A is concerned. Next number, another topic we already done with this one, 115BBA, Brian Lara, Britney Spears, Australian cricket. So see the word non-resident as well as foreign citizen received any kind of sports income from participation in sports or games or advertisement or contribution of articles to newspapers. In this case, what is the rate? 20%. And Britney Spears or Justin Bieber, what is that? They conducted any kind of events, and in the event if you participate, in that case any performance you have given, dance or singing or anything, then 20%. Next number, guarantee fees received, amount of guarantee fees received. In this case also, what is the rate? 20%. That's all. Okay, chalo. Next number, just now we covered 115A. This is important. Summary is given here. Summary given here. Tell me, interest income from Indian government, what is the rate? 20%. Infrastructure debt fund, any FII rupee denominated bond, 5%. Local company, Indian company paid interest, what is the rate? 5%. Next number, another topic, 115E, AB, AC, AD. Not important, but it will take less time. Please follow. Overseas financial organization, if they got any kind of interest, Answer, simple answer is 10%. Okay, I repeat 10%. Next number, long-term capital gain, what is the rate? 12.5%. Whereas in case of 115 AC, that is nothing but income received from GDR, Global Depository Receipt. Same answer, what is the rate? 10%. Whereas in case of long-term capital gain, what is the answer? 12.5. Last number 115 AD, that is nothing but FII, foreign institutional investor. Same answer, any kind of income 10%. Whereas long-term capital gain, what is the answer? 12.5%. So I wanted to clarify this one. This is the section applicable for non-resident. 115A, 115AB, 115AC, 115AD, 115BB, next one 115BBA. These are the sections. Whereas in case of NRIs, sections 115C to 115I are applicable. Okay, students should get that out. What is the difference between NR and NRI? Here NR means non-resident, NRI means non-resident, the two individual only, the two Indian citizen or Indian origin. For them special provisions are there. The special provisions are as follows. What is the tax rate? 20%. Long-term capital gain and all 12.5. That's all. Expenses not allowed. No expenses will be allowed. No deductions will be allowed. No return of income is required. Okay. No indexation also applicable. Nothing is there. That's all. This is called as NRIs. Whereas in case of NR or foreign company, the provisions are as follows. 115A. What is that? Tax rate applicable for interest, royalty, fees for technical service. What is 115AB? Overseas financial organization. They may get the interest. What is the rate? 10%. Next number, AC, GDR, Global Deposit Receipt. What is the rate? 10%. 115AD, FII, Foreign Institutional Investor. What is the rate? 10%. But in case of short term, different rates are there. In case of long term, you know the universal answer. What is that? 12.5. 115BB, casual income. Bad boys. What is that? 30%. 115BBA, Brian Lara, Justin Bieber or Britney Spears or Australian Cricket Board. Now, if they get any kind of foreign income, that means they got the income from India by playing matches or giving commentator or giving performances. What is the rate? 20%. The TDS sections are as follows. Here TDS section 194, LB, LC, LD, 195. If you don't know, the final answer is 195. Here 196, 196, 196, B, C and D. These are the different TDS provisions applicable for this. Okay. Yes. Here the TDS section 194B or 194BB. For bad boys, this is the section, correct? Yes. In case of 115BBA, what is that? 194E. E for entertainment, entertainers, correct? Yes. This is the chapter with respect to taxation of non-residents. Okay. Chalo. See the board. Here, in case of non-resident, presumptive taxations are also there. Presumptive tax provisions 44B, 44BBA, 44BB, 44BBB and 44BBC. Important. Maybe one amendment is there. That is the reason it may be important topic. This is called as presumptive tax provisions are applicable. I repeat. First one 44B. B for boat. I repeat. B for boat. What is this? Non-resident carrying which business? Shipping business. Non-resident carrying shipping business. Next number 44 BBA. Nana, A for airlines. Airlines. Okay. Non-resident carrying. Come on. Which business? Aircraft business. Okay. Is transporting passengers from one port to another port. Airport. Okay. Fine. Next number 44 BB. BB means okay, fine. So oil, extraction of oil. Whereas 44 B, I told you, brick by brick. What is that? Construction. Latest amendment, you are the first batch who are going to cover section 44 BBC. What is that? Cruise ship. SSC non-resident engaged in the business of operation of cruise ship. Okay, na? Yes. Nana, important. Ready? Start. 44B. B for first. Remember, 44 series is covered under the category called as presumptive. Presumptive. B for boat. Okay. BBA. A for airlines. Intentionally passenger related. That is the reason we have written side by side. After that, BB. Oil. Whereas BBB. Construction. BBC. Cruise ship. Okay. Fine. What are the tax rate? 44B, that is nothing but 7.5%. 44 BBA, 5%. I wanted to add something here. Number one, in case of airlines, the profit margins are very, very less. I hope you know. In case of airlines, profit margins are less. That is the reason, Mr. So many airlines companies are in losses. So many airlines companies. Okay, chalo. Kingfisher chairman Vijay Mallya is also absconded only because of one of the main reason is he unable to pay SBI dues because of his airlines business. He got the losses. Okay. Moral of the story, in airlines margins are very less, so 5% is the presumptive income. That means if you got 100 rupees, lawmaker intention is very simple, that 5 rupees is only the income. Whereas in case of 44B shipping business, what is the answer? 7.5%. Next one, 44BB oil business. SSC engaged in extraction of oil. What is the answer? 10%. 10% is the presumptive income. 44BBB. What is the answer? 10% is the presumptive income. Last number, cruise ship. I repeat, what is that? Now they will take the passengers from one place to another place with a luxury ambience. Okay, that is the reason here they introduce separate provisions 44BBC. Now tell me difference between 44B and BBC. B is only for transportation of passengers or commodities or goods in a normal ship. Whereas 44 BBC, what is that? Cruise ship. Now here rate is highest rate. What is the rate? 20%. It is not a tax rate, Nana. It is a presumptive income. If they get 100 rupees, out of that 100, 20 rupees is the income, correct? Yes. On the tax rates are separate. Okay, now? Yes. Next number. They can declare lower profit or not? No. Here also? No. They can't declare. Here these waste fellows can declare or not? Yes. 44 BB and BBB people can declare or not? Yes. And these fellow 44 BBC? No. No need to memorize. Very simple. Shipping people 44B. Airlines people 44 BBA. And cruise ship people 44 BBC. They cannot offer lower income than the presumptive. B fellow has to offer income of rupees boat 7.5. Airlines fellow has to offer 5. Cruise ship fellow must offer 20. Even though they are getting lower income than this income, nothing doing, compulsory they must offer this kind of income. Correct? Yes. Whereas some waste fellows are there, oil business 44BB and another fellow is called as 44BBB. These fellows may offer lower income than the presumptive income, provided they have to maintain the books and provided the books must be audited by practicing chartered accountant. Correct? Nana, with this we have done with the chapter called as taxation of non-rested. Okay, listen. Now, basic concepts we have done with this. In this chapter, first tax rates most relevant, take care. Next one, ICDS. Here the most important topic, nullified Supreme Court judgments are important. Example, retention money is not taxable as for Supreme Court judgment, not taxable because Supreme Court opinion like this. Retention money you may get it or you may not get it, therefore not taxable. But they went to court of law, they won the case, means not taxable. Immediately Narendra Modi introduced ICDS number 3. As for ICDS number 3, construction contract, retention money is pakka taxable. See the word, there is a conflict between Supreme Court judgment versus ICDS. Which will prevail? ICDS will prevail. Correct? Yes. Next number, another case law is there. Whenever you are a going concern, cost or NRV, whichever is less must be considered for valuation of inventory. When you are going to die, when you are going to dissolve, NRV. Correct? Yes. But here one case law is there. other persons are going to die, other partners are going to die, in the sense dissolve, but this one of the one and only fellow wanted to continue the business, then what is the answer? Supreme Court judgment, cost or NRV, whichever is lower. But Modi, he introduced ICDS number 2 by stating the word it is NRV. There is a conflict which is applicable. ICDS will prevail. Kada? These points are important. Number 2, another important topic, AS versus ICDS. There are some kind of differences, right? The differences are most relevant. Okay. When compared to AS, what are the differences that is relevant? And next one, core points are there. The core points are also relevant. Example, provision for expenses, provision for telephone expenses, provision for power. Allowed or not allowed? Student will get the doubt. Answer, allowed when there is a reasonable certainty about cash outflows. Understood? This is the knowledge you have to apply while doing the problems. Okay, ICDS. Next number, PGBP. Needless to discuss, already you completed this chapter at your childhood. Okay, 400 years back when you are in IPCC or CMA Inter, you have completed this chapter, right? Depreciation topic is important. Section 32. One common question. He will give one Companies Act depreciation. He will give in exam problem. Under that notes to accounts he will give. In the notes to accounts he will write, as per Income Tax Act, depreciation is so and so. He will give. What you have to do? Companies Act depreciation must be disallowed. Means add back. You have to provide the correct depreciation. Correct? Huh? These kind of adjustments are very common. Take care. Next number. Sometimes he will give 1 or 2 assets purchased this year. One asset purchased in the month of April. Second one is purchased in the month of February. Okay. What is the difference? In the month of April, full depreciation. In case of Feb, half of the depreciation. Correct? Huh? These things you have to take care. Next, another question. You fax machine, whether it is a computer or not. If you say computer, 40% depreciation. If you say it's not a computer, normal depreciation. What is the answer? Fax machine is a computer or not? Answer, fax machine is nowhere related to computer. Fax machine is related to telephone for getting the messages. Correct? Huh? Yes. Now my point is that is not a computer, therefore 40% higher depreciation not available. Correct? Huh? Yes. Chalo. This is the important topic. And 35 AD also important. 35 AD specified business. 36 important. 37 important. 36 other deductions. Number 1, bonus and commission allowed or not allowed? Allowed, subject to payment basis. Employer contribution to employee welfare fund allowed or not? Yes. On what basis? Payment basis. Which payment? On or before due date specified under section 139(1). Whereas employee contribution to employee welfare fund will be allowed as deduction on what basis? Payment basis. But we have to pay within the due date specified in the respective act. MSMB, within how many days we need to pay? Within how many days? 15 days. If any particular agreement is there, as per the agreement, 45 days maximum you have to pay. Otherwise, amount will be allowed or disallowed? Disallowed. After that, we have completed the topic DTAA. Out of this, 100% you will get one question, 91 section. What is that? By or unilateral? Step number 1, calculate total income as per Indian Income Tax Act. Calculate total tax as per Indian Income Tax Act. Okay. Calculate average Indian tax rate. Calculate average final tax rate. Foreign tax rate. Last number, unilateral relief is equal foreign income which is subject to double taxation into lower of average Indian tax rate or average foreign tax rate. And that too, that foreign income must be taken after allowing deductions and exemptions are set off and carry forward of losses. Correct? Take care. After that, equalization levy completed. MCQ is important. Who is the payer? Resident as well as non-resident having PE. Payment made to non-resident who does not have PE. Payment exceeds 1 lakh. That too, that is for business purpose. Kada? Yes, for professional purpose. In that case, TDS is rate applicable at the rate of 6%. And you have to remit within the time 7 days after next month. Kada? Next number, if you have not paid, now disallowances will be there. 100% or 30%? 100. If it is paid in the hands of payee, it is exempt under section 10 subsection 50. Next one, residential status. Their most important topic is poem. What are the things you have to check for foreign company? Face, passive income, assets, salaries, employees. If pay is satisfied, ABY test passed. If ABY active business outside India, if it is passed, immediately you have to go for board meetings. If majority board meetings held in India, resident, otherwise non-resident. Next number. Now, scope of income, very important topic. If it is received in India or accrued in India, one thing is in India, Indian income. Whenever it is Indian income, no need to discuss. You can sing a song, taxable, taxable, taxable. If anything outside India, one is in India, taxable, taxable, taxable because it is in Indian income. Both are in India, same answer. Kada? Yes. If both are outside India, foreign income. If both are outside India, but control and management is from India, then it is taxable in the hands of RBOR, not taxable or taxable. Taxable in the hands of RBNOR, in the hands of non-resident, not taxable. But after that, past year untaxed income remitted to India. What do you say? Not taxable. Chalo. After that, we complete another topic, NRI. What is that? Non-resident Indian. Answer. What is the tax rate? 20%. Long-term capital gain? 12.5. And non-resident. Compulsory you will get these two questions. 115A, 115 BBA. Now, if examiner may not ask BBA sometimes because of mass constraint, compulsory will ask 115A. Now, dividend from Indian company, 20%. Next number, interest from Indian government, 20%. Next number, in case of interest from infrastructure debt fund or Indian company paying interest in the foreign loans taken or else rupee denominated bonds, what is the rate? 5%. Take care. 115 BBA also important. Okay. That is foreign citizen being a sports person or foreign citizen being a sports entertainer. Foreign person, the two, sports body. Not only cricket, any kind of game is covered. What is the rate? 20%. After that, we have done with the topic called as TP. 99% examiner will ask the method called as kappa. My suggestion, first draw the line diagram, after that see the problem and draw the line diagram and do the point. Okay, put the heading and do stepwise, automatically will get very good score. As I told you, no, nowadays software industry, especially employees in software industry, they are severely affected because of AI. Kada? Yes, but BCom, MCom, MBA people, especially CA, CMA, CS people are not affected because of AI. Okay, still we have some kind of work. The moral of the story, we are doing some kind of work related to TP, computation, etc. Therefore, this is important for your exam, important for your career. Okay, so take care. Seriously important. How it is important, you know, once you qualified, you will do some post qualification things, you know. I know so many of my friends who qualified, they are doing these kind of specializations. Number one, insolvency, bankruptcy, that they are doing. But you have one chapter, right? But once they qualified, they will do certification course by paying 50,000 fees, by attending Sunday, Monday, Saturday classes. They will do. This is one thing. Some people are doing actuarial valuation. Some people are doing what you call some kind of audit for forensic audit, or some people are there doing like this. Choice is yours. So, and some people are doing TP, transfer pricing. So, which is your right cup of tea is depend upon your taste. But because of that, you can continue these. First, you have to get this certificate. After that, only you can pursue other courses. Anyhow, let it be. Now, we are going to the next level. It is that. Yeah. Now, Black Money Act. Important chapter, Black Money Act. Weightage of this topic 2 to 3 marks. Sometimes examiner may not ask direct question, they will ask MCQ question. But surely you will get one question out of this This is called as Black Money Act. Okay, fine. Very simple topic, very simple chapter. Please follow. Ready? Start. Narendra Modi's government came into power in the year 2014. Immediately in the next year 2015, they introduced one act that is called as Black Money Act. What is this? So many people having income from foreign territory, which was not offered to tax. Or some people, they deposited their funds in foreign country and they purchased some assets there and they are not paying tax. Example I will tell you. So many Telugu heroes nowadays, they are buying properties in Dubai. Okay. So many people nowadays wanted to settle in Dubai because reason number one, they can, pardon? They can go to, not tax purpose, okay, they can go to any country just like that, because if you want to go to America, first you have to go to Dubai, you know this? Yes, if you want to go to any foreign country, first you have to go to Arab nations, then you have to get there and you must have one cup of tea there. After that only you can go to other country. The reason, that is a travel destination like that. Moral of the story, many people are going there and they are dumping the funds because of local laws and because of tax benefits and because of other opportunities. That is a global market. Many country people are coming. Anyhow, let it be. Moral of the story, if you have foreign assets, you must disclose and you must offer to tax. If you have not offered, then that asset called as white or black? Black money, black assets. In this case, these provisions are applicable. Pakka you have to pay the tax. At what rate? 30%. Every SC is liable to pay tax at the rate of 30% on disclosed or undisclosed? Undisclosed foreign income as well as undisclosed foreign assets. Now, these undisclosed assets located in India or outside India? Outside India are only covered. I will take one example, 99% real, okay? Mr. Virat Kohli, he decided to settle in London. For that purpose, he bought one property in London itself. Well and good, you can buy it, but you must offer to tax, correct? Huh? Yes, but you don't know the subject. You know cover drive, but you don't know the how to cover the provisions of Income Tax Act. You don't know. He has not offered to tax. Automatically, that asset, London asset is dash white or black? Black. Suppose in assing officer computation, he came to know about that asset. Automatically, assing officer will collect the tax at the rate of 30. That is the provisions of Black Money Act. Okay, fine. See the word. How to do valuation? Number one, what kind of asset? Bullion, jewelry, etc. In this case, cost or NRV, whichever is higher. Student doubt, whichever is lower, no. That is conservative approach, whichever is lower. This is black money, whichever is higher. Now, you only purchased for 10 crores, but today market value is 30 crore, whichever is higher. Next number, quoted share. Quoted means, you know, what is that? Listed. Now, if you see the listed share, every second it will jump and up and like that. Kada? Yes. Moral of the story, at what rate you bought it? Okay, cost of acquisition. Don't say NRV, because NRV can't be determined just like that. Keep on fluctuating, kada? Yes. So, you have to take lowest as well as highest. On which day? Valuation date. Okay. That average you have to take it. Average. Okay. Lowest and highest. I never told you opening and closing. Opening means morning 9:15 stock market will be opened and evening 3:30 it will get closed. I am not talking about opening and closing. I am talking about highest and lowest. One particular share, Tesla share, is keep on moving like this. Correct? Ah? See, this is the higher point. This is the least point. Kada? This and this average we have to take it. Correct? Ah? This average or cost of acquisition, whichever is higher. Okay, fine. Next number, unquoted share. Oh shit, it's not a listed one, it is a unlisted. At what rate you bought it, that is called as cost of acquisition, or another figure whichever is higher must be considered. The higher figure is nothing but A plus B minus L divided by PE into PV value. What is that, you know? Valuation of shares. Do you have that chapter? Valuation of shares. Listen, If you are a listed company, your shares are available in the stock exchange, so everybody can decide your market price. When you are an unlisted company, we need to go with your net worth, correct? Yes. Net worth divided by total number of shares, you have to take it. A plus B, all assets you have to take it, and you have to take the liabilities. After that, you will get the number of shares. Automatically, you know what is the unquoted share value, you can know it. Out of these two, whichever is higher or lower, higher. Last number, immovable property. In case of immovable property, same answer. What is the answer? Cost of acquisition or NRV, whichever is higher. Next number, most important question, bank account. In case of bank account, opening balances you have to take it. Come again, what balance? Opening balances. Okay, I never told you closing, I told you opening. Year end beginning, what is the value? How to take it? Okay, I opened with 10 lakh, but after accrued interest it is 11 lakh. Sorry, don't take 11 lakh, take only 10 lakh. Sum of all deposit made since the account opening day. Okay, now yes. Next number, partnership firm. In case of partnership firm, pro rata basis you have to check. Example, I have 40% in a firm. Oh, that firm net worth into how much percentage? 40%. Any other asset which you don't know separately, then same answer. What is that? Cost or NRV, whichever is higher. Correct? Yes. Student notes, sir, what is the valuation date? Valuation date. What is that? 1st April of assessment era, previous year. First day first. Okay, na? Yes. Previous year, assessment year. Previous year starting, ending, assessment year starting and ending. Answer. The valuation date is nothing but first date first. What is that? Previous year first day. 1st April of previous year. Next number, how to convert from one currency to another currency. Example, Virat Kohli, he bought the property in abroad in pounds. Okay, but we need to do computation in INR. How to calculate? Number one, if RBI rate available or not, check up. If RBI rate available, see the word RBI rate available, then we have to convert by using which rate? RBI rate prevailing on which date? Valuation date. Use RBI reference rate to convert from one currency to Indian currency. Correct? But sometimes RBI rate not available. Already I told you RBI rate may not be available. Example, some foreign company currencies are not recognized by Indian government. In that case, what is you have to do? You have to convert from foreign currency to USD. After that USD to INR. Possible? Yes. Like that you have to do. Next number, which assets to be considered, which assets not to be considered? Black money or white money? Black. If you purchase any asset out of black money, that only can be considered. If you purchase any asset out of white money, shall I consider? No. Black and white, which part should be considered, which part should not be considered? Black portion. Correct? Yes. See the word. Foreign income not disclosed. Oh shit, not disclosed. Shall I include? Yes. Foreign income return required but not filed. Shall I include? Yes. Undisclosed foreign assets located outside India. Shall I disclose or not? Yes. Next number, scope of income. Now number one, expenditures are allowed or not allowed? Not allowed. No expenditure allowed with respect to black money. With respect to undisclosed foreign asset, expenses are allowed or not allowed? Not allowed. Next number, asset purchased out of income already offered to tax in India, already white money. Shall I include or not include? Not include. Last number, immovable property acquired, partly white money, partly black money. Then you have to consider only black or white? Black. White portion shall be excluded. Correct? Yes. This is the chapter called as Black Money Act. One by one, follow. What is the valuation date? 1st April. Generally, students tempt to say 31st March. They are in the opinion that last day value is higher, so that day I want to take. Wrong. You have to take 1st April of which year? Previous year. Second question. Which value you have to take? Cost or NRV, whichever is higher. Student may get the doubt. Sir, whichever is lower, no. That is conservative, but this is aggressive. Okay, next. What is the tax rate? No slab rates. Directly 30%. And one more thing. if you already disclosed under Income Tax Act, should not be considered under Black Money Act. Okay, if it is not covered there, then only covered here. Next one, which foreign exchange rate we have to consider? Which rate? RBI rate, if you know, take that rate. If RBI rate is not known, that convert foreign currency to USD, USD to INR. Which rate? Which rate? RBI rate. But which date? Valuation date. Correct? Huh? Yes. With this, we have done with the topic called as Black Money Act. Okay, na. Chalo. Any doubts? Next, CMA Final Examiner's favorite topic, one of the topic, but relevant for MCQs, more relevant for MCQs, that is called as tax planning, tax management, tax evasion. Okay, fine. Very simple topic, important for MCQs point of view, most important for MCQs, least important for regular question. All of you, there are 4 words. First one is called as management, tax management. Second one is called as tax planning. Next one is called as tax avoidance. Last one is called as tax evasion. Okay, fine. Tax evasion. So these are the 4 words. What is the first one? Tax management. It is nothing but follow the due dates, follow the provisions, follow the things in time. Okay, follow the provisions, follow the due dates, and follow the formalities in time. In time. This is nothing but duty. I repeat, it is nothing but duty. For that, intelligence application is not required. This is routine job. Correct? Huh? Yes. The main reason for this is to avoid, not tax, to avoid penalty. That's all. This is the topic called as tax management. Filing the things in time, filing the documents within the due date specified in the respective act, following the provisions and due dates is called as tax management. See the heading, management, managing the things. Next number, another topic, tax planning. What is the tax planning? You know, smart way of application, intelligent way of application, claiming the deduction, claiming the benefits, that is called as smart. Okay, answer, it is also main purpose is come on to avoid the tax, to reduce the tax. Officially we can reduce the tax, but it is generally long term or short term? Long term. Example, if I want to start any industry, I will never ever start in Guntur district. I will go to what you call Nellore district or Chittor district. There 3 cities there. Okay, there we can start. The reason, if you start there, automatically 10AA deduction will be allowed or not? Yes, that is called as tax planning. That is long term approach. Our intention is long term. Next number, tax avoidance. This is nothing but misuse the provisions of the act. I repeat, misuse the provisions. That is nothing but loopholes, taking the advantage of loopholes. Now to reduce the tax we will do, but it is short or longer? Short, because after short time automatically government will take the correction measurement. Kada? Yes. Last number, tax evasion. It is nothing but invalid, it is nothing but illegal, it is nothing but punishable. Correct? Yes. Now, whereas tax avoidance is not punishable. Tax avoidance is not at all punishable. I will ask something, tell me whether it is tax planning, tax avoidance and all. You taking the deduction under 80 IA, IB, IC. Tax plan. Now you taking the tuition fees receipts of your child and taking the deduction under 80C. Tax planning. Next one, submit the document in time. Tax management. Kada? Yes. And giving the false particulars, false details. Tax evasion. Yes or no? Yes. You misuse the provisions of the act. Avoid. Concealment of income. Dachatam. Tax evasion. Correct? Yes. Taking the advantage of loopholes. Tax avoidance. Correct? Which is punishable. Evasion, which is a smart way of application. Plan, which is a futuristic approach. Planning, correct? Which is cunning in nature. Evasion or evasion as well as avoidance. What is the major difference between avoidance and evasion? Punishable one is evasion, non-punishable one is avoidance. Correct? Yes. Now, important only for MCQs, take care. Okay. Chalo. There's the different aspects of tax planning, tax management, tax evasion. Which is the duty? Management. Which is the punishable one? Very good. Now, very important theory question. Examiner favorite theory topic, that is called as bar. What is a bar? Board for advanced ruling. I repeat, board for advanced ruling. Important topics are, why it is important? Once upon a time that is called as authority for advanced ruling. But nowadays, Government of India introduced the word bar, board for advanced ruling. Important, yes. Theoretically most important, take care. Ready? Start. Answer. Non-resident wanted to undertake certain activities in India. Undertake. If non-resident want to undertake any transactions in India, he wanted to know about tax provisions or law provisions. For this purpose, he may approach one specialized authority that is called as Board for Advanced Ruling. Board for Advanced Ruling constituted by central government region-wise. Example, in New Delhi they started, as well as they started in Chennai also. It consisting of 2 members. Who are the members? 2 members will be there. Okay, anyhow, non-resident which has the transaction undertaken or proposed to be undertaken, he may approach bar. Same way, resident also can approach bar with respect to any transaction undertaken or proposed to be undertaken. And the recent amendment, resident can approach for his own transaction also, provided the value of transaction must exceed 100 crores. And another topic, last topic, now PSU, public sector undertaking also can approach or not? Yes. And the last number, non-resident or resident, they may also approach bar to know whether their topics are covered under GER, whether their transactions are anti-avoidance or not. For that purpose also they may approach. These are the 4 cases. Come on, one by one. Number 1, non-resident undertaken or proposed to be undertaken in India. For the transaction they may approach the bar, or resident with own transaction they can approach, or they can approach any transaction carried on behalf of whom? Non-resident. Next one, PSU, public sector undertaking can approach or not? Yes. GER matters purpose they can approach or not? Yes. It's not free, it is fee. How much is the fee? 10,000, or fees notified, whichever is higher. Next number, once you made an application, the application can be withdrawn within maximum time period of 30 days. After 30 days, can I withdraw or not? No. No. Okay. Chalo. I would like to take one example, then you will get clarity. Nokia, they wanted to start their unit in Perambadur, Tamil Nadu state. They wanted to confirm that whether 80IA is applicable or not. For that purpose, they cannot ask cost accountant, or they cannot ask chart accountant, they cannot ask Modi. For that purpose, Government of India introduced one special authority that is called as Board for Advanced Ruling. All of you, these organization called bar, they only can admit the application and they only pass the ruling. Okay, see the word. Introduction. Advanced ruling is nothing but decision given by board on future transaction or past transactions. Okay, number 1. Number 2, it consisting of 2 tax officials, 2 commissioners of income tax. As I told you earlier, the higher authority is CBDT, next authority is nothing but CC. 2 members will be there. Okay, now? Yes. Who can approach? Just now I told you. Who? Non-resident. Any transaction undertaken or proposed to be undertaken, they can approach or not? Yes. Number 2, Resident also can approach or not? Yes. Any transaction undertaken or proposed to be undertaken on behalf of non-resident. Next number. Resident for his own transaction he can approach or not? Yes. Provided transaction value must exceed 100 crores. Next number. Public sector companies PSUs also may approach or not? Yes. Last number. GAR matters, whether this transaction is covered under GAR or not. For that purpose they may approach or not? Yes. For these purposes they can approach. The forms are as follows: 34C, 34D, 34DA, 34E, 34EA. One by one. 34C is applicable for non-resident. 34D, resident on behalf of non-resident. 34DA, resident for his own transaction. 34E, PSU. 34EA, whether we are covered under G. Correct? Yes. For these purposes, you can make an application. Within how many days you can cancel the application? 30 days. After 30 days, can I cancel? No. Next one. What is the procedure? Procedure to be followed. Okay. Very simple. Start. Number one. Applicant. First, he will make an application to bar. Okay. Fine. He will make an application to bar. Step number one. After that, bar will share the application to Commissioner of Income Tax. Then Commissioner of Income Tax will give his clarification. Based on that, bar may take the information. Based on that, they will pass the judgment within the period of how many months? 6 months. I used to say one attempt. Okay, within how many months? 6 months. Enough, ma. This is the procedure. Tell me, who will make an application? Applicant. The applicant may be a dash 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 non-resident, resident on behalf of non-resident, resident for his own transaction, PSU. Correct? Yes. Last but not least, any other person, non-resident or resident in relation to GAR. PR fee, fee. Forms are there or not? Yes. Next number, can I withdraw or not? Yes. Within how many days? 30. Once you made an application to bar, bar will share the application to commissioner. Commissioner give the information. Based on the information, they will get the info. Based on that, they may admit or they may cancel. If they admitted, they will pass the judgment within how many months? 6 months. Chalo. This is the topic. Application can be rejected in the following cases. Number one, to know fair market value of the asset. Then tell me, non-resident, resident, PSU, they made an application to know fair market value. What is the answer? Application will be accept or reject? Reject, reject, reject. Correct? Yes. How dare you, how you can ask about market prices of the goods, or how you can ask market rate of particular land? It's not fair, kada? Application will be rejected. Next one, already pending in the court. Once already pending in the court, application accepted or rejected? Rejected. Now already pending in ITAT, Income Tax Authority, or Income Tax Appellate Tribunal, ITAT, then what is the answer? Application will be reject, reject, but here will be accepted. And to avoid the tax, their prima facie is to avoid the tax. Avoid tax. What is the answer? Application will be reject, reject, and application will be accept. These beautiful options given to only to one fellow, PSU. In 2 cases it is given. Case number 1, already the case is pending in the court. No, pending in the ITAT. There is a difference between court and ITAT. High court is different, ITAT is different. If it is pending in the ITAT or Commissioner of Income Tax, nobody can apply. Application will be reject, reject. But PSU can do or not? Yes. Example, Bharat Sanchar Nigam Limited, BSNL, MTNL, these people can do. Last one, their intention is to avoid the tax. Application will be accepted or reject? Reject, reject. But in case of PSU, it will be accepted. Okay, na? Chalo. Now, climax. See the word, procedure. Upon receipt of application, the bar will send the copy to concerned commissioner. After giving the information by the commissioner, bar may approve or may reject the application after giving oppo. Next one, if the resident applicant made an application to bar, no income tax authority, no ITAT will decide the same factors. Next one, bar shall pronounce the same within how many months? 6 months. Next number, PSU may apply even though it is pending before IT authority and ITAT. We covered no? Yes. In case of difference of opinion, how they will pass the judgment? Majority prevail. Correct? Yes. Last number, most important thing, important for exam. Already 1 or 2 times they asked in the exam. Once bar given its pronouncement, if you like it, follow. If you don't like it, you can go to IT, AT or High Court. High Court within the period of how many months? 60 days. Within the period of 60 days. Moral of the story, the order given by bar is further appealable or not? Yes. With whom? High Court. Within how many days? 60 days. I repeat, 60 days. Worst scenario, another 30 days grace period also will be given. Nana, this is theory chapter only, not practical. Theory topic. Important ante yes, because you have very less number of theory chapters. Therefore, it is somehow relevant. Okay. Tell me, what is the purpose of bar? Bar will give the pronouncement of advanced ruling. What is the topic? Any topic undertaken or proposed to undertaken. Past tense or future tense or both. Next number. In GST also it's there. AAR also there. Kada? But in DT not like that. The AAR was there. It has converted into bar. I told you the reason. AAR consisting of Supreme Court, High Court judge as a chairman. But here not like that. Not possible to appoint these kind of people. That is the reason they introduced the topic called as bar. What is a bar? Board for advanced ruling. Who can apply? Non-resident, resident, PSU. Non-resident on their own matters they can approach. Yes. Resident for their own matters they can approach. Once upon a time no, but nowadays yes, provided the value of the transaction must exceed 100 crores. And resident, can they enter for their own transaction? Yes. PSU they can enter? Yes. Next, what is the time limit? No time limit. Anytime they can enter. Correct? Yes. Next number. Once they wanted to withdraw, they can do or not? Yes. What is the maximum time period? 30 days. After 30 days, can we withdraw the same? No. Next number. Fee or free? Fee. Next, forms are specified or not? Yes. Within how many months they will pass the pronouncement? 6 months. Is it final? No. We can go to High Court within how many days? 60 days. Last but not least, what is the time limit to pass the judgment by AAR? 6 months. Next, it is pending before court, High Court, Supreme Court. Can we go to bar? No. If it is pending before ITAT and IT authorities, can we go to bar? No. One fellow can go. PSU. Okay, now? Yes. Take care. Important theory chapter. Now, listen, we have done with this one. Basic, ICDS, PGBP, DTAA, equalization levy, transfer pricing, non-resident NRI, black money, bar, tax planning, tax management, tax evasion, tax avoidance, residential status and scope of income. Now, another topic that is called as return of income as well as assessment procedures. Out of this entire topic, you may get 15 to 20 marks. All together, I am telling you. All together. Ready? Start. First one. SSC will file the return of income with the department. Step number 1. Then department have the following pass. They will pass the assessment order. The orders are as follows. Number 1, 143.3. What is that? Scrutiny. Number 2, 144. What is that? Best judgment. Number 3, 147. What is that? Escaping assessment. Number next, 158 BA, that is nothing but block assessment. What is a block assessment? Search assessment. Step number 1, SSC will file the return of income. Then department will pass the assessment order under 143.3, that is called as scrutiny assessment or regular assessment. 144, best judgment assessment. 147, jump escaping assessment. 158 BA, what is that? Search assessment. After that, SSC have following option. Option number 1, SSC may go for appeal. SSC may go for revision. SSC may go for rectification of mistake. Or else SSC may go for CBDT, Central Board of Direct Taxes. Out of this topic, filing of return, we may get 2 marks. Out of 143, 144, 147, out of this we may get 3 marks. Out of search assessment we may get 2 marks. Out of appeals 2 marks, revision 2 marks, rectification 2 marks. Now CBDT may be 0 to 2 marks. See, 1, 2, 3, 4, 5, 6, 12 to 15 marks. Okay. So this is the minimum weightage of this topic. This topic is called as assessment procedures, but it consisting of many things: appeals, revision, rectification, and everything is covered. Okay, follow. First topic, topic number 1, filing of ROI. Who can file the return? What are the conditions that we are going to cover? I repeat, filing of ROI, return of income. Start. Who can file? Answer, SSC only. Who? Every company. Not only every company, every firm. Company can go and firm also can go. Firm includes LLP. This is number 1. Number 2, what about you and me? Others. In case of others whose total income before claiming deduction under chapter 6A, 80C to 80U exceeds basic exemption limit, exceeds BEL. Number 3, that is nothing but RBOR, resident but ordinary resident, who have assets located outside India, foreign assets or foreign bank accounts. In this case, they have to file the return of income or not? Yes, these people are required to file. Tell me who are required to file? Every company, every firm, every LLP. This is for sure, irrespective of their income. I repeat, no conditions. If you are a company, file the return. If you are a firm, file the return. If you are a LLP, file the return. Whereas others, you and me, total income before claiming deductions exceeds basic exemption limit, 2.5 lakh, 3 lakh, 5 lakh respectively. Whereas in case of resident but ordinary resident, if they have assets located outside India or bank account located outside India, then they are required to file the return or not? Yes. And another point also I discussed earlier, these people are required to file the return whose foreign income, foreign travel expenditure exceeds 2 lakh, whose electricity power generation, power consumption exceeds 1 lakh. Correct. Next number, whose bank deposits exceeds 50 lakh. Don't see like a 8th wonder. Already you know. Open the chapter. Filing of return of income. Yeah, see the word. Chapter number 9. Filing of return of income and assessment procedure there. First one, voluntary filing of ROI. Every company, every partnership firm and LLP should furnish the return of income. In case of others, individual, HUF, AOP, BY, AJP, whose total income before claiming deduction exceeds BEL. Next number, who is RBOR, who is the beneficial owner or beneficiary with respect to foreign assets, including financial interest, including bank account located outside India, they have to file the return. And amendment, what is that? if your bank deposit exceed 1 crore in current account or 50 lakh in savings bank, or else you incur expenditure related to foreign travel exceeds 2 lakh, electricity consumption exceeds 1 lakh, or total turnover exceeds 60 lakh in case of your business, or in case of profession exceeds 10 lakh, or TDS TCS exceeds 25,000. In case of senior citizen, what is the limit? 50,000. In this case, you have to file the return. And tell me who are required to file the return? Every company, every firm, LLP. Others whose total income is more than bill before claiming the deduction. And next number, banking. How much? 1 crore current account savings bank 50 lakh. Electricity bill how much? 1 lakh. Foreign travel 2 lakhs. Turnover, business turnover 60 lakh. Professional receipts 10 lakh. TDS TCS 25,000. Other one, senior citizen 50,000. And who claimed the exemption under section 54 series, then also they have to file the return or not? Yes. Suppose my capital gain 10 lakh, exemption under section 54 also 10 lakh. 10 minus 10 lakh how much? 0. My total income 0. Shall I need to file the return? No. But as for this rule, yes. My total income before claiming exemption under section 54, if it is more than BEL, is 0. Section 54 exemption 10 lakh. So 0 plus 10 lakh how much? 10 lakh. 10 lakh is more than BEL. So shall I need to file the return or not? Yes. Next number, what is the due date? Answer, TP. Already we covered. What is that? 30th November. Next number, big shots whose books are subject to tax audit. What is the answer? 31st October. Any company. Company means normal audit is compulsory. Therefore, 31st October. Next number, any person being a partner of the firm books are subject to audit. What is the answer? 31st October. Next, that's all. These people are required to file the return. Next, 139 subsection 4. What is that? Belated return. You must file in time. Some people could not file in time, then they can make lately also. What is the time? 3 months prior to end of relevant assessment year. How many months? 3 months. My previous year is 2024-25. My assessment year is 2025-26. Elaborate. 1/4/2024 to 31st March 2025. Elaborate. 1/4/2025 to, come on, 31st March 2026. What is the general due date? 31st October. Correct? Yes. But sometimes made late. In that case, what is the deadline? 3 months prior. 3 months means March, Feb, Jan. Prior means 31st December of assessment year. Correct? Yes. Whenever year end date is there, year end, calendar year end, that is the deadline for filing of your late return. Correct? After December, can I file the return or not? General way you cannot file. You may file updated return. Correct? See the word. If return is not filed within the due date specified under section 139(1), then it can be filed within the time specified. What is the time? 3 months prior to end of relevant assessment year. If you file after that, that is valid or invalid? Invalid. Next, 139(5). What is 139(5)? Revised return. Revised return. What is that? SSC already filed the return earlier. Must have filed the original return. In the original return, there was a dash omission or misstatement. To rectify the omission or misstatement, you can file another revised return. What is the time? 3 months. 3 months prior to end of relevant assessment year. That's all. This is the topic of revised return. And tell me, first you have to file the original return. In the original return, there are a dash mistakes. To rectify the mistake, you can file original return. Another return. The revised return replaces the original return. Next, updated return. Important. You can file updated return within the period of how many months? 24 months from the end of relevant assessment year. From the end of assessment year, exactly within 2 years, you can file updated return. See the word. Any person can submit the updated return Whether you have filed earlier or not, immaterial, you can file updated return. But these people cannot file updated return. Can I file last return with respect to updated return? No. Can I decrease the tax liability by filing updated? No. Can I increase the loss? No. No. Next number. During survey and search, you cannot file updated return. If assessment is pending, you cannot file updated return. If prosecution is pending, you cannot file updated return. And department got the information from third party, then you cannot file updated return. And certain people notified by CBDT, they also cannot file updated return. Okay. But in case of updated return, you have to pay the tax and you must submit the proof how much tax you have to pay. Answer: if you are filing within 1 year time, 12 months time, how much additional tax you have to pay? 25% of your normal tax plus interest. I never told you penalty. 25% of total tax plus interest. Suppose you are filing after 12 months but before 24 months, how much you have to pay? 50%. 50% of your total tax plus interest must be paid as a dash additional tax. Okay, chalo. Friends, so far what we covered is assessment procedures. First, filing of return 1391, 1393, 1394, 4A, 4B, 4C, 4D, 4E, 4F. Next one 1395, 1399, 140, 140A. Next one 139, 8, 8A and 140B. This is the topic with respect to filing of returns. 1391, voluntary filing of returns. 1393, to be covered in set off and carry forward loss. 1394, late. 5, revise. 9, defective, incomplete return. 140, signing and verification authority. 140A, self assessment. Come again, what? Self assessment. 139.8A, what is that? Updated return. 140B, self assessment, updated return tax. Updated return tax. 4A, 4B, 4C, 4D, 4E, 4F. Come on, I told you the word. 4A, charitable trust. 4B, political party. 4C, institution. 4D, institution covered under section 35. 4E, business trust. 4F, investment fund. I repeat, 4A, filing of return by whom? Charitable trust. 4B, filing of return by whom? Political parties. 4C, filing of return by whom? Institution. 4D, filing of return by whom? Institution covered under section 35. 4E, business trust. 4F, investment fund. Out of that, the most important topic is 4C. What is that? Any institution, university like this, before claiming exemption under section 10, if their total income exceeds more than BEL, they have to file the return or not? Yes. Sure. What is the time limit for updated return? How many months? 2 months. 2 years. Tell me, I filed after 1 year within 2 years. Then how much I need to pay additional tax? 50%. I filed update return before 12 months. 12 months. What is that? 25%. Chalo. Next, another topic, 142 series, 143 series, 144 series, 147 series. What is 142? Ready? Start. This is nothing but processing of return, are also called as intimation, are also called as summary assessment. I repeat, summary assessment. Very simple, not important. This one not important. Once you file the return of income, department by using computer software, they will calculate your total income again by using your figures only. They will calculate. That is the reason it is called as summary assessment. And they will intimate you. Therefore, it is called as intimation. They will do processing. They will do processing of your return. That is the reason it is called as processing. In all the cases, they will give the intimation itself. What is the time limit? The time limit is how many months? Time limit is 1 year. All of you see the word section 142 series. This is nothing but intimation or processing of return. Next number 142 2A. What is that? Special audit. See the word. Once assessment is pending. Assessment is pending before assessing officer. Assessing officer is in the opinion that DBMS networking. D for doubts, B for bulk, M for multiplicity of transaction, S for specialized nature of transaction, N for nature and complexity of transaction, I for interest of revenue. In all the cases, now department may refer you to go for what? Special audit. Who will nominate the auditor? Who will nominate the auditor? CCIT or CIT? Who will fix the remuneration? CCIT or CIT? Who will pay the remuneration? Central government. But the particular auditor will submit the audit report within the time specified by the assessing officer. What is the time limit? 180 days. Sometimes the time can be extended for maximum period of 365 days. But nowadays, cost accountant also has one role here. What is that? They can refer the same for the valuation of inventory. This theory chapter is not that great important for you, but 142 2A somehow relevant. See the word. At any stage of proceedings are pending before assessing officer. Assessing officer is of the opinion that the books are required to be audited by chartered accountant or inventory is required to be valued by cost accountant having regard to DBMS networking. D for doubts, B for bulk voluminous, M for multiplicity of transaction, S for specialized nature of business, N for nature and complexity, I for interest of revenue. In that case, department may issue this kind of order for the purpose of special audit. Now, CCIT and CIT may direct the person to go for special audit or valuation of inventory. They will remuneration, they will fix it. Central government will pay. But the time limit will be specified by assessing officer. The maximum time limit does not exceed 180 days. Enough. With this, we have done with the topic called as 142. In 142, first topic. This is actually 143 series. 143.1. What is that? Processing or intimation. 142 is generally what? Notice. Notice requiring the SC to submit the return of income. That's all. Whereas in 143.1, first one, it is called as processing, intimation or summary assessment. RY is filed or failed? Filed. In that case, they will do processing. They will do summary of total, or they will give intimation. That is the reason it is called as summary assessment or intimation, or else processing of return. See the word 143.1, intimation, summary assessment, processing of return. When the return is filed under section 139.1 or in response to 142.1, in that case, department will calculate total income or total loss by considering arithmetical error or incorrect claim. Next number, they may disallow the loss provided if the return was filed belatedly. They will disallow the expenditure as per what? Audit report. They will disallow the deduction under section 10AA, IA, IB, IC, etc. when the return was filed within the time or after the time? After the time. In all the cases, they will disallow. So that is the reason I want to tell you LED, AILED. They will consider arithmetical error. They will consider incorrect claim. They will disallow the losses when the return was not filed in time. Disallow the deductions when the return was not filed in time. disallow the expenditure as per what? Audit report. AILED. After that, they will give opportunity of being heard to the SC. If SC responded, they will take a call. Otherwise, they will do the adjustment within how many days? 30 days. Now, the time limit for the intimation is maximum time limit of how many months? 9 months. 9 months from the end of the financial year in which the return was filed. Now, first topic number 1, SSC will file the return of income. SC will file the ROI. For that, the provisions are as follows: 139(1)(2), section number 140B. After that, a sing officer will apply his pass. Power number 1, 142. What is the 142? Maybe notice or maybe direction for what? Special audit. Next one, 143. 143 consisting of 3 parts: 143(1), 143(2), 143(3). 143(1), what is that? Intimation. 143(2), what is that? Notice. 143(3), what is that? Scrutiny assessment or regular assessment. Tell me, what is 143(1)? Intimation. How many months? 9 months. In intimation, shall I do main assessment? No. After we will calculate the totals. We will compute the totals. That is 143(1). Intimation. Okay. Chal. Who will do intimation? Department or SC? Department. They will cross check the figures? No. Just they will check the totals. 143(1) is not the assessment. After all, I hope you know few members file the return. Department will check and say your totals are correct or your totals are not correct. This is called as intimation. It will take 9 months time from the end of the year in which ROI was filed. But some big shots will be there. Government will select this big shot for what? Scrutiny. For them, they will issue a what? Notice. Once they issue notice, then they will go with the scrutiny assessment or regular assessment. Okay. 143(2), that is notice for regular assessment or scrutiny assessment. 143(3), that is nothing but scrutiny assessment, are also called as regular assessment. See the next one, 143(2), that is notice for regular assessment or scrutiny assessment. 143(2). To confirm that you have not understated your income, to confirm that you have not overstated your expenses, to confirm that you have not underpaid the tax. For this purpose, department will issue a notice for the purpose of scrutiny assessment within the maximum time period of 3 months. Once they issue notice, then SSC must attend the office in person, or you can attend the office with representative, plus you have to submit the books of accounts, or you must submit the documents whatever asked by the assessing officer. Enough. This is the topic called as notice for regular assessment or scrutiny assessment. Not important, but part and parcel of our syllabus. All of you please follow 143(2) as well as 143(3). Scrutiny assessment. Once a notice is issued, a assessing officer will serve the notice. What is the time limit? Within the time period of 3 months. Once they issued a notice, then you have to submit the books of accounts and all. Then assessing officer will do the assessment within the maximum time limit of how many months? 12 months. I repeat, maximum time limit of 12 months. Now, we are discussing the topic called as filing of return of income. Here, step number 1, SC will file the return of income with the department. Then department has so many powers. Power number 1, 142. Power number 2, 143. Power number 4, 144. Another power is there, 147. 142 is nothing but, come on, notice. Once SC file the return, well and good. If SSC fails to file the return, then they will issue the notice. Or another topic is there, 142A. What is that? Scrutiny, special audit. Before doing assessment, scrutiny or any assessment, If you have doubts about their books of accounts, then you will direct the fellow to go for what? Special audit. 143. What is that? 143 1, 143 2, 143 3. 143 1 is nothing but intimation or processing or summary assessment. 143 2 is nothing but notice. 143 3 is nothing but scrutiny assessment. The time limits are as follows. 143 1 is nothing but 9 months time. 143 2 3 months. 143 3 12 months. Bas. Next topic, last but one topic, 144. What is that? Best judgment assessment. Whenever you are not cooperating, whenever you are not supporting the department, then department will do BJA, best of their judgment. When? Number one, SSC not file the return. I repeat, SSC not file the return. Number two, SSC not complied with the notice. Not complied with the notice. Or SSC not complied with the direction. Direction for what? Special audit. So number one, no return was filed, not complied with notice, not complied with the direction. These are 1, 2, 3 things. Another thing, 4, 5, 6. Number next, ICDS not followed. If you are not followed any one of the ICDS, then automatically they can go for best judgment. Number next, accounting policies or accounting methods are not followed regularly, not followed consistently. Example, this year mercantile, next year cash, again mercantile, then automatically department may go with this. Last number, books of accounts are not maintained but incomplete, or complete but incorrect. In all the cases, any one of the situation arises, automatically department may go for special audit or not. Yes, sorry, may go for special assessment 144, that is called as best judgment assessment. Notice must be given, that is called as show cause notice, alias opportunity of being heard. Once OPPO has given, then assessing officer will give the OPPO opportunity of being heard, then SSC has to respond. Based on that, they will take a call. Okay. The time limit for judgment, the time limit for assessment is how many months? 12 months. But some kind of guesswork will be there or not? Yes. But there must be speaking order. Whatever you thought, you have to write in a word. Okay. It is a speaking order. This is the topic called as 144. What is 144? Best judgment assessment, are also called as ex parte assessment, because it is done without cooperation of other, it is done without presence of other, therefore it is called as ex parte assessment, or best of my judgment, therefore it is called as 144 best judgment assessment. Okay, CMA level, not that great important topic. I told you, no, first one SC will file the return, then assessing officer may have different option. Power number 1 142, notice a special audit like this. Power number next 143, serious. Power number next 144, next one 147. It's not applicable in every case, it's applicable only in case of income escaped the assessment. Okay, see the next one, 144. Assessing officer must make an assessment of total income or total loss to the best of his judgment in the following cases. Number 1, failure to file the return. Number 2, failure to comply with the notice. Number next, failure to comply with the direction. Next number, accounts are not complete. Number next, method of accounting not followed regularly. Number next, ICDS are not followed. In that case, department will give the notice. Based on the information, they will pass the order, that is called as 144. The time limit is how many months? 12 months. Any refund will be issued under 144? No. It must be beneficial to whom? Department, not beneficial to the SSC. What is the maximum time limit? 12 months. Next, income tax authorities. The authorities are 10 in number. First, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Number 1, CBDT, Central Board of Direct Taxes. Number next, CC, Principal PCC, Chief Commissioner, Principal Chief Commissioner, DGIT, Director General of Income Tax. Next number third one, CIT, DIT or CIT Appeals. Next number, Additional Commissioner or Additional Director. Next number, Joint Commissioner or Joint Director. Next number, Deputy or Additional. Assistant or Deputy. Deputy Commissioner or Deputy Director. Next one, Assistant Commissioner or Assistant Director. Next one, ITO. Next one, TRO, Tax Recovery Officer. Last one is Inspector. Take it for granted. Number 4 to number 8, that is additional to ITO, these people are called as Assessing Officer. Step number 1, CBDT, Central Board of Direct Taxes. Number next, Chief Commissioner. Number next, Commissioner. After that, 4th number to 8th number, these are called as Assessing Officer, Additional, Joint, Deputy, Assistant, ITO. Last two, TRO as well as Inspector. Now they have different paths. One of the power is nothing but survey. I repeat what? Survey. Survey is different. Next one, search is also different. Survey is different, search also different. Search is nothing but raid. Income tax raid. Search will be done by so many people. One is income tax raid and ACB, Anti-Corruption Bureau also will do raid. Example, yesterday, live example, real information. In Andhra Pradesh, yesterday, ACB people, they raided all sub-register offices. Revenue department, sub-register offices, everywhere funds will be there or not. Black money will be there, corruption will be there. So yesterday and today also, today if you open the news channels, now everywhere, many areas, department people, ACB, not income tax, ACB, Anti-Corruption Bureau people, they will just going inside and they are doing raid. I hope you know, you should not have money more than that. You know this one? You know, bus conductor should not have the money more than ticket collection. You know this fact or not? Example, this is the bus going to Vijayawada. All of a sudden, the fellow will stop the vehicle and will enter. First, he will check my pocket, how much cash I have. That is 90,000. How much ticket, how much value of ticket I sold it out? 85,000. For that 5,000, they will write a case. You know this? They will write the case. I should not have the money more than what I have collected. I know your doubt, sir. Now, that 5,000 I only carried out from my home. Nothing doing. It's not at all allowed. Maybe hardly 10 rupees, 100 rupees will be allowed. Not more than that. Okay. That is the reason these conductors and all will not carry the amount with them. So that kind of checking will be there. Same way in sub-register office also. Why you are having that much of money in your pocket? In yesterday in Ongole, I read in the newspaper, some people throw the money, currency outside the gate. ACB people are coming for checking and all. Immediately they throw the money out of window. Department ACB people went outside and they are counting whose money is this. Officers, they said not ours. Okay. Sorry, that is kind of income tax ACB right. But today's our topic is the powers of IT authorities. They have different paths. One is survey, one is search and all. Survey is not for raid. Survey is only for getting the information. But for getting the information survey, we have certain time period. We can enter only certain premises. What is that? We are going to cover right now. Number 1. When survey can happen? Answer. Business place. At what time? Business hours. Okay. Next one. Whereas other place, before sunset or after sunset, we can enter after sunset. Sorry, she's disturbing us. We can enter only after sunrise but before sunset. See the word. Where survey can happen, any business or professional place, and we have reasons to believe that they may have black money in other place, that place also we can enter, maybe house or something. Business place includes office, factory, godown, etc. Next number, any other place, generally where they're keeping the books of accounts, we can enter. What is the timing? Business place during business hours. Other place between dash and dash, sunrise to sunset. Completion time, there is no completion time. This is the time only to enter, not to exit. Only starting time is fixed. Survey can continue until it is finished. Books of accounts can be seized or not? Yes. Can I place identification marks? Yes. So we can retain the books maximum period of 10 days, working days we can do. And cash and all we cannot seize, only we can make note of inventory. And that too you cannot seize the asset. After all, we can take the information and we can take the declaration and amendment. Nowadays we can do survey for TDS purpose also, and we can do survey in the trust also. Once upon a time no one can enter into trust for survey purpose, but nowadays we can enter for survey of trust purpose also we can enter. This is the examiner favorite question. This question is nothing but IT authorities pass. Out of these important topics are there. Number one, first important topic. If I want to carry forward the loss, return of income must be filed in time or not? Yes. If you make return lately, if you file the return lately, can I carry forward the losses? No. But two exceptions are there. Exception number one, house property loss. Exception number two, unabsorbed depreciation. Whereas other losses can we carry forward or not? No. But one power we have, that is nothing but we can approach CBDT, but CBDT can condone the delay or not? Yes. If the reason is reasonable one, if the reason is sufficient one, automatically department may condone the delay and they may allow carry forward the losses even though you have not filed the return in time. Next number. If you have not filed the return in time, automatically 234A interest will be levied or not? Yes. 234A interest will be levied. But some people, they may file an application to CBDT for waiver of this interest. As I told you earlier, nobody can waive the interest under section 234A, but only one fellow can waive. Who? CBDT. These are the parts of CBDT, Central Board of Direct Taxes. And next number, sometimes CBDT may give circulars and notification for the purpose of extension of due date. Okay. Last time, you know what? Because of server down, many people unable to file the return. Immediately what happens? CBDT passed the circular. The time limit has been extended by another 1 day. Or sometimes they may extend by 1 month also. Anyhow, let it be. They have certain powers. One of the power is nothing but survey. Tell me, what is the difference between search and survey and survey? Search means we can come for raid, income tax raid. Whereas survey is not for income tax raid. Survey is for what? Information seeking purpose. Example, we can enter into Chandana Brothers, Bomana Brothers, we can gather the information. This is called as survey. In survey, we cannot seize the goods, correct? Huh? Yes. In survey, we will take the information and we will do assessment in future if any. That's all. This is the topic called as survey. For TDS purpose, can we do survey or not? Yes. Chalo. Next topic, examiner favorite topic. What is that? Search. Search and seizure and search assessment. Important topic, follow. Who can do search? When they can do search? Whom can be searched? These topics are relevant for exam. I need your attention. Please follow. Number one, authorized officer. Authorized officers. Authorizing officers. There are two categories: authorized, authorizing officers. One by one. First one is authorized. That is nothing but who? First one is CC. First one CC, Chief Commissioner. Next one, Commissioner. Next one, additional. Next one, joint. These 4 members, 1, 2, 3, 4. These 4 members can act as a what? Authorized officer. They can give the permission to these people. Next one, who are the authorizing officer? See, first one, authorized officers are only 2 numbers. First one CC, second one is C. Authorizing officers are as follows. Number 1, additional. Number 2, joint. Number 3, deputy. Number next, assistant. These 4 members, as well as one more fellow who ITO. These 5 members can act as a dash authorizing officers. But because of shortage in manpower, government has given additional powers to additional as well as joint to act as a what? Authorized. If they are authorized, same time they can act as authorizing officers? No. I hope you got the point. Additional may be authorized, then automatically he may not be a authorizing in that area. Kada? Yes. Chalo. Whom can be searched? Number 1, to whom notice issued under section 142 but SSC complied or not complied? Not complied. Or summons issued under section 131 but complied or not complied? Not. Or might be issued, may not be complied. నేను ఇచ్చుండే వాడిని మీరు కంప్లై చేసి ఉండకపోవచ్చు because of health reason the fellow is in coma, or because of any reason he absconded to abroad. Example, Nirav Modi. If I want to catch him, it's not possible really. It's not possible. That is the reason. Even though I may issue this notice, I may not catch that fellow. That is the reason. Can I go for search and seizure or not? Yes. Yes. Otherwise, Vijay Mallya, we wanted to give the notice. Even though I give the notice, he may not respond. So immediately I can go for search and seizure or not? Yes. Number next, SC has dash undisclosed income or undisclosed bullion, undisclosed jewelry. If SSC has black money, then department may go for dash search and seizure. Compulsory there must be reasons to suspect. Reasons to suspect. Without reason, you cannot go for income tax raid. Reasons are mandatory. Reasons compulsory. See the word who, when can be searched. Number 1, if books of accounts are not produced for notice, not produced for summons. Means notice issued, summons issued, but SC not produced. Number 2, SSC held dash undisclosed assets, undisclosed cash, bullion, jewelry, etc. In that case, we can go for search and seizure. Who can do search? Answer, only 2 fellow can do. Number 1, CC, or number 2, C. Or else 2 more fellows can act separately. Who? Additional and joint. Reasons must be there or not? Yes, reasons must be there. But the reasons no need to give. No need to give the reasons. Reasons should be there. That's all. No, don't inform to SC. Next number. What are the paths we have? Path number 1, we can enter. Enter. Which one? Any premises or any vessel, vehicle, train, anything. Now break the locks and says the people. Next number. In case of books are in electronic form like TD, what you call tally, SAP like this, then compulsory provide the fellow who have the password, key, etc. Ask them to provide the particular details. Otherwise, 275B, that is prosecution for how many years? 2 years. And you can seize the books of accounts and cash and other valuables we can seize, but don't seize what? Inventory. Correct? Inventory cannot be seized. Can I place identification marks? Yes. And deemed seizure or constructive seizure, sometimes it is not possible or not practicable to seize. In that case, can I ask the attachment order or not? Yes. That means you can keep the goods in a particular room and you can lock the door outside. That is called as deemed seizure. And next number, can I take the evidence from others? Yes. Examine the person on oath. Next one, whatever the goods you handed over, whatever the goods you have seized, that must be taken to custody. Suppose if I have taken the goods pertaining to some other fellows, you must hand over to particular assessing officer within the time period of 60 days from the lace. Lace means last authorization of search executed. We can retain the goods for maximum period of how many days? 30 days. And we can do provisional attachment. Maximum how many months? 6 months. After 6 months, automatically it will be validate or invalidate? Invalidate. Next number, we can go for requisition also. Requisition means our department people have not seized. Already it was seized by other department people. Then can I take the custody from other department people or not? Yes. This concept is called as requisition. Okay. Chalo. This is the topic called as search and seizure. But in case of search and seizure, we can do the assessment that is called as block assessment. Come again, what? Block. Very, very important topic. Very important. If you want to do block assessment under section 158 BA, condition number 1, there must be dash search, or at least there must be dash requisition. Requisition means seized by other department. From the department we have taken. If any one of the conditions satisfied, then compulsory you have to go for dash assessment block. Very, very important. See the word. Post search or requisition, we can do block assessment for black money. Notice must be given. Okay. Next number. Once notice is given, then he has to file the return. How many years? Answer. How many years? 6 years. Prior to previous year, up to the date of search, plus current year up to the date of Panchanama. In this current year you can do. And the last how many years we can do? 6 years. What about pending assessment will continue or abate? Abate. Pending assessment will be abated. Final assessment will be done within how many months? 12 months from the end of last authorization of search executed. But tax rates are as follows. Latest amendment. Tax rate how much? 60%. But no surcharge and no health and education cess. And no interest under section 234 ABC, and no penalty also will be levied under 270A. Next number, if you file the return in time, well and good. If you have not filed, interest also will be calculated at the rate of 1.5% per month up to the completion of assessment. Penalty, one extra provision penalty is there. How much? 50% of tax on UDI. 50% of tax on undisclosed income. No, highest tax rate. What is the rate? 60%. What is the time limit to complete the assessment? 12 months. How many years is the block assessment? 6 years. Now this is the topic search and seizure as well as search assessment. See the word. Assessments 4 in number: 143.3, 144, 147, 158 BA. What are the notices you have to give here? 143 to 144, 148, 158 BC. What is the condition here? SC must file the return. And to confirm that SSC has not understated the income, to confirm that SSC has not overstated the expenditure. What is 144? Best judgment assessment. You have defaulted under any one of these. Okay, chalo. 148 to be covered. Okay, next one. 158 BC. For this notice, what are the condition? Already search completed, or else requisition completed. In that case, to do the assessment, we need to issue the notice. Once notice issued, we will do the assessment under section 158 BA. But 158 BA will not be done for 1 year, will be done for 6 years. Plus, in this year also, from the first day of the previous year to up to the date of completion of such, to that period also we will do the assessment. Block assessment, 158 BA. Okay, very, very important topic. Any doubts? Next, last topic of its kind, income escaping assessment. 147. See the word. Intentional I have given in single pace. See the word. A assessing officer can reopen the assessment if income is escaped the assessment, in that case, department can reopen the assessment. For this purpose, notice must be given. The time limit is as follows. The time to notice must be given to the SSC. Then SSC must file the return within maximum period of 3 months. And assessing officer must issue the show cause notice, and he will give the notice. After that, SSC must provide the information with respect to that notice. And the time limit for this same is minimum 3 years to 3 months. See the word. The time limit, normal time limit is 3 years to 3 months, whereas special time limit is 5 years to 3 months in case of escaping income exceeds 50 lakh. What is that? All of you follow. In case of income escaping assessment, section number 147. Sir, as I told you, there are 4 assessments. One is 143.3, second one is 144, next one is 147, next one is 158 BA. For 143.3, what is the condition? ROI must be filed. That too, once you file the ROI, we wanted to confirm that SSC has not overstated the expenditure. SSC has not understated the income. SSC has not underpaid the tax. That is the reason we will do assessment. 144. What is the condition? SSC has defaulted in certain things. What are the defaults? Not filed the return, or not complied with the notice, or not complied with the direction, or ICDS has not complied. Correct? Yes. Next, 158 BA. What is that? Already search has taken place. Now, Malla Reddy, in his case, now already department people has done the search and seizure. Once they did the search and seizure, to continue the same, we will do the search assessment. Search assessment, that is called as block assessment, because we will do the block assessment for a maximum period of how many years? 6 years, 6 previous years, plus in this current year also, from the first day of search to up to the date of completion of search, till the date, all together it is called as block period. Come again, what period? Block period. Once this time has completed, immediately next day onwards, we can do the normal assessment. Correct? Fine. For this block period, SSC has to file the return of income. Once SSC file the return of income, we can do the assessment as for block assessment provisions. What is the tax rate? 60%. Any surcharge? No. Health and education says no. Straight away we will calculate the tax at the rate of 60%, and penalty may be levied at the rate of 50% of tax on undisclosed income, not entire tax. Tax on undisclosed income. Bus. But 147 is like this. 147. Number 1, SSC has certain income. The income has what? Escaped the assessment. Escaped the assessment. In that case, assessing officer shall survey notice under section 148. If you want to issue notice under 148, compulsory you have to follow the procedure. You must follow the procedure specified under section 148A. Next one, you must take the permission of higher official permission. You have to take it. After that, we can complete the assessment under section 147. One of the condition is there must be income, that too the income has escaped the assessment. In that case only we can do this assessment. See the word. This is called as escaping assessment, or also called as reassessment, because we are doing second time, or we are doing third time, or we are doing fourth time. That is the reason it is called as reassessment. See the word. assessing officer can reopen the cases if the income escaped the assessment. Now, he can include other escaped incomes which comes to our knowledge subsequently. While doing this assessment, if I come to know any other income, that also we can do. Number next, notice must be given or not? Yes. Already I told you, show cause notice all are one and the same. Notice must be given as per section 148, but you have to follow the procedure specified under section 148A. What is the time limit to respond? That is maximum 3 months. Notice can be issued by assessing officer, then SSC must file the return. That too, the return must be filed within the maximum time limit of 3 months. Next number, pre-notice opportunity. What is that? Assessing officer must issue show cause notice and he can get the reply from the SSC. But before doing the same, you must get the permission. You must get the approval from the higher officials. Who are the higher officials? For search and seizure and other cases, you have to take the permission of what? Joint Commissioner. Next one, what is the maximum time limit for notices? Answer, maximum time limit is 3 years, 3 months. Whereas in case of income escaped is more than 50 lakhs, then what is the time limit? 5 years, 3 months. Maximum 5 years, 3 months. Next one, suppose if any court judgment has given, based on the court judgment, if you want to do this assessment, there is no time limit of 3 years, 5 years, not there. Anytime you can reopen. Next number, approval for this notice, whose permission is required? Generally, additional commissioner or joint commissioner, joint director permission is required. What are the tax rate? Tax rate of this year or that year? That year. Particular year is only example. 2023-24 income has escaped. That year income I am doing assessment now. Now tell me which year tax rate I have to take. Current year or old? Old. Next one, dropping the proceedings. Suppose if there is no tax impact, that means because of 147, the income tax has not increasing, the income tax is decreasing, then can you continue or drop? Drop. Or else if the case is already pending before court, then can I continue or drop? Drop. Next number, completion of time. What is the maximum time limit to complete the assessment? 12 months. Already I told you 143 time limit is how much? 12 months. 144 12 months. Kada? Next number, search and seizure. Block assessment 12 months. Now, what is the time limit for completion of assessment? In case of 147, how many months? 12 months. So, in all the cases of assessment, that maximum time limit is 12 months. Okay, chalo. Now, see the last thing. Step number 1, SSC will file the return. That is step number 1, filing of ROA. For that, you have to check these provisions 139(1) 140B. After that, assessing officer will make the assessment, but he must follow the other provisions. One is 142, 143, 144, 147, 150, 132 search and seizure. In 132 case, one more assessment is there, 158 BA. 142 means that is nothing but notice, or another topic is there. What is that? Order or direction for special audit. 143.3, 1 intimation, 2 notice, 3 scrutiny assessment. 144 best judgment assessment. 147 escaping assessment. 132 search and seizure. But with respect to search and seizure, we can do the assessment under section 158 BA. First you have to give, here you have to give notice, here also notice, here also notice, here also notice. After giving this notice, we can go for various assessments. Okay, now yes. Next, he has certain pass. Number 1 are remedies. Remedy number 1, you can go for appeal. Remedy number 2, you can go for revision. Remedy number 3, you can go for rectification. Remedy number 4, you can go to CBDT. This already we covered. In case of delay filing of return of income, can we go with CBDT? CBDT has the power to condone the delay or not? Yes. Correct? Yes. Next number. Already we filed the return lately, then they levied interest under section 234A. Can I go for waiver of such interest or not? Yes. Under section 234A, that interest can be waived by CBDT. Chalo, these are the powers they have. With this, we have done with the topic called as number 1, filing of ROI, and we have completed the topic called as assessment under section 143 series, 144 series, and 147, and search and seizure related topic. But here two topics are there. One is search, and the second one is search assessment, alias that is known as block assessment. Block assessment will never ever done for 1 year. Block assessment will be done for minimum time of 6 years, not only 6 years, plus in the current year from the first day of the previous year to up to the date of completion is also covered. Correct? Yes. Chalo, this is the topic. Filing of ROI and all. Okay. After that we can cover appeals, revision, rectification. Now we are going to complete. Friends, in the last session we have done with the topic that is number 1 basic concepts, number 2 ICDS, PGBP, number next DTAA, equalization levy, TB transfer pricing, scope of income, as well as residential status, non-resident and NRI, and next number bar, Black Money Act. Next number is tax planning, tax management, tax compliances. Next number, another topic is filing of return of income. After that followed by 142, 143, 144, 147, 132 search and seizure, 158 BA, that is block assessment, 132 search and seizure, 142 notice as well as order for direction for special audit, 143 1 intimation, 143.2 notice for scrutiny, 143.3 scrutiny assessment, 144 best judgment assessment, 147 escaping assessment. Filing of ROI, tax planning, tax management, tax avoidance, tax evasion. Next number, Black Money Act also we have covered. As far as Black Money Act is concerned, if you Black Money Act, if you have black money undisclosed income or assets located outside India, you have to pay tax at the rate of 30%. Board for advance ruling. Any transaction undertaken or proposed to be undertaken, if you have any kind of queries, you can make an application. Next number, NRI we covered. Income from investment, income from any kind of foreign exchange asset is taxed at the rate of 20%. Long-term capital gain 12.5%. Non-resident 115A, different tax rates are there. Interest, royalty, fees for technical service. 115 BBA, that is nothing but sports party, sports association, sports entity, 20%. And scope of income and residential status also we covered. Foreign income generally taxable, not taxable, not taxable. Kada? Yes. But in case of one foreign income which is control and management is from India, that is taxable, taxable, not taxable. PP, what is 92? Intro. 92A, associated. 92B, international transaction. 92BA, specified domestic transaction. 92C, subsection 1, computation. Subsection 2, more than one method. Subsection 3, determination by assessing officer. Subsection 4, effect of ALPR to be determined by assessing officer. CA, reference to TPO, CB, Safe Harbor Rules, CCCD, Advanced Pricing Agreement, CE, Secondary Adjustment, 94A, NJA, Notified Jurisdictional Area, 94B, Bar on Interest Payment. After that, we complete other topic DTAA, Double Tax Avoidance Agreement, Equalization Levy. After that, profits and gains from business are portion, ICDS, as well as basic concepts. Now it's time for another topic, the remedies available to the department and as well as SC. Here point number 1, that is appeal. Nana, the person we have given the complaint is called as appellant. To whom the complaint is given is called as respondent. Okay, the complaint is called as appeal. Appeal can be made channel wise. The first one is called as CIT appeal, second one is called as ITAT, next one is called as High Court, next one is called as Supreme Court. The first appeal is called as CIT appeal, or else it is also called as JCIT appeals. Recently they introduced JCIT appeal or CIT appeal, that is the number 1. Second one is ITAT, third one is High Court, next one is Supreme Court. Compulsory you have to make the appeal channel wise. I repeat, here two members are there, one is SC, one is department. SC will file the return of income, assessing officer will pass the order. If SC is satisfied, he will keep quiet. If he is not satisfied, he will go to appeal. Within 30 days, he can go to appeal within 30 days. After that, they will pass the order within the period of 1 year. After that, the order may be beneficial to SC or department, then automatically the other fellow may approach ITAT, Income Tax Appellate Authority. ITAT we can approach within the period of 60 days. Now after that, they will pass the order within the period of 4 years. This order may be favorable to SC or may not be favorable to the SSC. In that case, the aggrieved party can approach High Court within the time limit of 120 days. After that, within set time period, they will pass the order. The time period is not at all specified. Okay. After that, the aggrieved person, they may approach Supreme Court within the time period of 90 days. After that, Supreme Court will pass the order. What is the time limit? There is no restriction at all. Okay. Next number. Questions are two types. One is called as question of law. Second one is called as question of fact. As far as question of law is concerned, we can approach CIT appeal, we can approach ITAT, we can approach High Court, we can approach Supreme Court. But with respect to question of fact is concerned, CIT appeal we can approach, ITAT we can approach, but we cannot approach High Court as well as Supreme Court. Therefore, ITAT is called as Final Fact Finding Authority. ITAT is the supremo in that. Okay, chalo. Next number, one by one. First one is the CIT appeal. Who is the appellant? Who is the appellant? SSC. Who is the respondent? Assessing officer. What is the authority name? CIT appeal or JCIT. Compulsory tax must be paid or not? Yes. Stay order can be granted or not? Yes. Next number. What is the time limit? 30 days. Free or fee? Fee. Next number. Once you made an application, can you withdraw or not? Yes. Next number. Within how many years they will pass the order? 1 year. 1 year is mandatory or not mandatory? Not mandatory. Next number. Last number. Additional evidences can be submitted or not? Yes. Which was not submitted before assessing officer can be submitted before CIT appeal or not? Yes. Provided the omission was not willful. Correct? Yes. Next number. Additional queries can be raised or not? Yes. Chalo. Next number, ITAT. Who can approach ITAT? SC or department or anyone? Anyone. What is the time limit? 60 days. Within how many years they will pass the order? 4 years. But stay order can be granted or not? Yes. If they grant the stay order, within how many days they have to pass the order? 180 days. If not possible, 365 days. But beyond that, they cannot. Next number. If stay order has not granted, they will pass the order within the period of 4 years. But the time of 4 years is mandatory or optional? Optional. Next, aggrieved person can approach High Court. Afterwards, they can approach Supreme Court. Next one. CIT appeal, can they review their order? No. ITAT, can they review their order? No. High Court, can they review? Generally, no. Supreme Court may review their order? Yes. Chalo. This is the topic in relation to IT appeals are concerned. See the word. First one, appeals. CIT appeals. That is first one, Joint Commissioner appeals or Commissioner of Income Tax appeals. After that, Income Tax Appellate Tribunal. Last but one, High Court. Last one is Supreme Court. Nana, CIT appeals against the order of assessing officer, SSC may approach. Whereas ITAT against the order of commissioner appeals we can approach. SCR department anyone can approach. High Court also same order. Against the order of ITAT we can approach High Court. SCR commissioner can approach. Against the order of High Court now we can approach Supreme Court. SCR commissioner can approach. Next number, Income Tax Act provides the following 3-tier remedies. First one I told you, JCIT appeals or CIT appeals. Who can approach? SSC. Time limit 30 days. Form number 35. What is the time limit for disposal? 1 year. Next, ITAT. Who can approach? SSC or department. 60 days time, but nowadays they amended as 2 months. Next number, form number 36. They will pass the order within the time period of 4 years. Next one, High Court. SCR department anyone can approach within the time span of 120 days. The time and all means when they can dispose and all, God only knows. Last one, Supreme Court. SCR department can approach within how many days? 90 days. Now, remaining things are same. Okay, chalo. This is the concept called as appeals. Okay, out of this, past exam questions are as follows. Exam question number 1. ITAT is called as Final Fact Finding Authority. Comment. What is the reason? What is the reason? ITAT is the Final Fact Finding Authority. What is the reason? Because with respect to question of fact, can we approach High Court and Supreme Court? No. We can approach only CIT appeal as well as ITAT. Therefore, ITAT is the supremo with respect to question of facts. Number 2, second question. When there is a difference of opinion between ITAT officials, how they will dispose the case? Majority prevails. Next one. ITAT can admit the new things or not? Yes, provided such omission was not willful. Correct? CIT appeals, ITAT, High Court can review their orders? No. But they can rectify or not? Yes. Rectification is different. Review is different. Next topic, revision. Revision by Commissioner of Income Tax. Very, very, very important topic for exam. Start. Here, SC may file the return of income. That is step number 1. Then assessing officer may pass the assessment order. For that 142, for that 143, 144, 147, search and seizure, S and S, search and seizure as well as block assessment. This is one combo. As I told you earlier, 142 is notice and order for special audit. 143 is for scrutiny. 144 is for best judgment. 147 is for escaping. S and S, search and seizure, and followed by block assessment. After that, these are the remedies are available. One remedy is appeal. Second one is revision. Number 1, here revisions are 2 in number, 263, 264. 263 is favorable to department. 264 is favorable to SC. When you wanted to say the word remedy available to the SSC, you have to say it as a 264. Remedy available to department, you can say the word 263. Okay, fine. What is the 263? What is the 264? I am going to explain. Follow. Number 1, the order passed by assessing officer. Now, the order given by assessing officer is erroneous and prejudicial to interest of revenue. In that case, assessing officer on his own motion, I repeat, on his own motion, without any intervention of SC, he can call for information and he can pass a revised order within the time span of 2 years. This concept is called as revision under section 263. Tell me one by one, whose order it is? Assessing officer. What happened? Erroneous and prejudicial to interest of revenue. In that case, assessing officer can do the revision on his own motion by doing revisional order. What is the maximum time limit? 2 years. Chalo. Next number, partial measure or total measure? Partial measure. If anything is pending in the court, can we do revision? No. But other part which is not pending in the court, can I do revision? Yes. Chalo, that is the order 263. Okay, na? Yes. Next number, revisional order under section 264. What is that? Before that, please go through once 263. See the word order. A revision of orders prejudicial to the revenue. The two on suo motu basis, no application by SC. Ourself only we will do. And OPPO must be given or not? Yes. Fee, no fee. And partial measure or total measure? Partial measure. If it is pending in the court, we cannot verify. If it is not pending in the court, can be revised or not? Yes. And revision is possible only that issues which are not being considered and decided in the appeal. Next number, revision. The revision under text section 263 can be further appealable or not? Yes. But with whom can we go for appeal? ITAT or CIT appeal? Not CIT appeal. We can go to only for higher level. Higher level is nothing but ITAT. What is the maximum time limit? 2 years from the end of financial year. Correct? Yes. Next topic, 264. What is the 264? All of you follow. Order passed by subordinate authority, a sing officer. Any order is covered but other than 263. If it is erroneous and prejudicial to the interest of SSC, SSC income has lost in that case on own motion by department or application made by SSC by paying the fees of rupees 500, revision can be done under section 264 within the maximum time limit of 1 year. But here total measure or partial measure? Total measure. There is no concept of partial measure under 264, only total measure. Tell me once again, order of whom? Assessing officer. But every order is covered, but 263 order is not covered here. Anything is covered except 263. The two SSC favor only we can do it. The two own motion by the department or application by the SSC officer. What is the fee? 500. And 264 can be done within the time span of 1 year. Total measure it is, not partial measure. Is it further appealable or not appealable? Not appealable. No appeal is possible under section 264. Chalo. Next number. 263 order can be revised under section 264? No. But 264 order, can you do revision under section 263? Yes. Okay. See the word. Here you can find the word 264. See the word revision of orders prejudicial to the SSC on suo motu or application made by the SC after giving opportunity of being heard if required. 500 is the fees. That to total measure. If it is part of appeal, cannot be revised. Which is not part of appeal also, that other part cannot be revised because it is a total measure. And next number, revision under section 264, if you done once, then further appeal is not possible. Correct? Yes. And what is the maximum time limit? 1 year. 1 year from the date of order in case of suo motu, whereas in case of application, 1 year from the end of the financial year in which application was made. This is the topic called as revision. But here, remedy available to the SSC is nothing but 264. Remedy available to the department is nothing but 263. Okay. Important for exam point of view. Follow. Next one, examiner's favorite topic, that is nothing but rectification of mistakes. Very, very important. Follow. Order of subordinate authority. I repeat, order of subordinate authorities or order of assessing officer or order of simply IT authorities, income tax authorities. If it is erroneous, if there are errors, okay, in that case, same authority or IT authority can rectify and can pass revised rectification order within the time span of how many years? 4 years. This concept is called as rectification of mistake under section 154. One by one, follow. Number one, which order? To rectify any mistake apparent on record, only income tax authority, maybe assessing officer or CIT appeal, JCIT appeals, whatever it may be, IT authorities can rectify all this order. Assing officer order they can rectify, intimation also they can rectify, TDS, TCS intimation also they can rectify, provided there must be error. The error may be question of law or question of fact. Next number. In case of question of law, question of fact, we can rectify. Arithmetical error we can rectify. Calculation, wrong calculation with respect to WDV depreciation we can rectify. Overlook, then we can rectify. Mathematical error can be rectified. Errors in calculation of depreciation, all the things which are errors can be rectified. Okay, but mistakes which are debatable in nature, these cannot be rectified. Total measure or partial measure? Entire income tax act covered under partial measure. But in case of 264, revision under section 264 is only covered under total measure. Next one, 154 will be done on own motion as well as application made by the SSC. Next number, OPPO must be given or no need to give? OPPO must be given. Opportunity of being heard must be provided. Fee or free? Fee. No fees is payable. It is pakka free because it is a mistake, right? Mistake can be rectified at free of cost. And a rectification order must be oral or writing. And if demand is raised, if tax liability has increased, OPPO must be provided kada? Yes. In case of refund, they may grant the refund also. No OPPO is given. What is the maximum time limit? 4 years from the end of the financial year in which the order sought to be amended is passed. Which order? Original order or revised order? Revised order. So the time limit of 4 years always starts from the revised order. Okay na? Fine. Nana, with this 100% of the topic got completed. The topics are as follows. Step number 1. Last time I am telling you SSC will file the return of income. This is one chapter. 139.1 to 140B. Out of this, most important topics are 139. First one, 139.1, voluntary filing of ROI important. 3, important. 4, important. What is 3? Last return. What is 4? Late return. 139.4C also important. What is that? Filing of return by various institutions, hospitals, universities like this. Next number, 139.5, most important. What is that? Revised return. And 140, two topics are important. In case of LLP, who is the signing and verification authority? Designated partners. In case of HEF, Karta is outside India, then who can sign? Any adult member. I never told you any adult male member. I never told you next adult male member. I told you any adult member. Irrespective of the gender, any adult member can sign. Next one, 139.8A, most important topic. What is that? Updated return. In case of updated return, compulsory you have to pay the tax as per section 140B. Tax on updated return. Correct? Yes. This is one bunch which is important. After that, a assessing officer may apply the powers of 142. Not important, but out of this, 142.2A is most important. What is that? Special audit. Direction for special audit. When the proceedings are pending before department is in the opinion that books are required to be audited having regard to DBMS networking. In that case, they may issue fresh direction for special audit. Okay, number 1, the direction can be given by CCIT, a department with the prior approval of CCIT, nominated by CCIT, fixed by CCIT, paid by central government, but time limit specified by assessing officer, that is maximum 180 days. Chalo. Another topic, 143 not important, but time limits are somehow important. But 143, 1 or 2 or 3 is possible only if ROI filed. Filed. If filed, it is covered. Some cases intimation, but only in case of big shots or rare cases we can go for notice. If I go for notice, immediately we will go for scrutiny. Next number 144. What is that? Best judgment assessment. Important means yes, somehow important. 147. Most important. What is that? Escaping assessment. If you want to do 147 escaping assessment, there must be income. The income is taxable, but unfortunately escaped the assessment. Then after giving the notice under section 148, by following the procedure under section 148A, and within the time limit specified under section 149 with the approval specified under section 150, we can do the assessment under section 147. Important topic. Next number, S and S, search and seizure. When you have black money, or else you don't have black money but I have given the notice but you have not complied, or I issued summons, you have not complied, I may issue, you may not comply. In all the cases, we can do search and seizure. Commissioner or chief commissioner can issue the authorization, whereas assessing officer being additional joint deputy assistant IT work can go for search and seizure. After that, we have completed another topic that is called as what are the power number one. They can enter, they can do search, they can break the lock kada, yes, they can break the lock or wall or roof or ceiling like that kada, yes, and they can insist you submit the books of accounts, and they can seize the assets but they cannot seize stock in trade. When they can't seize stock in trade, they can do provisional attachment and they can make the note of inventory. Correct? Yes. Next number, once they seize, no, they will do the assessment as per block assessment provisions under section 158 BA. How long they will do? 6 years. Plus current year day 1 to up to the last day of the completion of such authorization. For this period, they will do such assessment as per the provisions of 158 BA. What is the tax rate? 60%. Surcharge is applicable? No. Health and education says no. Fine, sir. After that, we have started another topic. Remedies available. The remedies are as follows. First one is called as appeal. Second one is called as revision. Next one is called as rectification. Next one is called as CBDT. But CBDT, this is in rare cases. Number one, for condonation of delay in case of filing of return lately. Okay. Number next, in case of waiver of interest under section 234 A, B, C. And in case of relaxation, like due date can be extended. These are the purposes we can approach CBDT. Next one, rectification of mistake. There must be mistake. The mistake is apparent on the record. In that case, on own motion or application without charging any fee, they can do rectification within the time span of 4 years. OPPO may be given if there is a tax demand, but no OPPO is given if there is no tax demand. Kada? Yes. But the 4 years time will start from the end of the financial year in which revised order was passed. Okay, fine. Revision. Two sections, 263 and 264. 263. The order of subordinate authority which is erroneous and prejudicial to interest of revenue, then after giving the opportunity of being heard, Commissioner of Income Tax can do revision under section 263, but by following the partial measure within the maximum time limit of 2 years. Whereas as far as 264 is concerned, the order given by the subordinate authority, but any order is covered other than 263 order. In this case, if it is erroneous and prejudicial to interest of the SSC, in that case, on application or own motion, by paying the fees of 500, and OPPO may be given, may not be given. In that case, they will do revision under section 264. Next number, appeal. There are 4 categories. First one, CIT or JCIT appeal. Next one, ITIT, High Court, Supreme Court. Correct now? Yes. With respect to question of fact, who is the final authority? ITIT. These are the remedies are available. Okay now? Fine. Comrades, very important topic for exam point of view. Without this, you will never ever get the question paper. The topic is called as taxation of companies. Very important. 100% you will get one question out of this topic, that is called as taxation of companies, alias MAT, minimum alternative tax. Very important. 100% you will get this question. Start. There are different classifications. Companies are 2 in number. Number 1, foreign company. Number 2, domestic company. Which is not a domestic company is called as foreign company. What is domestic company? First one is Indian company. Second one is foreign company which has not declared the dividend. Sorry, which is declaring the dividend in India, which made arrangements for declaration of dividend in India is called as domestic company. This is one bifurcation. And another bifurcation is there. In case of companies, it is further classified into two things. One is called as closely held company. Come again, closely held company. Second one is called as widely held company. I repeat, closely held company means which is not a, come on, widely held company. What is widely held company? Widely held company means a company in which public has substantial interest. The examples are as follows. Number 1, section number 8, section number 25, section number 8 companies, that is non-profit entities, kada? NGOs, non-profit entities. Number next, company being listed companies. Next one, company in which government or RBI has minimum 40%, or else public company of these government companies are also covered. Chalo. How to calculate the tax liability of corporate SC? Step number 1, you have to calculate total income. Compute total income of the company. Step number 2, calculate total tax liability. Total tax liability you can calculate. This is as per normal provision we have to do it. Normal provisions. The normal provisions tax rates are as follows. Number 1, if you are a domestic company, the tax rate is 30%. But today, beginning of this session, I told you if your turnover does not exceed 400 crores in the previous year, 22-23, then what is the rate? 25%. And surcharge is as follows. Up to 1 crore. What is the surcharge? No. 1 crore to 10 crore. What is the surcharge? 12%. And above 10 crore, what is the percentage? 1 crore to 10 crore, it is 7%. Above 10 crore, what is 12%? Next number, if you are a foreign company, answer would have been different. What is the percentage? 35%. Whereas surcharge up to 1 crore, 0. 1 crore to 10 crore, 2%. Above 10 crore, 5%. This is common. After that, next topic is as follows. That is called as computation of book profit. Without this, you will never ever get the question paper. 99.999% examiner will ask book profit computation. But 0.0001% they may ask AMT, alternative minimum tax. But examiner favorite topic is book profit computation alias MAT computation. For that, you have to take the net profit prepared as per part 2 of schedule number 3, or else any other act for the time being enforced. Banking, electricity and insurance, you have to take it. After that, you have to do some positive adjustments, you have to do some negative adjustment, then you will get the book profit. Sing a song. IRPSEDDDRAFNCZR. Negative adjustments. We, doctor, boyfriend, STD, AFNCLR. Then you will get the book profit under section 115 JB. Now first you have to take the net profit as for which act? Companies Act or any other act. After that you have to add the following. IFOS, income tax paid or payable. Very important topic, okay? Compulsory examiner will ask the question. See the word. Step number 1. Normal provisions, total income you have to calculate. Tax liability you have to calculate. The tax rates are as follows. 30% in case of domestic, 35% in case of foreign. Surcharge 7 and 12% for domestic, 2 and 5 in case of foreign. After that you have to calculate what is that? Book profit. For book profit computation you have to follow those adjustments which are specified under 115 JB. On that you have to calculate MAT at the rate of 15%. Such as anyhow same rates are applicable, 7 or 10, 12% in case of domestic, 2 or 5% in case of foreign. Next number, health and education is always universal. What is the rate? 4%. Now how to calculate book profit? First, take the net profit as per profit and loss account prepared as per part 2 of schedule 3 or as per any other acts per the time being in force. After that, you have to do positive adjustment. First adjustment is nothing but I for income tax, paid or payable. To be added, not to be added. First, remember only to be added. Automatically, all other than this are not to be added. Number 1, income tax, surcharge and health and education cess on income tax. Number 3, interest on income tax. Number 4, corporate dividend tax under section 115O. But anyhow, this tax was not there, but ignore. Ready, start. What are the things to be added? Income tax, surcharge on income tax, health and education cess on income tax, interest on income tax. All other things must be added or not to be added? Not to be added. Number 2, IRR for amount transferred to reserve. Which reserve? Any reserve. IRP. P for provision for unascertained liability. Provision for gratuity made on actuarial valuation. When I say the word scientific basis, actuarial valuation, this is genuine one and reliable one and scientific one. It should not be added back. When I told you the word which is made roughly ad hoc basis without any scientific evaluation, then that is called as unascertained. Whenever it is unascertained, add or less add. Next number, another topic, yes for losses of subsidiary company. Next number, E for common 1, expenditure related to exempted income under section 10, 11, 12 except 10A. Now D for depreciation, D for dividend, D for deferred tax, D for diminishing in value of asset. Okay, one of the best example, provision for bad and doubtful debt is a diminishing in value of assets to debtors. Correct term? Yes. IRP, SEDDDR. R for amount standing in the revaluation reserve for disposal of assets which is not credited to P&L. Next number, A, F, N, C, Z, R. A for expenditure related to share income from AOP, BOI, which is not tax payable, which is not subject to tax. F for expenditure related to certain incomes of foreign company, which is taxable at a rate higher than or lower than MAT. N for notional loss on transfer of capital asset being shares of SPV to business trust. Okay, shares of SPV to a business trust. Next number, CZ, actual capital gain. I repeat, actual capital gain on sale of units of business trust. Last number, R, expenditure related to royalty income, which is covered under section 115 BBF. What is the rate? 10%. Correct? Yes. These are the topics. Come on. I, R, P, S, E, D, 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 R, A, F, N, C, Z, R. Now it is time for negative adjustment deductions. Number 1, W. What is that? Amount withdrawn from reserve. Which reserve? Any reserve. Any reserve is covered, provided the reserve was created earlier by debiting profit and loss account. There must be P&L debit and P&L credit, then only it will be considered. Correct? Yes. E for exempted income under section 10, 11, 12 except 10A. Next number, DIP. Very important. What is that? DIP, except DIP on revaluation. Which DIP we have to consider? Only which was debited, the same must be considered. Kada? Yes. Provided DIP on revaluation shall not be considered. That means it must be ignored. Kada? Yes. Next number, amount withdrawn from revaluation reserve. For that, simply I told you one formula. Lower of the following must be considered. What is the first one? Small a. Amount withdrawn from revaluation reserve or DIP on revaluation, whichever is lower. BF, brought forward loss or unabsorbed depreciation, whichever is lower. But in case of a company which is going for insolvency, in that case we have to take the sum of total. Kana? Yes. Total of brought forward business loss and unabsorbed depreciation total must be considered. Next number, BF, STD. S for sick industry, T for tonnage tax, D for deferred tax, A for share income of AOP and BOI, F for Foreign company income, correct? Yes. N for notional gain. Now, next number, CL, capital. uh, Last number, income from royalty, covered under section 115 BBF. These are the negative adjustment you have to do. After that, you will get the total income being in the name of book profit. On that, we have to add surcharge at the rate of specified rate, and we have to calculate MAT at the rate of 15%, health and expenses at the rate of 4%. You have to compute normal tax and MAT. Out of these two, you have to consider whichever is higher. If anybody is covered under MAT, then MAT provisions are covered. Automatically, you are eligible for MAT credit. What is the formula for MAT credit? MAT minus normal tax. That MAT credit can be carried forward for maximum period of 15 years. It can be adjusted in the year in which normal tax liability is higher than the MAT. How much can be adjusted? List of the following. Small a, outstanding MAT credit or difference between normal tax and MAT. It can be carried forward and adjusted maximum period of 15 years. If you are unable to adjust automatically, it will get lapse. In case of MAT, is there an impact of ICDS? No, because in case of MAT, I have taken the Companies Act P&L and did the adjustment. Then where is the question of ICDS? ICDS is not relevant, correct? Yes. Next number. MAT applicable to some people, but not applicable to some people. MAT is applicable to, come on, corporate or non-corporate? Corporate SSC, correct? Yes. But MAT is not applicable to some people, foreign company, no paid, no DER. No paid means no PE and having DTAA. No DER means no DTAA and they are not required for registration. And not applicable for 115 BAB also. Those people, those companies who adopted special tax provisions also not applicable. And not applicable for those people who are following 44B, 44BB, 44BBA, 44BBB. Non-resident who are having presumptive income under 44B. What is that? Boat shipping business. Correct? 7.5%. 44BB, oil 10%. 44BBA, airways 5%. 44BBB, 10% or 20%, 10%. These fellows are not required to follow the MAT, even though they are a foreign companies. Next number, another topic we have completed. In case of banking, insurance, electricity is applicable, but it is not applicable to life insurance, I guess. Kada? Yes, but applicable to general insurance. And not applicable to section 25 alias section 8 companies MAT provisions are not at all applicable. And next number, it is applicable for domestic company, applicable for private and foreign, all the companies applicable. But if the foreign company does not have PE in India, then generally it is not applicable. And non-corporate SC also it is not at all applicable. Very important topic, take care. This is the concept called as MAT, minimum alternative tax. I'm not telling you 99%, I'm telling you 100% you will get the question about the MAT. Okay, chalo. Next number. Assessing officer has the power to recompute the net profit given in the audited financial statement? No. His powers are restricted only to verify the computation given under section 115 JB. Correct? Yes. It does not have the power to go beyond the net profit shown in audited financial statements. Bas, enough with this. Done with the topic. Fine. Next number, all of you, a small topic, that is business trust. Number 2, investment fund. Number next, securitization trust. All of you please follow. This is not important for exam, but important for MCQs. This is the topic called as BIS. B for business trust, I for investment fund. This is S for securitization trust. Out of that, business trust is most important for exam. IS, investment fund and securities trust, after all important for MCQs. Okay, anyhow, it's time for business trust. Please follow, important. Here, so many members are there like you and me. We are called as UH, unit holders. We are maybe residents or maybe non-resident. Step number 1, we will pump the money into an entity. The entity is called as business trust. Business trust can be two types. One is INIT, investment infrastructure trust, or REIT. REIT means real estate investment trust. Tomorrow once you qualified, no need to qualify for this purpose. Today if you open YouTube shorts, in finance shorts you will find REITs. Nowadays REITs are doing well. What is REIT? Real estate. What is real estate? Now I want to buy one flat, one land, one building, but the value is 80 crores. I cannot spend 80 crore for that. That is the reason I will give only 8 lakhs. She will give 10 lakh. She will give 2 lakhs. She will give 1 lakh. With all these amounts, we will buy this property. Whatever the rental income we are getting, we will share among ourselves. This concept is called as REITs, Real Estate Investment Trust. Now anyhow, business trust 2 in number. After that, in case of REIT, generally they will invest the money in one company called as SPV, Special Purpose Vehicle. The two, this is nothing but Indian company. The two, the company is engaged in the business of dash real estate. Okay, student doubt, why we are not investing directly? Why you are investing through SPV? The reason, sometimes we don't have knowledge, or we have knowledge but we don't have that much of amount. In that case, we will pump the money into SPV. SPV will pump the money into real estate. Okay na? Yes. Chalo, step number 1, unit holders will give the money to business trust. Business trust, we may invest in real estates directly, or else may invest in SPV. Step number 1, we will get the interest. What is the answer? Taxable or exempt? After that, we'll pay the interest to business trust unit holders. Pakka taxable. For that, I need to deduct TDS under section 194 LBA. Step number 1. Okay, chalo. After that, next topic, we may get the dash dividend. Okay, dividend amount is taxable or exempt? In their hands, taxable or not? Cool. Whether these SPV following 115 BAB or not. If they follow 115 BAB, answer in this case, they are paying less tax. Correct? When they are paying less amount of tax, it is genuine to collect the tax from the unit holder or not? Yes. Suppose they are not following special provision, they are paying normal tax. In that case, the dividend is exempt in the hands of business trust, but also exempt in the hands of unit holders. Next one, rental income. Rental income received by business trust. What is the answer? Taxable or exempt? Pakka exempt. They will pay rental income to unit holders. Taxable or exempt? Pakka taxable. Next number, business trust incomes are as follows. If they sell the units of shares of SPV, if it is long term, covered under section 112A. If it is short term, covered under section 111A. All other incomes are covered at the rate of MMR, maximum marginal rate. Come to this fellow unit holders. Unit holders sold the units of business trust. If it is long term, 112A. Short term, 111A. All other incomes taxable as per respective acts. Correct? Yes. Chalo. This is the topic called as business trust. Important for exam point of view. Next one, investment fund. Here 2 members are there. First one, unit holder. Second one is called as investment fund. Here 2 kinds of incomes. One is business income, other than business income. Here also 2 incomes are there. Come on. Business income, other than business income. Tell me the word. Business income, taxable or exempt? Tax. In the hands of investment fund, business income is taxable. This is the exempt. This is exempt. This is taxable. Correct? Yes. That's all. This is the topic called as investment fund. Whatever the amount they are distributing to unit holders, compulsory TDS applicable under section 194 LBA or B or C. B. Next number. The losses can be carried forward or not? Yes. If the person having units more than 12 months, in that case, the corresponding losses can be carried forward, otherwise cannot be carried forward. Next number, last number, securitization trust. What is that? Yeah, one fellow is there. That fellow financial institution, he have some debtors but which are useless. Immediately what happen? He will give the debtors to some financial other body called as securitization trust. Securitization trust will collect the money from whom? Unit holders. After that, the money will be given to financial institution. In future, financial institution will recover the money. After that, they will pay to securitization trust. Securitization trust will pay the amount to unit holders. In the hands of securitization trust, taxable or not taxable? Not taxable. Pakka exempt. In the hands of unit holder, pakka taxable. TDS section under section 194 LBC. Correct? Huh? Yes. Chalo. This is the topic called as BIS. BIS. Business trust, investment fund, securitization trust. Okay, now. Any doubts? All of you see the material. It is time for topic number E, taxation of securitization trust. In the hands of investor and securitization trust. In the hands of securitization trust, pakka exempt. Obviously, investor it is taxable. TDS under section 194 LBC. Write the word LBC. 194 LBC. Come to the before the topic business trust. Afterwards, you will find the word investment fund. In the hands of investment fund, all incomes are exempt, but one income is taxable. What is that? PGBP is pakka taxable. Unit holders, all incomes are taxable, but PGBP income is exempt. What is the TDS? 194 LBB. Next number, another topic, business trust. Very, very important topic. All incomes almost all exempt in the hands of business trust, but taxable in the hands of unit holders. Take care. Very important topic. Okay. Chalo. Last topic of today's session, clubbing and set off. Clubbing is very, very unimportant topic. Set off is most important topic. It's time for set off and carry forward of losses. Very, very important topic for exam point of view. First, we have to go for intra-head adjustment. Second one, we need to go for inter-head adjustment. Here, in intra-head adjustment, again, two things are there. First one is called as within the head. Correct? Yes. I repeat, within the head. Start. First one, salary chapter. All of you, possible or not possible? Not possible. I repeat, here two things are there. First one is called as set off. Second one is called as carry forward. In set off, again two things are there. First one is called as intra. Second one is called as inter. In carry forward, generally intra is only there. Inter will not be there. Correct? Yes. But inter will not be there. Okay. Chalo. One by one. Salary chapter. Sing a song. No. The reason for salary chapter losses are not possible. Next number, house property chapter. Intra-head adjustment available or not? Yes. Adjustment, yes. But maximum amount of 2 lakh. Against other head, you can adjust maximum of 2 lakh. Whereas carry forward, intra or inter? Intra, but not inter. How many years? 8 years. ROI is compulsory for all cases, but here ROI is not compulsory. Continuity is also relevant or not relevant? Not relevant. Next number, PGBP, their non-speculation. In case of non-speculative, answer available, available except salary, available, inter is not available, 8 years, ROI is compulsory, continuity is not relevant. Next number, speculative, same. Speculative loss can be adjusted only against speculative. Next one, interhead adjustment is not available. Adjustment is available only against same. Whereas inter not available. 4 years. ROI is compulsory. Continuity is not relevant. Next number, another topic is called as capital that is specified business loss under section 35 AD. Same. No, same. Next number, inter is not available. Any number of years allowed. ROI is compulsory. Continuity not relevant. The reason any kind of specified business 35 AD business losses can be adjusted. Other specified business incomes, correct? Yes. Next number, unabsorbed depreciation. Answer, yes, available. Yes, available except salary. Yes, available. But interhead adjustment also available. Any number of years. But ROI is not compulsory. Continuity is also not relevant. Correct? Yes. Short-term capital loss. Answer, available. But interhead adjustment in the current year not available. But in the subsequent year, come on, available. Next number, not available. Interhedge not available. How many years? 8 years. RY. RY compulsory. Continuity not relevant. Okay. Chalo. Next number, long term capital loss. Such loss can be adjusted against same income. Interhead adjustment not available. Now, how many years we can carry forward? 8 years. And long term loss can be adjusted only against long term capital gain. RY is compulsory or not? Yes. Next number, continuity is not relevant. Next one, other losses. Interhead adjustment, intrahead adjustment in the current year will be allowed, but subsequent carry forward is not allowed. Whereas activity from Allu Arjun, owning and maintaining of race Guram, race horse. Correct? Yes. Answer same, no, same. Other had not allowed 4 years. RY is relevant. Continuity is also relevant. Correct? Yes. Next number, no one can carry for the losses of others, but there are 4 exceptions. Amitabh Bachchan, daughter-in-law. A for amalgamation, B for business reorganization, D for demerger, L for legal inheritance. In case of legal inheritance, what is the answer? If any person, in case of legal inheritance, if any person dies, is legal heirs can carry forward or not? Yes. Condition number 1, no third party is involved. Condition number 2, same business must be continued. Not similar. Same business must be continued. How long they can carry forward? Fresh 8 years or unexpired period? Unexpired period. Now, 2 case laws are there. That is Saroz Agarwal. Husband died. Spouse carry forward the business of the deceased husband. Such laws can be carried forward or not? Yes. Next number, another topic is as follows. In case of death of a father, now sons carried over the business of the dad by constituting partnership firm. They can carry forward or not? Yes. Now, in the name of legal inheritance. Next number, demerger. Answer, if the losses are attributable to resulting company only, then losses can be carried forward unexpired period. If it is not attributable to resulting company, then losses can be carried forward by demerged company and resulting company on what basis? Pro rata basis, proportionate basis for unexpired period. Next one, business reorganization. Once upon a time, sole proprietor, nowadays converted into company. Once upon a time, partnership firm, nowadays converted into company. In all the business reorganization cases, losses can be carried forward. Yes. Fresh 8 years, not for unexpired period. Next number, amalgamation. In case of amalgamation, the business losses of amalgamating company can be carried over by amalgamated company. Yes. For how long it is? A fresh 8 years. All the losses we can carry forward, but we cannot carry forward unabsorbed, we cannot carry forward speculative business loss. Correct? Yes. Next number, in case of change in constitution, I repeat, change in constitution of the partnership firm. Whenever partnership firm partner got retired, I repeat, retired, or the partner died, in that case, that particular partner share can be carried forward or cannot carry forward? Cannot carry forward. But other remaining partners shares can be carried forward or not? Yes. I will take one example. A, B, C, D partnership firm is there. Assume all the partners are equal. Okay. Out of that, what happened? D. Once upon a time, Mr. D died. The business losses are as follows: 40 lakh. Then what is the answer? Whenever all are equal partners, the deceased partner share 10 lakh cannot be carried forward. Balance 30 lakh will be carried forward. Suppose house property loss 4 lakh, but 10%, 25% of D share means 1 lakh. that 1 lakh cannot be carried forward, balance 3 lakh can be carried forward or not? Yes. So moral of the story, if any partner died or any partner retired, his proportionate share of business loss will not be allowed to carry forward in the hands of the firm. Kada? Yes. Other partner share can be carried forward or not? Yes. Last number, in case of unabsorbed depreciation, let us say 400 lakh. Now, even though one partner died, even though another partner got retired, his share also will be carried forward or not? Yes. Unabsorbed depreciation always will be affected or will not be affected? Will not be affected. Important topic. Once upon a time they placed in the examination, take care. Last but one, that is called as closely held company. I repeat, closely held company alias private companies here. Whenever it is a private company, the losses can be carried forward by private company subject to fulfillment of one condition. What is the condition? 51% of shareholders shareholding must be the same prevailing as on first day or last day of previous year in which losses were occurred that day. 51% must be the same with respect to 51% in the previous year in which losses are sought to be set off. There and here the minimum number of 51% must be the same. In that case, that particular closely held company losses can be carried forward by this closely held company. Okay na? Yes. Provided 51% of shareholders must be the same with respect to the last day of the previous year in which losses are occurred, with respect to last day of the previous year in which losses are sought to be set off. But one exception is there, unabsorbed depreciation. Even though there is a subsequent change in shareholding, we can carry forward the unabsorbed depreciation even though there is no matching of 51% in the both the cases. And the last one, startup companies. In case of startup companies which are covered under section 80 IAC, then also such losses can be carried forward even though they have not satisfied this criteria. Correct? Yes. This is important chapter, that is nothing but set off and carry forward of losses. Next, clubbing of income, not important chapter at all. Exam point of view not relevant, but here two topics are important. Topic number one, cross transfer. I repeat, what? Cross transfer. What is that? Salman Khan and Salman Khan wife and another fellow is called as Amir Khan and Amir Khan wife. Now what happened? Salman Khan transferred the money to Amir Khan wife, let us say 10 crore. Whereas Amir Khan transferred to Salman Khan wife 10 crore. Now Salman Khan wife, she deposited in the bank and she got the income of 10 lakh. Whereas Amir Khan wife, she also deposited in the bank and she got the interest of 10 lakh. Everybody in the class, what is the treatment of this 10 lakh? Whether it will be clubbed or not? Yes. If so, in whose hands it will be clubbed? Shahrukh or Amir or else Shahrukh Khan wife or Salman or Amir or Salman Khan wife or Amir Khan wife? Whose hands? Answer, it will be clubbed in the hands of ultimate transferor. First, please try to understand this particular thing. Here there are two transfer 1 and transfer 2. This is a complement to this and the other one is complement to this. Both are complement to each other. Both are consideration for other topics. Correct? Yes. Now go and ask Mr. Salman, hey Salman, why you have transferred 10 crore to his wife? If you say like this, he will say like that. Okay, fine. He will say that one, sir, if I transfer directly to my wife, clubbing is applicable. That is the reason I transferred to other wife. Okay. Then your next doubt, sir, then it is loss for you kada. No, immediately that fellow will transfer to my wife. So this is consideration for that. That is consideration for this. This is called as cross transfer. In case of cross transfer, that particular income is taxable in the hands of ultimate transferor. Therefore, Amir Khan wife 10 lakh income is to be clubbed not in the hands of Salman, is to be clubbed in the hands of Amir Khan. Okay, na? Yes. But one small change. Now, Salman Khan wife income also will not be clubbed in the hands of transferor Amir. it will be clubbed in the hands of Salman. Okay, na? Yes. One small change. Here, two fellows are there. First one is called as Mr. Okay, Junior NTR is there. It transferred to Mahesh Babu wife, let us say 8 crore. Whereas Mahesh Babu transferred to Junior NTR wife, that is 9 crore. After that, Mahesh Babu wife, she deposited in the bank and she got 8 lakh. Whereas Junior NTR wife deposited in the bank and got the interest of 9 lakh. Now, what is the treatment of 8 lakh? This 8 lakh will be clubbed in the hands of Mahesh Babu wife or Junior NTR or Mahesh? Mahesh. Is it clear? Yes. Come to Junior NTR wife. What is the treatment of this 9 lakh? For your info, out of 9 lakh, two figures we have to consider. First one is 8 lakh, 1 lakh. 8 lakh is only part and parcel of cross transfer topic. Kada? Yes. This 8 lakh will be clubbed in the hands of Junior NTR. But 1 lakh will not be clubbed. 1 lakh is not at all clubbed in the hands of Mahesh Babu. It will be taxable in the hands of Junior NTR wife only, because your cross transfer is applicable only for 8 crore related income, because each should be the complement to other. Your complement to other means a common figure must be there. Your common figure is 9 crore or 8 crore. Simple word, whichever is less. The least amount is nothing but 8 crore. Correct? Yes. Chalo. Another important topic, minor income. But inter level it is most relevant. Final level is not that relevant. But anyhow, in case of minor off ticket, their income will not be taxable in their hands. That income will be taxable in the hands of minor itself. No. It is taxable in the hands of no. First one, parents' marital status subsists. In that case, it will be clubbed in the hands of either of parents whose total income is higher before considering clubbing provisions. Kada? Yes. If parents' marital status does not subsist, if they took the divorce, in this case, it is taxable in the hands of the legal guardian. Correct? Yes. Clubbing provisions are not applicable in two circumstances. Number one, if the minor child is suffering from permanent physical disability or any kind of mental retardation, no clubbing. Second possibility, if the minor got the income because of his skill or talent or hard work or knowledge, in this case, that income will not be clubbed. Okay, chalo. Last sentence of this chapter, somehow important for even final level also. This is as follows. What? Husband, wife. Wife wanted to start the business. For that business, husband, he has given the capital contribution. Capital contributed by husband to wife. After that, wife started the business. Now, the business profits are taxable in the hands of whom? Husband or wife? That is the question. Answer. If you have given as a loan, simply she will pay the interest. Interest is taxable in your hands and interest will be deducted as a expenditure. Correct? Yes. Suppose he has not given as a loan, simply is like your partner kind of. Not partner, not formal partner, normally. Then what would be the answer? In that case, come on, the answer is as follows. The profit is taxable on what basis? Pro rata basis. Profit is equal, profit taxable is equal total profit into capital as on the first day of the previous year divided by total capital as on the first day of the previous year. So you have to segregate or you have to apportion based on the profit or based on the capital exists as on the first day of the previous year. So this is the way we have to do segregation and we have to do the clubbing. Okay, na? Yes. With this, we have done with the topic called as set off and carry forward, as well as we have done with the topic called as clubbing. We have done with the topic that is number one, basic concepts. First one, basic concepts we have completed. As I told you earlier, tax rates are most relevant, most important. And one more topic is relevant, that is section number 4, exceptions. Repeat the exceptions. Non-resident carrying shipping business, person leaving India permanently, AOP or BY formed for temporary purpose, transfer of property with an intention to avoid payment of tax. Last one, discontinued business. After that, we have completed another part, that is ICDS. ICDS does have any effect on AMT? Yes. Does have any effect on MAT? No. Now, because of ICDS, shall I need to maintain separate books of accounts? No. Income is taxable on gross basis or net basis? Gross basis. Total 10 ICDS are there. As for first ICDS is concerned, gap, going concern, accrual and consistency is there, but materiality and prudence is not there. And next number, you can't change the accounting policies unless otherwise there is a reasonable cause. After that, we have completed another part, that is nothing but in case of valuation of inventories, cost or NRV, whichever is lower must be considered, but in case of dissolution of the firm, we need to take only NRV. After that, third one, we have covered construction contract. In case of construction contract, retention money is also taxable. The expected penalties will not be allowed. In case of revenue recognition sale of goods, we need to consider when there is a reasonable certainty about cash inflows. After that, we have completed another part. In case of sale of services, POCM basis we have to follow. If the contract duration is less than 90 days, then we have to recognize only once it is got completed. After that, we have completed another part. In case of interest, SLM basis we have to go for that. Whereas in case of interest on IT refund and all, we need to consider only receipt basis. After that, we have done with another part, that is fixed assets, that is same as depreciation. And after that, we have completed another part, that is nothing but borrowing cost. Whatever the borrowing cost, that must be debited to P&L account once it is capitalized. But before capitalization, it must be added to cost of asset. And next number, in case of provision, contingent liability, contingent asset, provisions are nothing but past liability because of present event or present liability because of past event. Present liability because of past event, it also will be allowed as a deduction, okay, when there is a reasonable certainty about cash outflows. Contingent liability should not be considered. Contingent asset should be considered, provided there must be a regular assessment must be done. Once it is satisfied, then only you can recognize as a income. After that, we have covered the topic government grants. Whether government grant is revenue in nature or capital in nature, both are taxable. If it is received for the purchase of asset, reduced from cost of asset. If it is for other purpose, it is pakka taxable. There is no differentiation between revenue receipt and as well as capital receipt with respect to government grants are concerned. After that, we have done with another part, that is nothing but PGBP. In case of PGBP, section number 28 is nothing but charging section. Certain incomes are covered under the head PGBP. That is very important part. Okay. After that, we have completed section 41 also, that is not regular business income, deemed business income. After that, section number 30 to 37, these are nothing but business expenses. Section 40 is nothing but disallowance. Correct now? Yes. Section number 43B, that is expenses valued as deduction on payment basis. After that, we have completed the topic section 44 series. 44AB is nothing but tax audit, whereas 44AA maintenance of books of accounts, 44AD, 44AE and 44ADA. 44AD is nothing but presumptive income in case of goods carriages or other than goods carriage. Other than goods carriage business. 44A is nothing but goods carriers business, whereas ADA is nothing but specified professionals. And section 40 is nothing but disallowances. Okay, fine. And the important topic is section number 43B. Now these compulsory questions. Number 132, 100% important topic. 36 other deduction, 37 general deduction. These are mandatory and compulsory topics. After that, section 43B also compulsory question and 41 also compulsory question. Without these 5 topics, you will never ever get any practical question. Okay, fine. 100% they will ask PGBP question. In that question, they will place this one. Take care. After that, we have completed another part, that is nothing but set off and carry forward of losses. In case of set off and carry forward of losses, we can expect 2 to 3 marks, but no direct question. In the main question, they will add one word. Okay, the table is important. Salary chapter, there is no set off and carry forward. House property chapter allowed, but interhead adjustment is concerned maximum 2 lakhs. After that, we have completed another part, PGBP, non-speculative business anyhow allowed, but not allowed against the head salary. But speculative will be allowed only against the income from the head speculative. Whereas in case of capital gain, short term can be adjusted against short term as well as long term, but long term can be adjusted only against long term. And next one, other losses can be set off, but other than other losses, in the sense owning and maintaining of racehorses cannot be set off and cannot be set off against other head. Correct? Yes. But next number, in case of losses, you can set off only your losses. You cannot set off others' losses. Kada? Yes. There are 4 exceptions. A for amalgamation, B for business reorganization, D for demerger, L for legal inheritance. In the 4 cases, we can carry forward the losses of others. Correct? Yes. In case of change in the constitution of the firm can carry forward the losses. Correct? Yes. But in case of closely held company, the losses can be carried forward provided 51% of the shareholders must be the same as on the last day of the previous year in which losses were occurred, and as on the last day of the previous year in losses are sought to be set off. Important topic, take off. Next number, we completed another part, that is nothing but advance tax. Nana, in case of advance tax, please remember, if your estimated tax liability in the current year is about 10,000 or equivalent to 10,000, then only you are supposed to pay advance tax in 4 installments. Correct? Yes. But advance tax topic is not applicable for those senior citizens being residents who does not have income from the head business or provision. Okay, na? Yes. That is the topic called as advance tax. Take care. If you have not paid advance tax, compulsory you have to pay interest under section 234B, as well as delay payment of advance tax is subject to interest under section 234C. That is the topic related to advance tax. Okay, na? Fine. After that, another topic is there, that is nothing but DTAA. Very important chapter. In this chapter, section number 91 is there. What is that? Unilateral relief. Very good. In case of unilateral relief, there is no agreement under section 90, then only 91 relief will be granted. For that purpose, steps are as follows. Step number 1, total income, total tax. Adjust, what is the next one? Average Indian tax rate, average foreign tax rate. After that, you have to calculate unilateral relief. That is nothing but foreign income which is subject to double taxation into lower of average Indian tax rate or average foreign tax rate. Next number, out of final tax liability, we need to deduct the unilateral relief. And next topic, equalization levy. In case of equalization levy, the payer is resident or non-resident who is having PA. Now, payee is nothing but non-resident who does not have PA. Whenever you are making the payment, that too the payment is more than 1 lakh, that too for business or provision purpose, then you have to deduct and remit at the rate of 6%. Otherwise, you have to pay interest as well as penalty, and 100% will be disallowed. Suppose if you pay the same, deduction anyhow allowed, and in the hands of opponent, that is exempted under section 10 subsection 50. And the most important chapter, compulsory chapter, that is nothing but TP, transfer pricing. In case of transfer pricing, first we have to check whether 92C applicable or not. For that purpose, 2 conditions, A must be there and B must be there. What is A? Associated enterprise. First, you have to check the relation. Now, shareholding 26%, board of directors 50%, raw material 90%, sales 100%. Next, intangibles 100%, loan guarantee, bank guarantee 10%, loans given 51% of book value of total assets. That you have to check it. In case of individual, opponent is a relative. In case of AOP, BOI and all, now minimum 10%. Now this criteria you have to check it. Next number, there must be international transaction. At least one of the fellow must be a non-resident. And next number, BA, that is nothing but specified domestic transaction. At least the transaction value must exceed 20 crore. 100% you will get one question and one MCQ question in case of TP transfer pricing. Now methods are as follows: cup method, cost plus method, resale price method, profit split method, transaction net margin method. Very good. After that, we have done with the topic called as residential status and scope of income. In case of residential status, first one, in case of companies, all Indian companies are resident. In case of foreign companies, you have to check the poem. Now, for poem purpose, you have to check the ABOI test. For ABOI test purpose, you have to check the pace, PACSC. P for passive income, A for assets, S for salaries, E for employees. If pay is satisfied, then ABOI test passed. If ABOI test passed, you have to check the majority board meetings held in India, then resident. Otherwise, it is non-resident. After that, we have covered the scope of income. Indian incomes are always taxable. Foreign incomes are taxable in the hands of RBOR, but not taxable in the hands of RBNOR and NR. But one kind of foreign income is there where it is control and the particular business is controlled from India or provision is set up in India. But ultimately the income accrued and that received is also everything is in abroad. In that case, that is called as foreign income. That is pakka taxable. Correct? Yes. Taxable are in the hands of RBOR, RBNOR, NR. After that, we have completed another topic that is called as non-resident as well as NRI. In case of NRI, that special provisions are as follows: 115C2, 115I are applicable. What is the meaning of 115C2, 115I? Special tax provisions for NRIs. Now, if they have specified foreign exchange income from the specified assets, that is taxable at the rate of investment income taxable at the rate of 20%, whereas long-term capital gain is taxable at the rate of 12.5%. Next one, in case of non-resident, 115A is there. What is 115A? Tax rates applicable for, come on, interest, royalty, fees for technical services. That is 115A. Whereas 115AB is there. That is nothing but overseas financial organization. And 115AC is also there. GDR. 115AD is there. The income of FII, foreign institutional investor. The TDS provisions are as follows: 196B, 196C, 196D. Okay, na? Fine. After that, we have completed another topic, section 115BB, that is nothing but casual income. Whereas another topic is there, 115BBA, that is the income earned by non-resident as well as foreign sports person, foreign sports body, foreign entertainer. Altogether, the income, whatever it may be income, is taxable at the rate of 20%. But umpires are not covered and match referees are also not covered. Very important chapter. And presumptive taxation also there. 44B, 44BB, 44BBA, 44BBB, 44BBC, 44B for, come on, what is that? Shipping business. BB for extraction of mineral oil. BBA, aircraft. BBBB, civil construction. BBC, cruise ship. The percentages are as follows: 7.5%, 10%, 5%, 10%, and 20%. Correct? Can I declare lower income? Here, lower income no. Here, yes. Here, lower income no. Here, yes. Here, lower income is no. Next number. After that, we have completed another topic. TDS provisions also we have completed with respect to non-resident. 192, that is nothing but salaries. I repeat, salaries. Salary received by non-residents is also taxable. Correct? Yes. After that, we have covered another topic, that is nothing but 94B, 94BB, casual income. After that, we have completed 194, what do you call? LB, LC, LD. Correct? Yes. After that, we have completed another topic, business trust related topic also we completed. Kada? Yes. These are the TDS section. And just now we covered some more TDS section, 196B, 196C, 196D. These are the different TDS sections. Okay? Chalo. Now, after that, we have completed another chapter, that is nothing but residential status, scope of income. All the things are one part and parcel of one topic. International taxation topic, most important, take care. After that, we have completed the topic called as theory chapter bar. You know what? Some people wanted to establish some units in India. Example, Lulu Mall. He wanted to start their operations in Kerala. For that purpose, what are the tax consequences he want to know? For this purpose, non-resident may approach the bar. Correct? Yes. Bar constituted by central government consisting of 2 chief commissioners of income tax. Now, non-resident can approach as well as resident. On behalf of non-resident can approach. Resident for his own transaction may approach, and as well as PSU can approach. and germ matters also they may approach. Correct? Yes. It is not a free, it is a fee. And next number, you have to pay 10,000 or notified fee, whichever is higher. If you want, you can withdraw within the time span of 30 days, and maximum time limit for passing the pronouncement is 66 months. And if you satisfied, well and good. Otherwise, you can go to High Court within the time span of 60 days. Very good. Important topic, take care. If it is pending before court or IT authorities or ITAT, no one can go for bar. Kada? Yes. But in case of PSU, even though it is pending before IT authority and ITAT, they may approach. Important topic, take care. After that, we have completed one bunch of these chapters, that is nothing but assessment procedures. First one, SSC hero wanted to file the return of income. For that, 139 subsection 1. What is that? Voluntary filing of ROI. 139 subsection 3. Last return. Correct? Yes. 139 subsection 4. Late return. 139 subsection 4C. Filing of return by institution or universities or hospitals or media houses or trade unions, whatnot, everything is covered. If their total income before claiming exemption under section 10 must exceeds basic exemption limit of 2,50,000, then compulsory they have to file the return of income in ITR number 7. Okay. After that, we have complete the topic 139 subsection 5. That is nothing but revised return. 139 subsection 3 is called as last return. Last return is mandatory only for the purpose of carry forward of losses, but not compulsory in case of house property and unabsorbed depreciation. Whereas 139.4 late, in case of late, you can file within the set time. What is the time? 3 months prior to end of relevant assessment year or completion of assessment, whichever is earlier. Next number, 139 subsection 5. What is that? Revised return. SSC already has filed the return. In that return, there are some mistakes. To rectify the mistake, SSC can file the revised return. The time limit is also the same. 3 months prior to end of relevant assessment year or completion of assessment, whichever is earlier. After that, we have completed another topic, 139.9, defective return. Nowadays, it lost the charm. Leave it. And 140, signing and verification of that. In case of LLP, who has to sign? Designated partner. In case of HEF, who has to sign? Karta. If Karta is not in India, any adult member can sign. 139 subsection 8A, that is called as updated return. In case of SSC, who missed to file the return or who forgot to offer certain income, he can file the updated return within the time span of 2 years. But you have to pay additional tax also as per section 140 capital B. Correct? Yes. Now, fine. Next topic. After that, we have completed another topic, 139A. You know what? PAN number, permanent account number. Important topic. Okay? Chalo. After that, next topic, Nana, 142 series. Now, that is nothing but notice. Notice for the purpose of what? Return of income. If you have not filed the return of income, I will issue a notice asking you to file the return of income. That too, once I issue notice, irrespective of your income levels, compulsory you have to file the return. After that, 142 2A, that is direction for special audit. Whenever assessing officer is in the opinion that books are required to be audited having regard to DBMS networking, D for doubts, B for bulk, M for multiplicity of transaction, S for specialized nature, N for nature and complexity, I for interest of revenue. In this case, they may refer the same to a chartered accountant for the purpose of special audit, or they may refer the same to cost accountant for the valuation of inventory. Chalo. After that, 143 series completed. 143.1, that is nothing but intimation or processing of return or summary assessment. 143.2, that is nothing but notice for come on, scrutiny assessment. 143.3, scrutiny assessment or else regular assessment. Okay, the time limits are as follows. This is 9 months, this is 3 months, this is 12 months, 1 year. After that, we have completed the topic section 144, best judgment assessment. When you are not cooperating, when you are negligent, when you are not participating, automatically assessing officer may invoke the provisions of 144. After that, we have completed the topic called as 147. You know what? Escaping assessment. Whenever SSC income has escaped the assessment, then assessing officer may invoke the provisions of section 147 by giving the notice under section 148 by following the procedure under section 148A within the time specified under section 149 with the approval of some people under section 150. Now, after that, they will pass the order under section 147. Now, the maximum time limit is as follows. The time limits are 3 years. Correct? Yes. But in some cases, if your income exceeds 50 lakh, what is the time limit? 5 years. This is the time limit. Understood? Yes. Now, time limit is same, 12 months a year. Next number, another beautiful topic we have completed, search and seizure. In case of search and seizure, if assessing officer is reasons to suspect, reasons to believe that if you have black money or else you have not complied with the summons or notices, in that case they may invoke the provisions of search and seizure. They can seize the assets also and they will do such assessment for a block period. How long it is the block period? 6 years. And from the first day of the previous year to up to the date of last day of authorization of search, they will do such assessment at the rate of 60%. No such as no health and education, but penalty will be levied at what rate? 50% of tax on undisclosed income. After that, we have completed another topic section appeals. After that, we have completed the topic revision. After that, we have completed the topic rectification. All of you, appeals. Channel wise only we can go for appeal. What is the first appeal? CIT appeal. Second one, ITAT. Third one, High Court. Last one, Supreme Court. CIT appeal. This is called as first appeal. SC can approach within the time span of 30 days. After that, within 1 year, they will pass the order. Now, ITAT, we can approach ITAT within the time span of 2 months and they will pass the order within the time period of 4 years. After that, High Court we can approach within 120 days. They will pass the order. Time limit is not known. And High Court we can approach within the time span of 90 days. But for your info, additional grounds can be admitted because you're not ignored the same because of cholesterol. Then only it can be accepted. And one more thing, no one can review their own judgment. Only one fellow can review. That fellow is nothing but Supreme Court. And next number, ITAT is called as final fact finding authority. And take it for granted, certain things are not appealable. Number one, interest under section 234 ABC cannot be appealable. And next number, that order under section 264 also not appealable. Correct? Yes. These are the things not appealable. Next number, with respect to question of fact is concerned, we cannot go to High Court as well as Supreme Court. Take care. After that, we have completed the topic called as revision. 263, 264. 263. The order passed by a assessing officer is erroneous and prejudicial to interest of revenue. In this case, after giving the opportunity of being heard, and they will revise the order within the time span of 2 years. And total measure or partial measure? Total or partial? Partial. OPPO must be given or not? Yes. Next number, 264. It is done in favor of SSC. Correct? Yes. How long it is? 1 year. Total measure or partial? Total measure. Next one, rectification of mistake. Examiner's favorite topic 154. The order passed by a assessing officer is having so many mistakes. In that case, they can rectify by themselves under section 154 on own motion or on the application. What is the time limit? 4 years. Total measure or partial measure? Partial measure. Chalo. That's all. These are the topics we have completed so far in the last session. Now, I want to go for most important chapter, that is called as 100% you will get the question. Okay. The question weightage is minimum 40 marks. The chapter is assessment of various entities. Okay. Practical question. How it is 40 marks? Ante 40 marks real. 100% you will get 40 marks. But not from one chapter. If you want to get that 40 marks, you should know salary, you should know house poverty, you should know PGBP, capital gain, computation, deductions, everything you should know. Then only you can get this 40 marks. Anyhow, the persons are as follows. First one is called as individual. No, individual topic not important for you. Okay, but this topic is important for MCQs. This topic is important for DTAA. In DTAA chapter, 99.999% they will ask individual oriented question. Correct? Yes. But be careful. Compulsory you have to solve the problem maybe with the provisions of 115 BSc or maybe with the provisions of normal provisions. Okay, either way you have to solve it. Be careful. Maybe 115 BSc is applicable or normal provisions are also applicable based on the question. Take care. Next number, in case of individual, rebate will be provided under section 87A. But slab rates are completely different for 115 BSc and normal provisions. So, uh, keen attention is required for this computation. Take care. Important itself. Assessment of individual important. But they will never ask single direct question out of individual. They will ask maybe in MCQs. They are tempting to give these kind of questions. They will give some figures and say, what is this tax liability? Small a, 40 lakh, 400 and so and so you will give. Small b, 38 lakh, so and so. Next one, like this ABCDs you will give. Okay, what will you do? Compulsory you have to do computation part, you have to calculate, then only you know. Kada? Be careful, important. Next one, HEF. Very, very, very unimportant chapter. Not at all important, take care. But I want to tell you 1 or 2 points. Nowadays, those girls who born in the family will have equal right of that of son or not? Yes. Those girls who born in the family is called as family members as well as co-partners. Correct? Huh? Yes. Those girls who came outside the family, they are not a co-partner. After all, they are a family members. Co-partner only can demand the partition, but family member cannot demand partition. Correct? Huh? Yes. Best example, your daughter. Yes, your daughter born in your family, she can demand what your son demands. No, that same she also can demand. But your wife cannot demand like this. Okay, fine. The reason she is a family member, but your daughter is a co-partner because your daughter born in your family, your sister born in your family, therefore your sister is also co-partner. Correct? Huh? Yes. Nowadays, female members also can be a co-partner and female members can be a karta also. Correct? Huh? Yes. Why not? Female women also can do the management of the HEF. But one important topic is that if you receive share income from HEF, that is exempted under section 10 subsection 2. 2. But warning, in case of married daughter hands, that exemption is not applicable because she is not our family member. Once she married, she is the family member of our in-laws. Correct? Yes. Therefore, even though she is getting our amount from our family, that amount is not exempted in our hands under section 10 subsection 2. Take care. Important chapter. Next number, 100% you will get one question out of partnership firm or LLP. 100% you will get question. But the weightage of the question, minimum 2, maximum 18. Compulsory. Minimum 2, at least one MCQ or at least one bit they will ask. Otherwise, 18 marks. But one sweet warning, if they decided to give 18 marks question, mat question they will not place for 18 marks. Instead of that, they will ask 2 marks or 3 marks or 4 marks. Case law question only they will ask for mat. Okay. But openly I am telling you, 99% examiner attempt to ask about mat. 1% they will ask about firm or LLP. But common subjects are as follows. PGBP common. Correct? Capligan is also common. Okay, na? Yes. Only the difference is here AMT is applicable, but here MAT is applicable. Okay, na? So my suggestion, first you have to prepare MAT. Okay, don't do single mistake in book profit. How to do the problems, how to do preparation, I will tell you. Take the question first, okay, and take the calci. With your fingers, you should able to do. Take the net profit as per P&L account, plus minus minus, like this. You can do the same and compare the book profit. Okay, na? Yes, like that you have to do. First, let me tell you the topic MAT. MAT is applicable for all companies, kada? Yes, but not applicable for life insurance company. But you have to take the net profit, which is as per Companies Act or Income Tax Act. Income Tax Act, no, as per Companies Act. Okay, na? Yes. After that, you have to do some positive as well as some negative adjustment. Tell me positive adjustment. I, R, P, S, E, D, R, A, F, N, C, Z, R. We, doctor, AFNCLR. I for income tax paid or payable. R for amount withdrawn from or transferred to reserve. P for provision for uncertain liability, losses of subsidiary. E for exempted income, related expenditure. D for dividend, depreciation, deferred tax, diminishing in value of asset, amount standing in the revaluation reserve. A for expenses related to share income from AOP BY. F for expenditure related to foreign company where the incomes are taxable at a rate lower than the MAT rate. N for notional. You are adding means already it have deducted. Which one will be deducted? Notional loss. Notional loss on account of exchange of units of business trust for the shares of SPV. CZ, actual capital gain, or for expenses related to royalty income under section 115 BBF. Next number W, amount withdrawn from revaluation reserve. E for exempted income under section 10, 11, 12 except 10AA. D for depreciation except dip on revaluation. R for amount withdrawn from revaluation reserve. BF brought forward loss or unabsorbed depreciation. S for sick industry, tonnage tax, deferred tax, AOP BY income, foreign company income which is subject to tax lower than the MAT rate. N for notional gain, CL for capital loss, R for royalty income under section 115 BBF. Now after that you will get the book profit, correct? Yes, but it is subject to rate at the rate of 18.5% or 15%, 15%. And MAT credit is equal MAT minus normal tax. It can be carried forward for a maximum period of 15 years. It can be adjusted in the year in which MAT liability is higher or normal liability higher. What is the form number you have to obtain from chartered accountant? Form number 29B. Whereas form number 29C is also there, B is also there. Here we need to take form number 29, B na C na? B. Whereas in case of AMT we need to take form number 29C. Chalo. Now it's time for AMT. Important topic itself. Follow. Step number 1. You have to calculate total income. I repeat, you have to calculate total income. After that, you have to calculate total tax, normal tax. After that, you have to calculate adjusted total income. How to calculate adjusted total income? Tell me. First, you have to take the total income. After that, we have to add deduction under section 10AA. You have to add deduction under section 35 AD. You have to add depreciation under section 35 AD and depreciation under section 32 in relation to deduction under section 35 AD. After that, we have to add back one more topic, deduction under section 80 IA to 80 TTB. TTB na TTC na? Except TT. Except TT. Okay, fine. So these are the topics you have to add except 80 P, except 80 capital P. All of you listen this one. Now adjusted total income purpose, first you have to take the total income. If 10A is there, you have to add back. 35 AD is there, you have to add back. And depreciation in relation to 35 AD must be deducted. And 80 H2 TT, I repeat 80 H2 TT must be added back except 80 capital U. Chalo, after that 80 capital P. After that you will get adjusted total income. On that you have to calculate that AMT rate at the rate of 18.5%. And you have to calculate normal tax or AMT whichever is higher. If AMT is higher, then automatically AMT can be carry forward. Correct? In the name of AMT credit. AMT credit formula, AMT minus normal tax. It can be carried forward for a maximum period of 15 years. Chalo, this is the topic called as AMT. Individual, as I told you, important. HEF, not at all important. After that, AOP BY, that is not important topic. But in case of AOP BY, only the things are as follows. Number 1, AOP will pay salary, interest, remuneration to their members. Take it for granted, in the hands of members, it is not taxable, whereas in the hands of AOP and BY, it is not allowed as deduction. It is disallowed under section 40 small BA. Okay, chalo. But here two things are there. The tax rates are as follows. in case of AOP, BVI tax rates. Number one, shares defined or not defined, that is the question. Answer, shares not defined. The two, if any member is taxable at higher rate, automatically that entire income of AOP is taxable at higher rate. Next one, no member is taxable at higher rate, then entire income of AOP is taxable at MMR. Next number, second unit, shares are defined. In that case, anybody income is more than BEL or not? Yes. If it is more than BEL, immediately the particular person is taxable at higher rate or not, you have to check it. Yes. In that case, the particular share is taxable at higher rate, others amount is taxable at MMR. Whereas if no higher rate is there, entire income is taxable at MMR. Last but not least, shares are defined and everybody income is not more than BEL. That means less than BEL. In that case, the income of AOP BY is taxable at individual rates, and share income from AOP BY is also taxable in the hands of individual. No doubt double taxation is there. For the purpose, rebate also will be granted. Correct? Yes. Not important. 100% unimportant topic. Take care. Not important. Next number, cooperative society. Not at all important. Not important. In case of cooperative society, AD capital P deduction will be given. Okay, chalo. After that, political party. Not at all important. But in case of political party, that topic did exemption will be allowed under section 13 capital A. Whereas another topic is there, electoral trust. Not at all important. In case of electoral trust, 13 capital B exemption will be allowed. Now in case of political party, books must be maintained and audit must be done and return must be filed. Okay. And one more thing, if donation exceeds 20,000, compulsory you have to maintain donor details. I told you everything, but not important. Electoral trust, 95% of your current year receipts, first last year receipts must be donated to other political parties. Okay, not important. Ignore. Next number, somehow important topic, business trust, and least important investment fund, and another least important thing, BIS. Yes, securitization trust. In case of business trust, start. I am the business trust, you are the unit holders. Start. Number one, interest received by business trust, exempt. Distributed to members, pakka, taxable. Dividend received from by business trust, exempt. Distributed to you, pakka, taxable or exempt? No, depends. It is taxable if company followed 115 BAA. Whereas it has not followed, automatically in the hands of business trust it is anyhow exempt. In the hands of unit holder also pakka exempt. Next number, in case of rental income received by what you call business trust, it is pakka exempt. In the hands of unit holder, it is pakka taxable. I for investment trust, investment fund. Tell me one word. Which income is taxable in the hands of investment fund? Business income. Enough. If you know this word, other than business income is exempt in the hands of investment fund. In your hands, reverse. Business income is tax exempt. Other than business income is taxable. In the hands of securitization trust, what is the answer? Taxable or exempt? Only one word. One not sentence, one word, exempt. In my hands, exempt means it is taxable. In the hands of unit holder. Tell me TDS section 194 LBA, LBB, LBC. This is important only for MCQ's sake. Okay na? Chalo. Next topic. Another topic, partnership form. Somehow important chapter. 100% you will get one question out of firm and LLP. Maybe 2 marks or 18 marks. Depend upon your stars. Okay na? Depend upon your stars and your astrologer positions, it will be decided. But my suggestion, math is most important than this one. Take care. Ready? Start. In case of partnership firm and LLP, tax rate is 30%, whereas such as up to 1 crore, nothing. If it is more than 1 crore, 12%. Correct? Yes. Health and education is at the rate of 4%. MAT is applicable or AMT? AMT. MAT is not applicable. But actually, AMT is applicable for individual HEF, AOP, BOI, AJP only. Actually, Vande Mataram got completed 150 years. You know this? 150 years completed for Vande Mataram. Vande Mataram has started before independence itself. We got independence 75 years back. Kada. That is the reason throughout this year, our Indian government decided to celebrate Vande Mataram events. Okay, in the sense, wherever function is going on, they wanted to sing a Vande Mataram for next one more year. Okay, don't ask me which cinema movie, which cinema song it is. But anyhow, that is the reason everywhere you will find Vande Matarams. In YouTube shorts also you will find more shorts kind of Vande Mataram. So don't panic, okay? Fine. So try to complete your attempt in this examinations, okay? Try to pass, try to come out with flying colors in this coming examination. Hope it is your last exam as a student, okay? Next, once you qualified also you may have so many post-qualification courses that anyhow you can do. ESA, CISA, these kind of things are there, that also you can do. CISA means system auditor. Once upon a time as a chartered accountant, if you want to go for bank auditor, you no need to know system procedures and all. But nowadays not like that. Compulsory you must have the knowledge about the system auditor. That is ESA, CISA, like that. Okay, fine. Chalo. Next, in case of LLP, most important topic, designated partner will do sign. He is the signing and verification authority. That's all. But here one important topic is there. Nowadays what happen? Companies can convert it into LLP, or partnership firms can also convert it into LLP. In that case, you have to satisfy the conditions specified under section 47 subsection 13b. That condition you have to satisfy. If you satisfied, the losses of predecessor can be carried over by the successor. The losses of predecessor can be carried over by the successor. Okay, take care. That's all. And next topic, another topic is there. That is nothing but trust. One of the important chapter. What is the meaning of charitable trust? Subject to conditions. R for the charitable trust can claim exemption under section 11 and 12 subject to these conditions. R for registration. Charitable trust must be registered. A for the activities must be confined to India. A for audit. A for application of income. How much percentage? 85% of their income must be applied for charitable. R for return must be filed. A for accumulated. Accumulated amount must be kept in the specified investment covered under section 11 subsection 5. If you satisfy these conditions, automatically the particular charitable trust can claim exemption under section 11 and 12. Once upon a time, most important topic. Nowadays, just important topic. Take care. How to do the problem? First, take the gross receipts. For the gross receipts purpose, first business receipts you have to take it. I repeat, business receipts. Okay, that figure you can take a outer column. After that, you can take income from property held under trust. I repeat, property held under trust. That thing also you can take it. Next number, after that, you can take another figure that is called as capital gains. Sometimes capital gains also will be there. That also you can take it. And last but not least, sometimes you can take the figure that is nothing but donations. But out of donations, two donations must be excluded. One is a corpus donation. Second one is called as anonymous donation, which are taxed separately. The donations out of that capital donation, corpus donations and anonymous donations you have to eliminate. Balance donations you can take outer column, then you will get gross receipts. Out of gross receipts, you can deduct MPAA, maximum permissible amount for accumulation. At what rate? 15%, that you can eliminate, and balance 85% will be there, that is called as amount to be applied. These out of these amount you have to deduct application of income. You have to deduct application of income, may be revenue purpose or maybe capital purpose. All the things can be deducted, but one thing should not be deducted, that is nothing but depreciation shall not be deducted if capital expenditure already allowed. After that, you will get the net figure. That net figure is only taxable as per the rates applicable to AOP and BOI. that is the rates applicable for charitable trust. Once upon a time, this topic is somehow important for exam. Nowadays, B category topic. Okay, occasionally they are asking the question. Take care. Subject to conditions of are written, registration, application, activities confined to India, accumulation, as well as return must be filed. Subject to these conditions, charitable trust can claim exemption under section 11 and 12. And the proforma is also given there. Take care the proforma. Very important concept it is. See the page number 8.7. See the table. Taxation of trust. First you have to take the gross receipts. Other than corpus donation, other than anonymous donation, you can take the figure outer column, and capital gain amount you can take it. Out of this, you have to deduct amount to be accumulated 15%, then maximum amount to be applied minus what is the amount applied for charitable purpose you can deduct, and deemed application also can be deducted. Balance amount is anyhow taxable as per normal rates, but anonymous donation always taxable at the rate of 30% under section 115 BBC, whereas some incomes are taxable at the rate of 30% under section 115 BBI. Then you will get total income. Okay, this is the tax rates and the total income of computation of charitable trust. This is the topic number G related to trust. And the next topic number, we completed F, that is MAT computation. We have done it, important. And E also complete, that is nothing but securitization trust. And business investment fund, we completed. Business trust also completed. And most important topic, that is partnership firm as well as LLP. See the word. Remuneration will be calculated in case of partnership firm under section 40 small b. Based on the book profit, it will be calculated up to first 6 lakh. What is the answer? 90% of book profit or 3 lakh, whichever is higher. Then in case of balance, how much it is? 60% of book profit. How to calculate book profit? You know, take the net profit plus or minus adjustment. After that, add remuneration if debited, and add interest if you debited wrongly. Okay, then you will get the book profit. Based on the book profit, you can calculate this one. Okay, chalo. Whereas interest on partners capital, how much is the maximum amount? 12% per annum is only allowed. Next number, in case of LLP, just now I told you, in case of LLP, the losses can be carried forward only subject to conditions specified under section 47 subsection 13b. If these conditions are satisfied, the losses of predecessor LLP can be carried over by successor. Okay, very important theoretical question as well as practical question is partnership form and LLP. But when compared to this topic, MAT is most important. Take care. Okay, now fine. Now we are going to cover another topic, another chapter, important chapter, that is nothing but IFOS. Important topic, IFOS. See the word income from the head other sources. Nana, this is the last head as well as residuary head. Those items which are not covered under other heads automatically may come under the head IFOS. For the purpose of IFOS, these are the things you have to check it. First one is called as interest income. I repeat, interest income is always covered under the head IFOS. Interest on savings bank, interest on current account, interest on deposits, interest on bank deposits, interest on GDR, whatnot. Everything is covered under the head IFOS. But wait, some income are taxable under the head PGBP. Number one, lending business. Come on, what? Lending business. My business itself, lending business. Example, Muthoot Finance, Shriram Finance. Okay, these business itself, lending business. Then IFOS head will not be applicable. Only PGBP. Next one, trade receipts. What is the meaning of trade receipts? Listen, I sold the goods to her, but she made late. Once she did the late, automatically she will repay along with the interest. That is also business kada? Yes. Last number, now amount received as part of business. Example, I want to take ITC dealership. For ITC dealership purpose, I need to pay 1 crore as a deposit. On that 1 crore, obviously the company will pay interest to me, right? This I have not received on my savings. This is I have received because of my business. Kada? That is the reason. It is called as taxable under which head? PGBP. Take care. Next number, casual income. Already we covered. This casual income is covered under section 115BB. Correct? Yes. At what rate? 30%. And one more topic is there, online games. Online games is covered under section 115BBI at the rate of 30%. Correct? Yes. After that, another topic is there, that is nothing but advance money received and forfeited. Correct? Yes. Advance money received and forfeited by the person because of failure to transfer the capital asset. Now, in this case, you have to check the dates. Data before 1/4/2014. Then answer is reduced from cost of acquisition. Answer, if it is forfeited on or after 1/4/2014, taxable under the head IFOS. Very good. Next number, in case of interest on enhanced compensation, interest on additional compensation. In case of compulsory acquisition, they will take your property and they will pay compensation. In the time of paying of compensation, they will pay some interest. Interest is taxable only at the rate of 50% under the head IFOS. Balance 50% is allowed as deduction and another 50% is only taxable. After that, another important topic, premium on issue of shares. I repeat, premium on issue of shares by which company? Closely held company. When do you know it is a premium? Dash is more than dash. Face value must be more than the issue price. Correct? Yes. But how much is taxable, you know? Sorry. Issue price must be greater than the face value. But how much taxable, you know? Difference between issue price minus fair market value. Correct? Yes. But it is not applicable for widely held company. It is only applicable for closely held company. Very good. After that, another topic is the most important topic, that is called as gift. Gift 3 in number. First one is called as cash. Second one is called as mobile. Next one is called as immobile. In case of cash, the aggregate value of cash gift exceeds 50,000 during the year, automatically entire amount is taxable. In case of mobile asset, the aggregate fair market value of the mobile assets received by the people exceeds 50,000. It is covered under the head IFOS. But the mobile assets are nothing but only capital assets are only covered. Correct? As I told you earlier, if I give Pulsar bike 1,50,000, not taxable because it is not a capital asset. So it is not a mobile asset as per the definition. Correct? Yes. Next number, immovable property, most important topic. In case of immovable property, you have to check the transaction, single transaction wise you have to check it. Now, each and every immovable property you have to consider. Now, if the stamp duty value of immovable property, okay, exceeds 50,000, automatically it is taxable. In case of inadequate consideration, the stamp duty value minus consideration at least must exceed 110% of the consideration, then only it is taxable. Correct? Yes. Important topic, take care. But gift is not taxable in some cases. Number one, gift received on occasion of marriage, gift received from relative, and gift received from charitable trust or hospitals or universities, like this, not taxable. Kada? Yes. So important topic, gift, most important for exam, take care. After that, another topic is there. Now, director fees. Okay, directors are two types, executive, non-executive. If you are executive director, whatever you received is called as salary. Salary is covered under the head salary chapter. Correct? Yes. Whereas non-executive director sitting fees is covered under the head IFOS. After that, we have completed another topic, that is called as in case of pension, family pension. Now deduction will be allowed. How much is the deduction? 1/3 or 15,000, whichever is lower. In case of 115 BAC, 25,000 or 1/3 of that family pension, whichever is lower, will be allowed as deduction. Very good. Next number, lottery income, casino income, anyhow taxable, but always gross income only taxable, but not the net income. Take care. Next number, in case of IFOS, we covered another topic, that is a dividend. Very, very important topic, dividend. Now, suppose I'm a company, maybe domestic or foreign company, in my hands, whatever the dividend I am distributing is not allowed as deduction in my hands. Nothing is there. But in your hands, it is pakka taxable under the head IFOS. But dividend includes deemed dividend also. 222 A, B, C, D, E, F. A for distribution of assets. B for distribution of bonus shares to preference shareholders or debenture holdings to anyone. Next one, C for liquidation. Very good. Distribution at the time of liquidation. D for reduction of capital. E for loans or advances given by closely held company to an organization or to a SSC to a person being a shareholder holding not less than 10% of voting power. Correct? Yes. Are given to any other organization in which such a shareholder have substantial interest. That is called as deemed dividend. In all deemed dividends, it is taxable in the hands of shareholders. After that, we have completed another topic, 222F, buyback. Correct? Whatever the amount I have distributed on account of buyback is covered under which head? IFOS. Next one, we covered another TDS, another deduction topic, ATM. ATM, what is that? Dividend. Dividend received as well as dividend paid at the time. Deduction will be allowed to the domestic company. Whichever is higher or lower, lower will be allowed as deduction. Okay, now, yes, important chapter. Take care. See the board, IFOS. It is a last and resurgery head. Section 56 charging section is as follows. There must be income. The two, that income is not exempted elsewhere. The two, it is not chargeable to tax under the any other head, then automatically covered under the head IFOS. And next number, any method of accounting you can follow. You can follow cash method of accounting or mercantile method of accounting. As I told you, boys have option, right? B for PGBP, OS for IFOS. They can follow mercantile or cash. Next number, casual income covered under the head IFOS. Next one, online games covered under the head IFOS. Share premium on issue of shares by closely held company. Premium formula. What is the premium formula? Issue price greater than the face value. Taxable amount is what? Issue price minus fair market value. Next number, interest received on enhanced compensation. How much is taxable? 50%. 50% will be allowed as deduction. Advance money received and forfeited before 1/4/14, reduced from cost of acquisition. After 1/4/2014, taxable. Another important topic, insurance compensation received is covered under which head? IFOS. Next number, all of you, another topic, interest. Generally, interest incomes are covered under which head? IFOS. But these amounts are covered under the head PGBP. Number one, lending business. Number two, stock in trade. Number three, investments held as a part of banking business. Number next, interest on deposit made as part of business. As a part and parcel of business, we made the deposit. On the deposit, we got the interest. That is also covered under that PGBP. Next one, most important topic is gift. But gift provisions are different for cash, different for movable, and different for immobile. Chalo. And next one, in case of gift, exceptions also there. And deductible expenses. Already in case of dividend, expenses are not allowed, but only one figure is allowed. What is that? Interest amount. How much is allowed? 20% of dividend income or actual interest, whichever is lower. Interest on security, reasonable expenses will be allowed. Employees contribution to welfare fund, it is allowed or not allowed? Allowed. Next one, income from plant and machinery, if it is taxable under that IFOS, corresponding expenses will be allowed. Next number, in case of interest on enhanced compensation, how much is the deduction? 50%. Family pension, 1/3 or 15,000, whichever is lower, is allowed. In case of 115 BAC, 1/3 or 25,000, whichever is lower. In case of other income, corresponding expenses will be allowed. In case of life insurance premium, premium not allowed as which was not allowed earlier will be allowed. Okay. Now tax rates I already told you. 115 BB casual income, what is the rate? 30%. 115 BBA unexplained cash credit, what is the rate? 60%. Surcharge is 25%. Next one 115 BBJ, not BBI, BBJ. Net winnings from online games. I never told you gross earnings. I told you net winnings. The reason you will keep on playing the things. Therefore, net figures only must be considered. What is the answer? 30%. And normal such as and health and education. All other incomes are subject to normal rates. Okay, na? With this, we have done with the topic called as IFOS. 100% they will ask one question, but don't expect direct question. In the main question, they will ask interest received on CD, corporate deposit. Corporate deposit is not your business, that is your investment, which had IFOs. That's all. And another examiner's tempting question, dividend received, which had IFO. But student will keep quiet. Automatically mark will be deducted. First you have to eliminate from business income. P&L debit given, credit given, gada, wrong. You have to eliminate. Again it will be added back under which head? IFOS. Please take care. Dividend is important. Okay? Chalo. Next, some companies will take the dividend and will pay the dividend. In that case, what you have to check? AD capital M. Correct? Huh? Yes. With this, we have done with a topic called as IFOS. Next number, examiner favorite chapter. Very, 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 very important chapter. Income from the head, capital gains. Okay. Very, very, very important chapter. Already you have covered at inter level and you have completed the same at final level. Most important topic and pro forma based question. Therefore, it is most important. Take care. Okay. Now, we are discussing the topic called as income from the head, capital gain. Section number 45 to 55A are relevant for this computation. Okay. First one, see the charging section, section number 45. You know what? Profit or gain. I repeat, profit or gain arising on transfer of capital asset is taxed under which head? Capital gain. What is the meaning of profit and gain? Profit and gain is nothing but difference between selling price and purchase price. Arising on account of what? Transfer of which asset? Capital asset is taxable under which head? Capital gain. Tell me, which are the capital assets? Capital asset includes all assets, mobile, immobile, tangible, intangible, business, personal, everything is covered. Business also covered, personal also covered. And shares held by FIS is covered under capital asset category. Okay, fine. But sorry, some are not covered. Which are not covered, you know? Stock in trade is not covered. And next one, rural agricultural land is also not covered. Come again, what? Rural agricultural land located in India. And personal effects also not covered. Come again, what? Personal effects. What is the meaning of personal effects? Personal effects means individual or HUF used the things for their personal purpose or for their dependents purpose they used it. Example, you are wearing apparel, your chappal, your handbags, your mobiles, your airpins, your bags, wallets, all are covered under the category called as personal effect. Personal effect is not covered under the category capital asset. And one more good news, your bike is not a capital asset, you know, because you know that is a mobile and you have love and affection towards your bike or towards your car also. Car is also not a capital asset. Okay, na? Yes. But wait, it excludes the following. Excludes means it includes in the capital asset category. What is that? Shares, jewelry. I know nowadays jewelry rates are increasing a lot. Kada? This year almost all 50% hike in case of jewelry. How many of you bought it? How much? How much quantity? 2 lakh worth of. What is the use? Okay. And Instead of that, you should do one course. Okay, you will get the life settlement course. Anyhow, personal effects, individual or HUF is only covered, which are using for their personal purpose, that is only covered. But personal effects exclude jewelry, personal effects excludes archaeological collections, archaeological, okay. I told you, your mother kitchen knife is a capless or not? No. But Tipu Sultan's knife is a capless or not? Yes. Your watch may not be capless, but Mahatma Gandhi's watch is a capless. Okay, na? Fine. Chalo. Next number, gold bonds. I repeat, gold bonds, deposit bonds is also not a capital asset. Next number, capital assets are two types. One is a short-term capital asset. Second one is long-term capital asset. What is short-term? What is long-term? Long-term means which is not a short-term capital asset. Short-term capital asset means which is held for a period not more than, I repeat, not more than 12 months, or in some cases not more than 24 months. When it is 12 months, when it is 24 months, as I told you earlier, gel, that is how many months criteria? 12 months. In all other assets other than gel, what in how many months? 24 months. Now gel for, jet for, zero common bond, E for equity mutual funds or equity shares, equity oriented mutual fund. L for listed securities, any securities, any listed security other than mutual funds. In mutual fund you no need to check listed or unlisted. In mutual funds you have to check equity oriented or other than equity oriented. In case of gel, if it is held up to 12 months, what is the answer? Short term. If it is more than 12 months, long term. In case of other than gel, up to 24 months, short term. Over and about 24 months, it is a long term. Okay, chalo. Capital gains also two types. First one is called as short term capital gain. Second one is called as long term capital gain. First we have to take the sale consideration minus the expenses on transfer, then net consideration minus cost of acquisition minus cost of improvement, then you will get short term capital gain minus exemption under section 54B, D, G, GA. These are the sections you have to deduct kada. Then you will get taxable short term capital gain. Whereas in case of long term, same answer is applicable. Only the thing is all exemptions under 54 are applicable. Correct? Yes. Then you will get taxable long term capital gain. Once again, I am telling you there is no difference in computation of short term as well as long term capital gain, but only the difference is 54B, D, G, GA only applicable for short term, whereas in case of long term, only section number 54, all exemptions are applicable. Correct? Yes. And next number, you know the tax rates, very, very important topic. Tax rates are specially applicable for capital gain chapter. There are two types of capital gains. One is short term, one is long term. Take it for granted, all long term capital gains are taxable at the rate of 12.5%, whereas long term capital gain, which is covered under section 112A, that is at the rate of 12.5%. It is also 12.5, but up to 1,25,000 is exempt. Over and about 1,25,000 is only taxable at the rate of 12.5%. Whereas in case of short term, two things are there. One is 111A, second one is others. In case of others, normal rates are applicable. I repeat, normal. Whereas 111A, what is that? 20%. Correct? Yes. Once upon a time it was 15%, but nowadays it is 20%. Now this is the tax rates applicable for short term as well as long term. Okay, na? Fine. Next number, another topic, how to calculate the capital gain. First one, you have to take the sale consideration. Everybody, sale consideration means full value or part of the value? Full value. Full value of the consideration must be taken. Cash or kind, anything can be considered. But while doing this problem, first you have to check the section 50 capital C. What is section 50 capital C? Computation of consideration of immovable property being land or building. Very important topic. Okay, chalo. If the immovable property is transferred, sale consideration offered by SSE is less than the stamp duty value, in that case, which value is taxable? Stamp duty value is taxable provided stamp duty value must exceed 110% of the consideration. And next number, stamp duty value as on the date of registration is different with the stamp duty value as on the date of agreement. In that case, which value must be considered? The stamp duty value as on the date of agreement provided on the date at least part of the amount or part of the consideration must be paid by other than cash. Correct? Yes. Important topic. Section 50 capital C important because you no need to add separate one. Just one word. Sold for 50 lakh whereas stamp duty value 55 lakh. Enough. You have to do the problem. Correct? Yes. But you have to check 110% of criteria also. Take care. Next one. X on TR. Expenses on transfer. Allowed or not allowed? Allowed. But security transaction tax will not be allowed as deduction under the head capital gains, but it will be allowed as deduction under the head PGBP. Correct? Next one, net consideration. Okay. Cost of acquisition. Important. Very important. Come on. Cost of acquisition. Purchased by you. What is the answer? Actual cost. Next one. Purchased by not by you. It was purchased by your ancestor. They only transferred to you by way of gift, inheritance. What is the answer? Cost to the previous owner, ancestors. Next, third question. You only purchased before 1/4/2001. What is the answer? Fair market value or actual cost, whichever is higher. Which day fair market value must be considered? 1/4/2001. Correct? Yes. If it is immovable property, what is the answer? Answer. In case of immovable property, higher of the following must be considered. Small a, actual cost. Small b, least of the following. Correct? Yes. What is that? Small a, fair market value or stamp duty value. Out of these two, whichever is lower. This figure or actual cost, whichever is higher. Next number, in case of bonus shares, before 1/4/2001, what is the answer? 0, na? No fair market value. On or after 1/4/2001, what is the answer? 0. Correct? Yes. After that, we have completed another topic that is called as goodwill. No, goodwill is what is the answer? Self-generated goodwill, 0. Whereas purchased goodwill, actual cost. Correct? Yes. Next one, cost of improvement. Everyone in the class. CapEx is allowed or RX is allowed? CapEx. RX is not at all allowed. The two, with respect to tangible or intangible? Tangible. The two only incurred on or after 1/4/2001. That is only allowed. Correct? Yes. Chalo. Next topic, exemptions. Very, very important topic. 100% you will get one part, not as a separate question. In the main question, that is a bit. Section 54. What is that? Exemption for capital gain arising on transfer of, come on, which asset? Long term capital asset. What is that capital asset? Long term residential house property. Come again, long term residential house property. Applicable to individual and HUF. You must use your house property for your residence purpose or anybody's residence purpose you must use, and you must sold as a long term. In that case, you will get the capital gain. For that purpose, you can claim 54 exemption. What are the mode of investment? Tell me. You have to purchase other residential house property in India, but time limit is as follows. From date of transfer within how many years? Before 1 year or within 2 years, or else you can do construction of house property. What is the time limit? Not before, only after 3 years. Or you can go for capital gain investment account within the due date specified under section 139 subsection 1 ROI. After that, the newly purchased house property must held by the SC for minimum period of 3 years. If anybody sold within the period of 30 period, it is taxable as a maybe short term or maybe long term. Correct? Chalo. But here so many case laws are there. I purchased 2 adjacent flats, made it as a single flat. Allowed or not allowed? Allowed. I purchased in the name of my wife. Allowed? Yes. I purchased in the name of my son or daughter. Allowed? Yes. Chalo. It is allowed. I purchased foreign house property allowed? No, only Indian property. You, can I purchase for unlimited amount? No, nowadays restriction is there. Maximum how much will be allowed? Maximum how much? 10 crore. That restriction is there. Okay, chalo. Next number 50 capital B, not it, sorry, 54B, not important. B for booming. Exemption for capital gain arising on transfer of urban agricultural land. You must use the same for agriculture purpose for minimum period of 2 years. Same answer. Okay, chalo. Next one 54 capital D. D for demand. Compulsory acquisition of industrial undertaking must use by you for minimum period of last 2 years for industry purpose. Same answer, but not important. Next number 54 EC. Important. What is that? Very important. Exemption for capital gain arising on transfer of land or building. But what is the asset you have to purchase? You must purchase shares issued by NHAI or RECL within the time span of 6 months. After that, you are eligible for exemption. How much is the exemption? Maximum how much? 50 lakh. Unlimited amount is not allowed. Maximum it is allowed at the rate of 50 lakh. After that, we have completed another topic, section number 54F. Most important, most important. Exemption for capital gain arising on transfer of any long-term capital asset other than residential house property. What are the asset you have to purchase? Residential house property. Time limit. Purchase before 1 year or within 2 years. Construction within 3 years. Correct? Huh? Yes. Chalo. Same answer. But here 54F exemption is not allowed unlimited. Only one proportion. Long-term capital gain into amount invested divided by net consideration. But if you want to claim 54F exemption, SSC should not own more than one house property at the time of transfer. Correct? Yes. Important question. Take care. Chalo. Next one 54G and 54GA. Not that great important. What is 54G? Transfer of industrial undertaking from urban area to rural area. 54GA is nothing but urban area to SEZ. Correct? Yes. Where second hand plant and machinery also allowed? 54G or 54GA? GA. Fine. Next. Your examiner's most favorite topic. 99.99% they will ask this question. That is nothing but 50 capital B. B for bulk sale. Slam sale. Sale of an organization for a lump sum consideration without assigning values to individual asset is called as slum sale. In case of slum sale, it is covered under the head capital gain. Tell me, what is the formula for capital gain? First one, full fair market value minus expenses. You will get net consideration. After that, you have to deduct net worth. After that, you will get maybe short term or maybe long term capital gain. Depend upon the holding period of the asset or establishment date. Establishment date. Suppose I wanted to sell Begumpet Airport. It was started 20 years back, but assets purchased recently. Then tell me, what is the fate? Long term or short term? Long term or short term? Long term. Because you have to check the establishment date, not the individual dates in case of slum sale. What is the formula for net worth? Value of assets minus liabilities. How to calculate value of assets? Tell me. Depreciable asset, we have to take WDV. Non-depreciable asset, you have to take book value. Whereas in case of fair market value, you have to take whichever is higher. Higher of FMV1 or FMV2. What is FMV1? Fair market value of assets transferred. FMV2, fair market value of consideration received. For months consideration received, the formula is E plus F plus G plus H. Whereas FMV1 is equal A plus B plus C plus D minus L. Here come to first FMV2. That is nothing but fair market value of consideration received. Tell me, E for money, F for fair market value of other assets. Okay, G for fair market value of other assets other than this. Next, H for stamp duty value of house, immobile property. Here A for book value of all assets. B for Bangaru, fair market value of gold. C for chairs, correct? Fair market value of shares. D for Dharani, land, stamp duty value of land. L for liabilities. Very important topic. 50B is important. The reason, if you open your institute board material, you will not find capital gain chapter at all, but you will find only 50 capital B chapter. Kada? Important topic. Take care. With this, I have done with the chapter that is capital gain. 100% one question will be placed in the examination. That too, some amendments are there. Example, capital gain tax rates are amended, no? 12.5. Once upon a time it was 20%. Nowadays 12.5. Short-term capital gain 111A. Once upon a time 15%. Nowadays 20. Amendment. So take care. Important. Okay. Capital gain chapter is important. Next. So I wanted to see the topics from the beginning. Syllabus, entire syllabus. Basic concepts I explained. Next number. Exemptions part. Exemptions. Some exemptions are there. Exemptions wherever possible you covered. First one, agriculture income, section 10 subsection 1. Share in agriculture income from India is fully exempt. Tell me, certain incomes are agriculture income, certain incomes are not. I will ask the questions. Tell me. Bamboo, agriculture. Bamboo chicken, non-agriculture. Paper making. Listen, only 5 are agriculture. Number 1, which is cultivated from the soil. Okay, that is only agriculture. Number 2, farmers is agriculture. Sale of rural agriculture land is agriculture. And agriculture produce is also agriculture. Okay, na? These are only agriculture. Now I told you bamboo chicken, non-agriculture. I told you paper, non-agriculture. Paper will not be cultivated, you know. Paddy, agriculture. Rice, non-agriculture. Wheat, agree. Tomato, agree. Tomato ketchup, non-agree. Next number, farmers for film shooting, non-agree. Correct? Yes. Next one, nursery plants, agree. Very good. But here, most important thing is rules. Rule 7A, 7B, 8. Okay, most important. Ram Charantes, R, C, T. R for rubber, coffee, tea. Most important topic. Rules are only important. What is that? 7A, rubber 65, 35. Coffee, two things, 75, 25, 60, 40. Tea, 60, 40. Next one, section 10 subsection 2. Share income from partnership firm is exempt. 2A, sorry, 2 HF is exempt. 2A partnership firm. Next number, 1010 BC, bad climate, natural calamities. 1010 D, that is nothing but in case of insurance compensation received is exempt. Like this, these are exemptions, not that great important, but maybe relevant for MCQs, maybe. And the next chapter, chapter number next, that is topic salary. Now, salary is not part and parcel of your syllabus. In case of any payment made by person to another person because of employment is covered under the head salary. You have to take the gross salary. After that, taxable allowances, taxable perquisites, you can take it. You will get gross salary minus deduction under section 16. What is the standard deduction in salary? 50,000. Correct? Yes. Now, in case of default tax regime, how much? 75,000. Important topic, take care. Net amount is covered under the head salary. Correct? Yes. Most important things are as follows. If you follow 115 BAC, exemptions are not allowed. Correct? Yes. Only DTDC only allowed. Kada? Daily elements, transport, conveyance, travel. These are only allowed. All perquisites are taxable if you follow default tax. Next chapter, house property. Not part and parcel of your topic, but compulsory You should know computation part. Start GAV minus municipal taxes paid by the owner, NAV minus standard deduction minus interest on housing loan, income from the head, house property. This is the pro forma. But tell me, house property held as stock in trade. Up to 2 years, the GAV is equal to 0. After 2 years, it is pakka taxable. Part of the house let out, part of the house is self-occupied. What is the answer? Pro rata basis. Part of the year let out, part of the year is self-occupied. Deemed to be let out. Foreign house property, as if the property located in India. Recovery of unrealized rent and arrears of rent pakka taxable. Under the head house property, standard deduction will be allowed. But one warning, in case of 115 BAC, self-occupied house property deduction will not be allowed. So therefore, self-occupied property answer is 0. Important. Next chapter, PGBP. Most important. Next chapter, capital gain. Important. IFOS, important. Next chapter, clubbing. Not important, but cross transfer is important. Wife or husband invested in spouse business, that is important. Next number, set of some final topic level topics are as follows. AB, Amitabh Bachchan, daughter-in-law. This topic is important, take care. Next topic, that is nothing but deductions, important. I repeat, important. Deductions are 3 in number. One is expenditure, one is income, one is special. Special nature is nothing but 80 capital U, handicapped. What is the deduction? 75,000. Severe, 1,25,000. Income, very important. 80 IA, IB, IC, ID, IE, IAB, IAC, these are not relevant for you, but case loss only relevant. Ready, start. Now, some are manufacturing, that manufacturing only eligible for deduction. I told you already, conversion of marble block into tiles, manufacturing or not? Yes. Next number, what you call? Now, if anybody is engaged in the business of any business and he appointed more number of employees, new employees, 80 JJA is allowed or not? Yes. Important section, because if you follow 115 BAA or anything, automatically JOC will be JOC, JJAA allowed or not? Yes. How much will be deduction? 30%. How many years? 3 years of additional employee cost will be allowed or not? Yes. Important. 80 QQB, royalty on books. How much is the amount? 3 lakhs. In case of 80 RRB, royalty on patent. How much? 3 lakhs. And next one, TTA, TTB. TTA, interest on savings bank. How much it is? 10,000. TTB, interest on savings bank or deposit in the hands of senior citizen. How much? 50,000. Important. Okay. ATM, dividend received and dividend paid. Most important, take care. Next topic, 80C, certain investment. Fast. In case of PPF allowed, SPF allowed, URPF not allowed, RPF allowed, children education tuition fees allowed, maximum of 2 children, full-time course in India. Life insurance premium, most important. How much it is? 10% or 15% or what is the answer? If the policy taken before 1/4/2012, 20%. On or after, that is 10%. Correct? Yes. Important. 15% also there in one case. Okay. Most important. Take care. Next number, in case of deposit, term deposit, how long it is? 5 years. Correct? Yes. Next number, housing loan repayment, which is allowed, interest or principal? Only principal. Interest will be allowed under the head IHPO. Income from the head, house property. Chalo. Next topic, AD capital D. 100% you can expect one question out of this one. ADD, D for disease, health insurance. How much? For 25,000 or amount paid, whichever is lower. Senior citizen, 50,000. Very good. Next number, AD capital DD. Dependent disability, 75 or 1 lakh 25. DDB, specified diseases. How much? In case of senior citizen, 1 lakh. Normal citizen, 40,000. Next number, AD capital E, education. How long? 8 years. AD capital G, that is God. Sing a song. 100, 100, 100, 150, 100, 100, 100, 100, 100, 150. Correct? Yes. Very, very important. Come on. What are the B categories? First, Prime Minister. Prime Minister Dart Relief Fund. Jawaharlal Nehru Memorial Fund. Indira Gandhi Memorial Fund. Rajiv Gandhi Foundation. C category, 2 items. Family planning and next number sports. Correct? Next number D category, other than family planning. And next number temple, notified temple, church, mosque, gurudwar. Next number charitable trust. Next number organization for the benefit of Muslim minority women, like this. All other than B and C and D are covered under A. Next one GGB, GGC. Important. GGB, grant given to BJP political party. How much it is? How much? 100% is allowed, but not in the form of cash. Electoral bonds concept has gone, not there. Now GGC, uh, other than companies, how much? Same answer, 100%. Deductions chapter important, take care. 100% important chapter, deduction. Next, advanced tax, okay, not important. Next chapter, another chapter, assessment of individual, important. For you important because of because of AMT or because of DTAA. HEF chapter, not important. Next number, AOP BOI, not important chapter. Next number, charitable trust, important topic. Next number, cooperative society, not important. Next chapter, BIS, B for business trust, I for investment fund, securitization trust. Business trust important, remaining things may be important for MCQs. Next topic, another topic, company, 5-star, very, very important chapter, especially MAT. Political party, not important. Electoral trust, not important. Next number, SCZ, very, very, very important. Tell me, how long it is allowed as reduction? 15 years. First 5 years, 100% of profit. Next 5 years, 50% of export profit. Next 5 years, 50% of export profit or amount transferred to reserve, whichever is lower. What is the export profit formula? Total profit into export turnover divided by total turnover. Within how many years we must receive? Within 6 months. If you have not received the same, it should be reduced from dash turnover, export turnover, but not about the total turnover. Very important topic. Very important. SCZ. Next topic, next chapter, that is nothing but filing of ROI. Okay, that is one topic. Followed by 142, 143, 144, 147. After that, section Seizure, S&S. After that, 158 BA, block assessment. Important. After that, another chapter. Come on, appeals. Next chapter, revision. Next chapter, rectification. Next chapter, IT authority. IT authority. What is that? Survey. Correct? Yes. Important. Survey, most important question. Next topic, DRC. Dispute Resolution Committee. Very important chapter. Please follow. Yeah. Love you. Important chapter, but only theory topic is relevant for MCQs or relevant for theory short questions. Very simple topic. Follow. Dispute Resolution Committee. Some people wanted to go for compromise. If you want to go for compromise, this is the section. Follow. Settlement Commission, already it was closed, and instead of that they introduced the new topic called as DRC. It consisting of 3 members, being 3 chief commissioners of income tax. It is appointed by the central government, and fees minimum 1000 rupees you have to pay, and you can submit the application within the time limit of 1 month. What is the purpose of DRC? Very simple. Follow. Our friend, she committed some in concealment of income. Okay, when she did the concealment of income, automatically department may do the assessment and serve the notice. Okay, she has to pay tax, interest, penalty, prosecution. That is the reason she thought like this. Going to jail, having a white color shirt, white color sari is not that good, and staying in the jail is not that good, right? That is the reason she wanted to go for compromise. For that purpose, you can't say the sound like that. You can't say sound like this. You have to go for compromise officially. For that purpose, they introduced one organization called as DRC. Dispute, see the heading, Dispute Resolution Committee. You have to make an application by paying the fees of 1000 within the time limit of 1 month from the end of the month. In that case, they may abate or they may relief from prosecution or penalty. That's all. See the word. Conditions are as follows. Your income must not exceed 50 lakh, whereas variation between you and department should not exceed 10 lakh, and such people cannot come, survey people cannot come, and already prosecuted people cannot come. Next number. Now conditions are as follows. The variation between you and department is how much? 10 lakh. Example, she paid the tax of 14 lakh. I am asking her to pay 15 lakh. After all, my deviation is 1 lakh. She can come or not? Yes. Reverse. It is 14 crore. I am asking her 15 crore. How much is the difference? 100 lakh. Okay. Can you go for DRC? No. Variation between you and department does not exceed 10 lakh. And next number, such people cannot come. Such people cannot come. Requisition people cannot come. Survey people cannot come. And the information we already received under section 9090A cannot come. And next number, income offered by the SC does not exceed 50 lakh. Chalo. Procedure. What is the procedure? Step 1. You will make an application to DRC. DRC will issue show cause notice. Tell me why I need to take up your case. Tell me like this. Once you made an application, show cause notice will be issued after providing opportunity of being heard. Based on your response, I will decide whether to accept or to reject. If I accepted, I will disperse the case within the maximum time limit of how many months? 6 months. Okay, chalo. Now, if you satisfied, well and good. Not satisfied also, well and good. You cannot go for further appeal. But for your information, if you satisfied the condition, then only I can waive the interest penalty. But I can grant the immunity from prosecution also. But in future, if you have not satisfied the conditions, I will cancel this immunity. Automatically, police will come and arrest you. I mean, department people can raise the summons against you and they can arrest you at any point of time. Okay, now MCQ's point of important. How they will ask, the following fellows cannot approach DRC. Number 1, already convicted under drugs, Binami Act, FEMA Act, all of this. What is the answer? All of this. Next one, who cannot enter for DRC? Number 1, whose variation is more than 10 lakh, whose total income more than 50 lakh, such people, survey people, requisition people. Correct? Yes. So DRC chapter is important, but theory chapter, take care. Next chapter, another topic. Now, residential status, scope of income. Important. Needless to say, entire international taxation syllabus is important. Next one, TP important. Next number, DTAA important. Equalization levy important. Next number, bar, already we covered, important. Next number, Black Money Act. Tell me, what is the valuation date? First day of previous year. Which date? Foreign exchange rate we need to consider. Valuation date. Correct? If RBI rate is there, take RBI rate. If RBI rate is not there, convert from RBI rate to convert foreign to US, US to RBI. Okay, na? Chalo. Next. Another topic, TP, important. Next one, non-resident, important. NRI also important. Okay. Next topic, penalties and prosecution. Important chapter. Compulsory they will ask. But my suggestion, openly I am telling you, if you have completed the entire syllabus, then only go for penalties and all. Otherwise, don't study. The reason, you have to mug up how much penalty, how much is the prosecution, you have to mug up. So first concentrate on other things. Later on only you can take care of this. Next chapter. Next, tax planning, tax management, tax evasion. Now, examiner favorite question. I will ask the question. Tell me. You. One fellow submitted fake particulars for claiming deduction, tax evasion. One fellow taken the advantage of loophole. One fellow taken the advantage of provisions planning. One fellow did compliance management, which is long term in nature. Tax planning, which is a routine job. Management, kada, which is punishable. Evasion, which is not punishable but unethical. Avoidance. Very good. Take care. Next, another topic, another chapter. Next, any more? ICDS. ICDS, don't expect direct question from this topic. Only they will place questions while doing the PGBP chapter. Okay, fine. So this is the syllabus. Next topic, dividend is also important chapter. Dividend also. Okay, and dividend, demo dividend. Next one, amalgamation and demerger. Not important topics. Not at all important. Next number, buyback. Buyback chapter. Okay, tell me, in case of buyback, company's hands, is it taxable or not taxable? Not taxable. In the hands of shareholder, it is taxable. First one, foreign company, then it is taxable in the hands of shareholders. Correct? Buyback price minus whatever the cost of acquisition, balance amount is taxable under that capital gains. Whereas in case of domestic company, in the hands of company, not taxable. In the hands of shareholder, two heads will be affected. IFOS, capital gain. What is IFOS? How much amount I have distributed is covered under the head IFOS under section 222F. Kada? Yes. Capital gain also. Cost of acquisition minus buyback price is taken as a zero minus cost of acquisition will be allowed as deduction. Under the head capital gain 100% you will get the loss. Correct? Important. Buyback. Next topic, liquidation of company. In case of liquidation of company, company will distribute the assets. In the hands of company, it is not taxable. In the hands of shareholders, it is taxable. Correct? Yes. After that, you have completed the topic called as liquidation. Next, SOFTRA. Statement of financial reporting. Correct? Yes. Now, if the transaction value exceeds certain thing, automatically they will inform to government. Number one, savings bank 10 lakh, credit card 10 lakh. Correct? Yes. Next number, fixed deposit exceeds, immobile property stamp duty value exceeds 30 lakh, savings bank account 10 lakh. Okay. Now they have to inform to the department. Otherwise, they have to pay the fee of rupees 500 per day. Kada? In case of notice received and not submitted, 1000 rupee. In case of fake particular, they have to pay 50,000. 269 SS, 269 ST, 269 SU, 269 T, SS, ST, SU. Correct? Yes. Tell me, what is 269 SS? Acceptance of deposit. 269 T, return the money. What is that? Repayment of deposits. Correct? Yes. ST, transaction, each and every transaction. What is the limit? 2 lakhs. 269 SU. If your turnover exceeds 50 crores, compulsory you must maintain certain concepts. Number one, Aadhaar pay you have to provide. Aadhaar pay. QR code you have to provide. Scanner you have to provide. Correct? Yes. Apart from all other things, you have to provide rupee payment. All the things must be accepted. Kada? Yes. Important theory question. Theory, only theory question. Okay? Chalo. Next. Tonnage tax, not at all important, maybe important for MCQs only. Only Indian company, it is kind of presumptive taxation. You have to pay taxed not based on your income, based on your tonnage. Whether it is mandatory or optional. Optional. How long it is applicable? 10 years. Friends, it's time for GAR, General Anti Avoidance Rules. See the word? These provisions are applicable only if the SSC tax benefit exceed 3 crore in a year. If you claim the benefit over and above 3 crore rupees, then only this benefit is more than 3 crore, then only GAR provisions will be applicable. But GAR provisions are not applicable to FIIs who have not taken the benefit of DTAA. If they have not taken the DTAA benefit, then GAR provisions are not applicable. Next number, especially non-resident who invest in offshore derivatives, then also GAR provisions are not applicable for them. It is applicable to other SCs who have taken the tax benefit of rupees 3 crore or more, then only applicable. But when there is a conflict between GAR versus DTAA, which will prevail? Already I told you, whenever there is a conflict between Act versus DTAA, the most beneficial things will prevail. Whenever there is a conflict between GAR versus DTAA, GAR will provide. And next number, once upon a time there was a concept called as SAR. SAR means specific anti-avoidance rules, only for specific purpose. But recently, Government of India introduced the topic called as GAR. But it is not specific, it is general. The best example for SAR is nothing but TP, transfer pricing. You know what? Transfer pricing main intention is they wanted to take care of certain specific provisions. The best example, excess payment made to relatives. Obviously, excess amount will be disallowed. Correct? Yes. For that purpose, section 40 capital A subsection 2 applicable, or section transfer pricing section 92. These sections are applicable. Or demo dividend section 222E. These are the provisions covered under SAR, whereas GAR is introduced in general sense, whereas SAR is introduced only for the specific purposes. Next number, GAR is applicable apart from the regular tax provisions itself. Normal provisions are applicable as well as GAR also applicable. When GAR is applicable, that is the question. Number one, if SSC tax benefit is more than 3 crore, that too SSC has taken the tax benefit because of tax avoidance. Because of tax avoidance, in that case, these provisions will be applicable. See the word. The GAR, let the tax department declare a deal as a IAA. IAA means impermissible avoidance arrangement and apply specific tax rules. Then it overrides all conflicting tax provisions. Okay. For this purpose, first you have to check whether IAA is there or not. IAA means impermissible anti-avoidance. For that purpose, first you have to satisfy two conditions. Condition number one, all of you must obtain tax benefit. That too, the tax benefit is because of tax avoidance. See the word A, B, C, D, E. Here, 5 items have given. First one, it creates rights or obligations not typically formed in arm's length transaction. Means they are giving the rights or obligation not in the ordinary course. Number two, it abuses the provisions of the act, misuse the provisions of the act. That means they are taking the advantage of loopholes, tax avoidance. Number three, it is entered into or it is carried out in a manner not normally used for genuine purpose. It's not in the ordinary course of business. It is not for the genuine purposes. Next one, there is lack of commercial substance. If you see the cost benefit analysis, it's not at all viable. So it is not lack of commercial substance, and it is deemed to lack of commercial substance. For the deemed to lack of commercial substance, some examples are given. If you follow these examples, then we can treat the particular thing as a deemed to lack of commercial substance. In that case, automatically GAR provisions will be applicable. So I wanted to classify this one. See the word. If the tax benefit is more than 3 crore, that too, you are giving the tax benefit because of tax avoidance. I repeat, because of tax avoidance. That too, there is a IAA. IAA means impermissible and impermissible anti-avoidance agreements it is. Okay, in that case, automatically GER provisions will be applicable. So, what are the consequences? See the consequence number one. First one, ignore and combine and reclassify parts of the arrangement. So, whenever GER provisions are applicable, automatically you have to change the old agreements as per the GER. Number two, treat the arrangement as never made. So, that means it is treated as nullified. Number three, treat accommodating and other parties as one. Means you can see the payer and payee are same, one and the same. Pakka binami transaction you can consider. Number next, deemed connected persons as one for tax purposes. Assume that all the people are considered as single fellow, like a binami transaction it is. Next one, reallocate the income as well as expenses as well as deductions as well as benefits as needed. So whatever the expenses, whatever the incomes are there, that we need to reclassify and change residence or transaction location to actual place. That means whenever tax avoidance purpose, they will create a fake company in a country, tax haven countries, that cannot be considered. Now we need to change the residence or change the actual location. Last number, lift the corporate wheel. I already told you, once you lift the corporate wheel, automatically liability will be attached to personal level, correct? Yes. So that we can do. So ignore the company structure and collect the taxes from the particular person itself. So these are the consequences. Okay. So I repeat, if the transaction benefit value is more than 3 crore, that too because of tax avoidance, in that case we can treat the transaction as a IAA, impermissible avoidance agreement. For that purpose, there must be tax benefit more than 3 crore and there is lack of commercial substance or deemed to lack of commercial substance, and that too now there is a misuse of provisions of Income Tax Act, and the rights or obligations are not created in the ordinary course. In that case, we can treat it as a IAA. When IAA is there, automatically GER provisions to be applied. Then the consequences are as follows. We can ignore the particular parts of the arrangement and we will reclassify the income and expenditure, as well as we can change the location or place, and we can lift the corporate wheel and we can collect the tax accordingly. So these are the topics related to GER. Now it's important, may be important for MCQs or else important from short notes point of view. Otherwise, it's not that great important in the regular course. Now it's time for coverage of the entire material. I'm going to tell you the important elements. So please consider that material for quick revision purpose. Okay, chalo, one by one. First one, open the page number 1, components of income tax law. There, income tax rules, make it down arrow and write subordinate legislation, subordinate legislature, subordinate legislation. Next, circulars and notification. Tell me, SSC can take the benefit out of circulars and notification? Yes. Beneficial to SSC. If it is beneficial to SC, SSC can opt. Next number, exceptions to general rule. Important topic. Theory topic important. The general rule is like this. Income of this year is taxable in the assessment year. 5 exception, non-resident shipping business, person living India permanently, AOP, BOI, AJP formed for temporary purpose, and transfer of property with an intention to avoid payment of tax. Last one, discontinued business. In this discontinued business, it is not compulsory to collect the tax in the same year. Option given to SSC, right? Option to assessing officer. Assessing officer, he may collect or he may not collect. Next, computation of total income and tax liability. First, calculate gross total income, that is sum of 5 heads. After that, you have to consider clubbing. After that, you have to consider set off and carry forward. Set off and carry forward. plus clubbing plus set off and carry forward. Then only you will get gross total income. 5 heads total plus clubbing plus set off and carry forward. Then you will get the gross total income minus deduction under section 80C to 80U. After that, net income or taxable income or total income must be rounded off to multiples of nearest 10 rupees. After that, you have to calculate the tax as per special rates. After that, normal rates. Okay. Next number. Now, rebate also will be given, but rebate will not be given for all. Rebate only will be given for individual whose total income does not exceed 5 lakhs. How much is the amount? 12,500 or basic tax, whichever is lower. Next number, you have can add surcharge if applicable. Whereas after adding surcharge, you can calculate health and education cess. You will calculate final tax liability. Out of this, you can deduct the rebate or relief or else MAT credit or AMT credit you can under TDS, TCS advance tax. Then you will get net tax payable. That's all. This is the topic. Very important. Take care. Computation part, very important. They won't ask a direct theory question. They will ask one practical question out of this. Tax rates, 5-star, very, very, very important. Without this, you will never ever get the question paper. See the board. Now, individual, HEF, AOP, BY, AJP, except cooperative society, normal taxes, optional taxes. Now see the word up to 2 lakh 50, 0, 2.5 to 5 lakh 5%, 5 lakh to 10 lakh 20%, about 10 lakh 30%. Whereas in case of resident, that to senior citizens, up to 3 lakh 0, 3 to 5 lakh 5%, 5 to 10 lakh 20%, above 10 lakh 30%. Whereas super senior citizen, up to 5 lakh 0, 5 to 10 lakh 20, above 10 lakh 30. Next number, the most important thing, 115 BAC. It is applicable for individual, HEF, AOP, BY, AJP, except cooperative society. Here the beauty is up to 3 lakh 0, 3 to 7, 5%, 7 to 10, like this you can calculate. But for your info, in salary chapter, deductions, exemptions not allowed. Correct? Yes. HRA exemption not allowed, deductions not allowed. Only standard deduction will be allowed. Correct? Yes. As far as allowances are concerned, DTDC only allowed. DTDC. And next number, as far as perquisites are concerned, lunch provided during office hours only allowed. Okay. Next one, house property chapter. Come on, self-occupied allowed or not allowed? Not allowed. As for PGBP is concerned, additional depreciation not allowed. I repeat, dip only allowed, but additional dip is allowed or not allowed? Not allowed. Next number, in case of family pension, standard deduction allowed or not allowed? Allowed. How much it is? 25,000. 80C to 80U deductions will not be allowed, but only JJAA and CCD subsection 2 CCH. What is CCH? Kargil, Agniveer. That is only allowed. Next number, domestic company. Important. Especially this part is also important. Previous year 20 to 23, if turnover does not exceed 400 crore, 25%. Other domestic company anyhow 30%. Whereas foreign company 35 and local authority anyhow 30. Okay. Chalo. Next one, 115 Bob, 115 Ba. 115 Ba is 22%, whereas Bob is 15%. Okay, chalo. Cooperative society, as I told you, not important, but normal rates are applicable. Next number, such as, this table is important, relevant, because such as is compulsory to calculate in the problem where the income is more than 50 lakh. Okay, take care. Up to 50 lakh 0, 50 to 1 crore 10%, 1 crore to 2 crore 15%, 2 crore to 5 crore 25, above 5 crore, what is the answer? 37. But in case of others, answer would have been different. Okay, take care. Next number, ICDS, we already covered. We read everything. Tell me, ICDS applicable to all SSCs other than individual and HEF whose books are not subject to tax audit. See, individual HEF liable for tax audit applicable, otherwise not applicable. Others anyhow applicable. Next one, mercantile or cash? Mercantile. Next number, presumptive people also applicable or not? Yes. Gross basis or net basis? Gross. Already I am following AS. Still it is applicable or not? Yes. Next number, in case of conflict between Act versus ICDS, which will prevail? Act. Rules versus ICDS, rules. ICDS versus Supreme Court judgment, ICDS. Next number, total 10 in number. One is accounting policies, valuation of inventory, construction contract, revenue recognition, tangible fixed assets, effect of changes in foreign exchange rate, government grant, security, borrowing cost, provision, contingent liability, contingent asset. All of you, GAC is recognized or not? Yes, but which are not recognized, materiality and prudence. We can't change unless there is a reasonable cause, and the expected losses few are allowed, few are not allowed. I repeat, which are expected losses, which are allowed losses. If allowed as per ICDS, then only allowed as per Act. If it is not allowed as per ICDS, not allowed as per Act. Okay, na? I'm not talking from Act to ICDS. I'm telling you from ICDS to Act. Next number, inventory. Inventory means which are meant for sale in the ordinary course of business, and now which are used in the production also covered. Now basis cost or NRV, whichever is lower, but dissolution of the firm, NRV. Next number, in case of construction contract, only one answer. What is that? POCM, percentage of completion. Retention money taxable or not? Yes, it is also taxable on what basis? POCM. Penalty for delay. Expected penalty. Expected. Allowed or not allowed? Not allowed. Expected penalty not allowed. But if it is really paid, it is allowed. Next one, disclosure requirement. You have to disclose what is the percentage you are following. Next one, revenue recognition. Here you can add sale of goods. I repeat, sale of goods. Anybody? What is the answer? Answer, reasonable certainty. Certainty about cash inflows or any inflows, then only you can consider. Chalo. Next one, service contract. If it is more than 90 days, then POCM. POCM. Less than 90 days, what is the answer? Completion. If it is less than 90 days, completion method. If it is more than 90 days, POCM. Next number, interest on IT refund. What basis? Receipt. Receipt basis. Whereas other interest on what basis? SLM. Accrual basis. SLM. Straight line method. All other income like dividend, royalty and all. What is the answer? As per provisions of Income Tax Act. Next number, tangible fixed assets. In case of tangible fixed assets, only these are covered. Number one, plant and machinery is covered, and land and building also covered, and furniture and features only covered. Okay, these are tangible fixed assets, but intangibles are anyhow not covered. Next number, which are not for sale, ordinary course of business, it is meant for uses. Next one, depreciation and all as per provisions of section 32. So normal things. Next number, most important thing is effect of changes in foreign exchange rate. Now all of you see the word monetary item at the time of last day of the year. Can I consider or not? Yes. Settlement time, shall I consider? Answer, yes. Next number, government grants. It is not equity. I repeat, not equivalent to equity. What is the meaning of equity? Their share capital participant is not covered. Only it is equivalent to dash assistance. I repeat, only assistance only covered, but equity participant is not covered. It is capital nature or revenue nature, both are covered. If it is against to asset, reduced from cost. If it is other purpose, taxable under the head PGBP. Next one, securities, two types. AS 13, security wise we can calculate. ICDS, which wise? Category wise. Next, borrowing cost up to put to use. What is the answer? Capitalized. After put to use, debited to P&L. Next number, provisions contingent liability. Provision, existence of present liability as an obligation of past event. It is allowed when there is a reasonable certainty. If it is more than 90%, then allowed. Next one, contingent liability. Allowed or not allowed? Not allowed. Contingent asset also not allowed. But assess, I repeat, assess regularly. You can assess regularly. Once you satisfied, then only you can recognize. Otherwise, don't recognize. Okay. Very important chapter, ICDS. Important with the along with the chapter PGBP as well as IFOS. Next number, PGBP. All of you see the word profits and gains from business are provision. But except dividend. What is the reason for dividend? You know, IFOS. And winning from lottery is also IFOS. Write the word IFOS. See the word dividend and winnings taxable under the head IFOS. Next number, all of you, another topic, business profession includes vocation. Next number, business or profession need not be continuous one. Isolated transaction also sometimes covered. Next one, I told you concept of mutuality. What is that? Contributor and beneficiaries are one and the same, not taxable. But here, some exceptions are there. You know what? Professional fees received by professional bodies from their members. Tomorrow, once you qualified your CMA final, you have to pay the membership fees. See the word amount received by a trade or professional association from its members is covered under which head? PGBP. Next number, export incentives. Right in the margin. The export incentives are as follows: cash assistance. I repeat, cash assistance. Next number, duty drawback, DDB. Duty drawback. Next number, most important one, profit on sale of import license. Profit on sale of import license. Next, all of you, please follow. The value of benefits or perquisites received as part of business or profession. Listen, if the perquisites received by employees, which head it is? Salary. If perquisites received because of business or profession, which head? PGBP. See the word. Any perquisites received by the SC as part of business or profession covered under the head PGBP. Next, most important, salary, allowance, salary or interest, bonus, commission, remuneration paid by the firm to partner is covered under which head? PGBP. Next number, share of profit from partnership firm is pakka exam. Next, non-compete fees. Write the word non-compete fees. Non-compete fees is also covered under which head? PGBP. Not carrying any business activity or else not sharing any technical know-how. PGBP. Next one, Keyman insurance premium paid allowed as deduction, whereas if it is received by employer, received by employee is covered under the head salary. Employer means owner PGBP, legal heirs obviously other sources. Next number, stock in trade converted into, come on, what? Capital asset. In this case, the fair market value of stock is covered under the head PGBP, right? Stock converted into capital asset, fair market value is taxable as business income. Next number, any sum received or receivable in respect of capital asset under section 35 AD, up to 8 years it is okay. After 8 years if you transfer, within 8 years if you transferred, then automatically that amount is taxable under which head? Capital gain or PGBP? PGBP. Next one, most important topic, depreciation. Twin conditions must be satisfied. What is the condition? Number one, owner, and second one, used for what? Business or profession. Claiming of depreciation mandatory, blockwise only allowed, that too WDV is only allowed. Three types of depreciation, normal, reduced and additional. Additional is only applicable for manufacturers or producers. Block of assets. Block means pool of asset consists of same rate of depreciation and same class of assets. And conditions we already covered. And all of you, now another topic is as follows. If it is a lease, who can claim depreciation? Lease, lessor. In case of hire purchase, who can claim depreciation? Hire purchaser, not hire vendor. Hire purchaser only can claim depreciation. Lease, lessor only can claim. Even operating lease or finance lease, any lease, lessor. Hire purchase, only hire purchaser can claim depreciation. Next, classification of assets, tangible, intangible. In case of tangible, building, furniture, plant and machinery. In case of intangible, all the things are covered. Goodwill is not covered. Amendment. Now, goodwill is not a depreciable asset. Land is not a depreciable asset. Building includes roads, bridges, etc. Furniture, that is also covered. Whereas plant and machinery includes books, vehicles, computers, everything, but exclude tea bushes and livestock. Rates are as follows: residential 5%, building for official 10%, temporary wooden structure 40%. Okay, chalo. Next number, furniture and features, only one answer. What is that? 10%. Vehicles 15%, hire vehicles 30, aeroplanes 40, and molds and all 30, and life saving equipment 40, and containers and all 40, computers, computer peripheral 40, whereas where air pollution, water pollution and all 40, energy saving devices 40, books 40, whereas ships and vessels 20, other plant and machinery, if I don't know anything specifically, 15, whereas oil wells and all, how much? That is 40, whereas windmill on or after means it is 40, but before 1/4/2014 is how much? 15, but intangible, that is 25, but goodwill is not depreciable asset. Next one, how to calculate depreciation. Number one, take opening WDV, add purchases, but at the rate of actual cost. Next one, after that you have to deduct a sale price or any consideration received, you have to deduct. Then you will get balance figure. Out of that current year DP you have to deduct. Then closing WDV you will get it. Next one, reduced depreciation. That means if it is put to use less than 180 days, then how much will be allowed? 50%. But it is not allowed every year, only for first year. See the word, reduced depreciation applied only in the first year of acquisition, but not in the subsequent years. Next number, cost of additions. Okay, all expenses must be added, all incomes must be deducted, taxes and duties added, loading, unloading, insurance, transportation, installation charges must be added, but government grants must be deducted, and interest on loan up to put use must be added. Next number, additional depreciation important. In exam hall, if examiner mentioned that he is a manufacturer or producer, immediately you must get ready for providing additional depreciation. At what rate? 20%. If it is less than 180 days, 10%. New plant and machinery is only covered. If it is less than 180 days, 50 this year, 50 in next year. Next number, 35 AD. Only particular businesses are covered. These are known as specified businesses. One is a cold chain, dates and all not relevant, ignore. Next one, warehouse for agri, warehouse for sugar. Next one, natural gas pipeline, petroleum pipeline, hospital with 100 beds, hotel with 2-star. Next number, housing project in slum area, housing project for affordable, and fertilizers and inland container depot ICD, and beekeeping and warehousing for sugar, I told you earlier, iron ore, and next one semiconductor, and next one infrastructure facilities. RX, how much it is? 100, capex 100, prior period also, how much? 100, prior period also 100. But with respect to capex is concerned, land is not allowed, goodwill is not allowed, financial assets also not allowed. Okay na? See the word. And that too, now how many years it is carry forward? Loss can be carry forward any number of years. Okay, ROI is compulsory or not compulsory? ROI mandatory. Within the time only you have to submit the return of income. But same specified business or any specified business, we can adjust against same specified or any specified. Any specified. I already told you specified business losses can be carried forward against any specified business income. Next, all of you, other deduction, section 36, insurance premium allowed, insurance premium on life of the capital allowed, and health insurance premium allowed, but not in cash. I repeat, not in cash. Other than cash, it is allowed. Next one, bonus and commission allowed, subject to 43B, payment basis. Interest on borrowed capital, it is allowed. Next number, all of you, discount on zero coupon bonds. What is the answer? Allowed or not allowed? Allowed. Next number, employer contribution to employee welfare fund. What is the section? 43B. whereas employee contribution to employee welfare fund as per respective due date act. Okay, very important, take care. Next number, all of you see the word employer contribution to RPF or approved superannuation fund is deductible subject to the prescribed limits specified under section 43B, whereas employer contribution to pension fund under 80CCD is also deductible up to 14% of employee's salary subject to due basis, payment basis. Means if you pay on or before 139 one due date only allowed. Next number, employee contribution to employee welfare fund, it is allowed as deduction within the due date specified in the respective act. Okay. Next one, animals, dead animals not important, ignore. Provision for bad debts not allowed. Provision for bad debts is only allowed for one fellow. Who is the fellow? Banks and financial institution. Banks and financial institutions only allowed, whereas bad debts will be allowed only subject to fulfillment of this condition. It must be incidental to business and already taken as a SSC's income earlier, and written off is required, and business or profession must be continued. Continued business only allowed, and it must be in revenue nature. If you satisfied these conditions, then only it is allowed. And family planning expenditure, most important thing, come on, it is allowed only for company. RX, how much will be allowed? 100. Whereas capex, how much will be allowed? How much? 1 by 5th, 1/5 or 20% is only allowed, but only for companies. Next, STT, all of you, STT not allowed under capital gain head. Under the head capital gain not allowed, but allowed under the head PGBP. Now tell me, when it is PGBP, when it is capital gain? Answer, if it is a stock in trade, shares are a stock in trade, it is allowed as PGBP. If it is a capital asset, it is not allowed under the head capital gain. Same answer is applicable for CTT also. If it is a capital asset, not allowed under the head capital gain. If it is PGBP asset, it is allowed under the head PGBP. Same answer. Next one, 37, most important. If it is not covered under 30236 and that too not business, not personal nature, and not prior period, and not in capital nature, and not personal, in this case it will be allowed in the previous year. Now it is not prohibited one. 7th one, if it is prohibited, it is not allowed. Now conditions are as follows. See the word CSR allowed or not allowed? CSR is not at all allowed. All of you, here some points are given. Very famous case laws. Bypass surgery not allowed. Plastic surgery allowed. Not for everyone. TV and news readers, it is allowed. Part of profession. And gym subscription for actress, allowed or not allowed? Allowed, because for them fitness is most important. That is the reason. Next one, deposit under OYT. OYT means own your telephone. Under that deposits, answer it will be allowed. Advertisement expenditure allowed or not allowed? Allowed. But advertisement in political party books, not allowed. Next one, expenditure on electricity, banking, postage, it is allowed. And employer training, fully allowed. Professional tax, it is allowed. Sales tax, IDT, allowed or not allowed? Allowed. As I told you earlier, IDT will be allowed. DT is not at all allowed. Right in the margin. IDT allowed, DT is not allowed. Next number, audit fees allowed, and premium on loss of profit, it is allowed, and entertainment expenses are allowed. Cash shortage, cash embezzlement by cashier also allowed. Share of profit given by debtor to creditor, that is also allowed. Next number, annual listing fees, stock exchange listing fees allowed. Temple maintenance expenses allowed. Royalty for trademark is also allowed. Legal expenses to defend the business asset. I repeat, if it is a normal thing, it is allowed. If it is a capital in nature, must be capitalized to particular asset. Legal expenses for income tax or anything, it is allowed. Legal expenses for drafting agreement and deed allowed, and expenses for Diwali and all allowed, and compensation for employees injury during the duty, that is also allowed. Employee welfare expenses allowed. Shares, debentures, not at all allowed. Okay, highlight this one, 24 important. But I told you earlier, bonus share issue expenses. What is the answer? Allowed? Yes, allowed. But right share issue expenses are not allowed. Next number, to increase authorized share capital. Anybody? Allowed or not allowed? Not allowed. But it is allowed under section 35D. Over. And next number, all of you, PGBP topic, disallowances, most important, follow. Interest royalty fees for technical services payable to non-resident. Non-resident, in that case, 100% amount will be disallowed if you made the payment without deduction of TDS or without remittance. Same question, next question. Any payment payable to resident without deduction of TDS, how much will be disallowed? 30%. Okay, very important. Next number, all of you, in case of 40 small b, see the word interest payable by the firm to partners. It is taxable under which head? PGBP. But maximum how much will be allowed? 12%. Whereas salary remuneration also covered under which head? PGBP. Whereas share of profit is taxable or exempt? Exempt under section 10 subsection 2A. Next. 40 capital A subsection 2. Too much. Excess payment made to relatives or specified person. Nana, only expenditure covered. The two expenditure covered under section 30237. The two you must make the payment to relatives or close associates or the specified persons. The two entire amount will be disallowed or excess. Excess. Over and above market price or over and above genuine market price, genuine profitable thing, that is only excess amount, that is only disallowed. Who are your relatives? In case of individual, natural human being come relatives are only covered, whereas other organization in which you have substantial interest also covered. In case of company, your specified persons are director and relative of a director, or organization in which such people are having substantial interest. In case of firm, the word must be replaced with the word partner. In case of HUF, member only. Okay, 100% will not be disallowed. Only excess amount only will be disallowed. And the last of its kind, disallowances in case of cash payment exceeds 10,000. See the word. If any payment more than 10,000, but in case of goods transport agency, what is the answer? 35,000. It must be paid by account pay check, account pay draft, or ECS. If you made by any other mode, automatically 100% of such amount will be allowed or disallowed. Disallowed. But conditions are as follows. Only business expenditure, that too revenue nature, that too only one day payment only you have to consider one day. In that case, over and about 10,000, compulsory you have to pay by that particular modes, otherwise it is pakka disallowed. In case of goods transport agency, 35,000. But exceptions are there. Number one, payment to banks will be allowed and LIC, State Bank will be allowed, and the payment through debit card, credit card will be allowed, and gratuity compensation where employee retired at the time whatever he received is not more than 50,000 also allowed, and payment made to government allowed, payment made by way of book adjustment allowed. For agriculture and fisheries and horticulture products purpose also allowed. Important. Next one, cottage allowed, and payment to villages or towns where there is no banking facility also allowed. And if any employee working more than 15 days outside our place of employment, that is also allowed. Payment to agents, that is also allowed. Okay. And next number 43B, what basis? Payment basis. Number one, first one is the taxes payable to government. Okay. But electricity bill is not covered. Only IDT is covered. GST also covered. Next number, some employer contribution to employee welfare fund. Next one, bonus and commission also covered. Next one, interest on loan or interest on loan taken, that is from banks only covered. Bank loans and all interest covered. Next number, amount paid, leave salary is also covered. Leave salary, not regular salary, leave salary. Next one, Indian Railways also covered. Payment made to Indian Railways. Last one, MSME also covered. MSME, small, medium and micro enterprises. This is are only covered. Due date, within the due date specified under 139 subsection 1. If payment made afterwards, it is allowed in the respective year. Okay. Next, 41, deemed business income. See the word recovery of expenditure which was earlier allowed as deduction. Remember the word DR. D for deduction or for recovery. So earlier we have claimed deduction, subsequently we recovered. That is pakka taxable as deemed business income. And balance of charge is there, not important. It is only applicable for power generation companies. Next number, sale of R&D asset, most important. In case of R&D asset sale, amount received or deduction claimed, whichever is lower, is taxable. Next one, recovery of bad debts, most important. Whenever bad debt is there, P&L debit allowed under 36. Whenever you recovered, pakka taxable. Last one, these deemed profits can be set off against discontinued business losses also. Next topic, Nana, another topic, tax audit amendment, important for your examination because you have this special chapter. Tell me, in case of gross receipts, professional receipts, what is the limit? 50 lakh. In case of turnover, what is the limit? 1 crore. In case of business, what is the limit? 10 crore. Whereas SC covered under 44 ADA, but he offered lower income than the presumptive income but higher income than the bell is covered. And 44 AD subsection 4, if anybody offered lower income than that income for next 5 years, he is also covered. Next number, those SCs who are covered under 44 AE but offered lower income than the presumptive income also covered. Next number, all of you must furnish audit report in the form number 3CA, 3CD, 3CB, 3CD. If you are a company 3CA, other than company 3CB. And due date on or before 30th September. Next number, 44 AD, AE, ADA. AD is for what? AD is for what? AD is for any business other than goods transport agency. Resident individual, resident HUF, resident firm only covered. The two, their gross turnover does not exceed 2 crore, but some cases 3 crore also covered. If aggregate cash receipts does not exceed 5% of total turnover. What is the presumptive income? 8%. If you have bank receipts, then 6%. But expenses are allowed or not allowed? Not allowed. Deemed to be allowed. Whereas in case of 44 AE, same point, only residents covered, any SC is covered. He engaged in the goods carrying transportation and does not own more than 10 vehicles. A heavy vehicle 1000 rupees per ton will be considered. In case of other than heavy vehicle, 7500 per month are part of the month. Expenses not allowed as deduction, but interest payable to partners and all will be allowed as deduction. But in case of 44 ADA, only for resident individual, resident firm only covered, but not applicable to LLP and company. And notified provisions only covered. The two, turnover does not exceed 50 lakh, but in some cases it is limited change it to 75 lakh, provided your gross receipts from aggregate receipt turnover does not exceed 5%. What is the presumptive income? 50. But expenses not at all allowed. Okay. Next chapter, capital gain chapter. See the word. There must be capital asset and there must be transfer. And for your information, it is a she, salary, house property, capital gain. Already I told you, you have to follow the provisions of the act. The provisions are nothing but due basis. It is taxable in the year of transfer except 4 items. Number 1, compulsory acquisition of immovable property. Number 2, conversion of capital asset into stock in trade. Number 3, insurance compensation received on account of destruction of capital asset because of natural calamities. Number 4, joint development agreement. Next topic. Now, capital asset includes movable, immovable, tangible, intangible, business, personal, everything covered. But securities held by FIA also covered. But these are not covered. Number 1, stock in trade, personal effect, agricultural land located in India, deposit certificate, or what you call special gold bonds and special bearer bonds. These are not at all covered. Next one, personal effects. What are the personal effects? Tell me. Movable assets used for personal purpose. Babu, only for individual or HUF, if they are using, that is covered. Okay, our relatives are using, that is also covered. But these are not covered. Number 1, jewelry not covered. Pakka capital asset. Archaeological collection, drawings, painting, sculptures, any work of art, all these are covered as a capital asset. Next number, another topic, what is the transfer? Sale. Number 2, exchange, relinquishment, extinguishment, compulsory acquisition of capital asset by the government. Number next, redemption of zero coupon bond, Next, transfer part performance of contract under section 53A. Next one, conversion of capital asset into stock in trade. These are only covered. Next number, amendment. What is the time tenure, time period? Answer in case of gel, okay. Z for zero coupon, E for equity oriented, L for listed. What is the time frame? 12 months. Whereas other than gel, what is the time frame? 24 months. Computation part is as follows. If it is short term, same answer. Long term also same answer. Exemptions only will be changed. What is the exemption? 54B, D, G, GA. But here all exemptions are covered. Whereas in case of section 50, that is only short term, only for depreciable asset. Consideration minus expenses, then minus WDV only must be considered. So simple answer, net consideration minus written down value. Then only short term or long term? Short term. Next number, consideration already I told you, full value or part of the value? Full. Next topic, all of you, another topic is as follows, that is cost of acquisition. Already we covered intangible asset. Just now I told you, self-generated, what is the answer? 0. Purchased, what is the answer? Actual cost. Next number, asset acquired by any other mode by way of gift or something ancestor, what is the answer? Cost to the previous owner. Amalgamation, in this case, cost of acquisition in the hands of amalgamating. As a demerger, pro rata basis, net worth wise we have to consider. And sweat equity shares, answer fair market value. Next number, rights, right shares, and transferor 0, whereas transferee hand, how much is the amount paid to company plus amount paid for the rights. Bonus shares, I already told you before, what is the answer? Fair market value. After, what is the answer? 0. Next number, in case of conversion, now the cost, previous asset only consider. Gift, mobile property, stamp duty value, immobile property, fair market value, immobile property, stamp duty value. Equity shares converted into preference, then answer cost of acquisition of preference. But if any case is covered under 112A long term, the two before 1/4/2018 answer would be different. Actual cost or this, whichever is higher. That is nothing but fair market value of such asset or full value of consideration received or accrued as a result of that transfer out of these two, whichever is lower. Next number, inventory converted into this, answer fair market value as of the date of conversion. The bonds converted, that is also the same, conversion date must be considered. Fair market value, that is okay. Slum sale, most important topic, examiner favorite topic, section 50 capital B. Answer, without assigning values to individual asset, if you transfer, that is slum sale. The formula you know, full value of consideration minus expenses, then you will get net consideration minus net worth, then you will get the answer income from the head, capital gain, maybe short term or maybe long term. Okay, what is the net worth formula? Net worth is equal value of assets minus liability. Value of assets also two types, WDV in case of depreciable, book value in case of non-depreciable. Whereas in case of FE, full value of consideration, FMV1 or FMV2, whichever is higher, shall be considered. Indexation benefit applicable or not? No. Next number 50 capital C. If you transfer immobile property, if you offered sale consideration less than stamp duty value, then stamp duty value must exceed 110% of consideration. Now, whenever stamp duty value both are different, which stamp duty value must be considered? Stamp duty value prevailing as on the date of agreement, provided it must exceed 110% of consideration. Next one, advance money received and forfeited. Before 1/4/2014, what is the answer? Reduced from cost. See the board, reduced from cost. On or after? Taxable under which head? IFOS. Reference to valuation officer, they may refer. Next, most important topic, exemptions. Under the head, capital gain. Section 54, what is that? Applicable to individual and HF, transfer of which house property? Long-term residential. Compulsory you have to purchase another residential house property, then only it is covered. Okay, chalo. What is the new holding period? 3 years. Next topic, section 54B. What is that? Bhumi. Agricultural and urban. Minimum 2 years you must use. What is the asset you have to purchase? Urban. 54D, what is that? Compulsory acquisition. 54EC, transfer of any asset being land or building. But you have to purchase the bonds issued by NHAI, RECL. Correct? Next question, all of you. Now 54F, all assets are covered other than residential house property. But you have to purchase residential house property. Pro rata basis only it is allowed. What is the amount? Tell me. Long term capital gain into amount invested divided by net consideration. And most important tax rate. 111A. What is the rate? 20%. Whereas other case normal rates. Whereas 112A. What is the rate? 12.5. Exemption limit is 1,25,000. In all other cases, what is the answer? 12.5. With indexation or without? Without indexation. Next number, IFOS. You have completed this topic. Very, very important topic. Take care. IFOS. We read the material also. But this gift topic is important. Gift. See the board. See the page number 5.6. Gift. Money, cash. What is the answer? Aggregate value of cash exceeds 50,000. Full value is taxable. In case of kind, movable and immovable. Movable, with or without consideration, we have to check the aggregate fair market value minus consideration must exceed 50,000. Whereas in case of immovable, don't say the word aggregate. You have to see the transaction. Stamp duty value must be considered. And section 57 also we completed. Expenses which are allowed and which are not allowed. Okay, chalo. Clubbing provisions and set off and carry forward. First, house property, salary chapter not allowed. House property, interhead adjustment allowed. Interhead source allowed. Interhead, what is the answer? Maximum how much? 2 lakh. And carry forward, okay. Non-speculative, what is the answer? Allowed or not allowed? Allowed. But except salary. And speculative, same or no na? Same. Next one, specified business class 35 AD. Same. Unabsorbed depreciation, allowed or not allowed? Allowed. Next number, long term, only against long term. Short term, only against long term as well as short term. But other heads not allowed. Allu Arjun, owning and maintaining of race horses, only against such. Whereas other losses not at all allowed for carry forward but allowed for set off. But casual losses not at all allowed. Correct? Next number, filing of last return mandatory or optional. Answer, all the cases mandatory, 2 cases optional. Number 1, house property loss, unabsorbed depreciation, it is optional. And A point most important, loss of partnership firm. If any partner dies or any partner retire, the firm cannot carry forward the loss of the partners. Whereas inheritance, I told you Madhukant Mehta case law and Saroj Agarwal case law. Father died, children want to carry forward by constituting partnership firm, then father losses can be carried forward by the firm or not? Yes. Next number, husband died, wife want to carry forward, they can carry forward or not? Yes. And next, very important, closely held company. I repeat, minimum how much percentage must be the same? 51%. On the last day of the previous year in which losses were occurred, last day of the previous year in which losses are sought to be set off, must be the same. But if it is happened because of death, nothing, no implication, it can be carried forward. And foreign company, what you call amalgamation demerger happened, then also no impact. And insolvency bankruptcy court, no impact. And change between company and subsidiary also, then no impact. Okay, chalo. Next one, clubbing provisions, already I told you, cross transfer. In case of cross transfer, more than one transfer must be there, minimum 2 or more than that. Each transfer is a consideration for other. In that case, whatever the minimum amount is clubbed, kada? Yes. Next number, minor income. Parents' marriage relation subsist, then it will be clubbed in the hands of whose total income is higher. If not subsist, legal guardian. And section 1032 applicable, how much it is? 1500 per child. There is no restriction on number of children, but it's not allowed with respect to 115B, A, C. Chalo, with this, done with the topic. Next number, partnership firm, we already covered. This topic is important. Computation of book profit important, amendment. Next number, all of you, This remuneration you can pay as per book profits. There is no quantum at all, restriction at all. Any amount you can pay, only the condition that is as per the provisions of section 40 small b. Whereas interest you can pay maximum of amount of rupees 12% per annum. But in case of liability, limited liability partnership firm, designated partner only can sign the return. And another point, the losses or unabsorbed depreciation of predecessor company can be carried forward by LLP subject to fulfillment of conditions. Next number, business trust. Already I told you, in the hands of business trust it is exempt, but in the hands of unit holders it is taxable. Now what is the TDS section? 194 LBA. Next, investment fund. One income is only covered. Which income? Business income. Now securitization trust. All the incomes of securitization trust are exempt. Very good. And MAT, most important topic, especially the topics are important. Now, what are the positive adjustments and negative adjustments important? We read in the material itself. Okay? Chalo. Next, trust, most important topic. Once upon a time, more important. Nowadays, B category topic. Okay? And filing of return. Come on. What are the 139(1) condition? Voluntary filing of ROI. Every company, every firm. Okay? Next one. In case of others whose total income is more than well. But in case of RBOR who has assets located outside India. But you know, in case of your deposit exceeds 1 crore or savings bank more than 50 lakh, current electricity bill more than 2 lakh, or else what you call, sorry, electricity bill 1 lakh or foreign travel 2 lakh, total turnover is exceeding 60 lakh, TDS TCS exceeds 25, whereas senior citizen how much? 50. Next one, what is the due date? Already you know, 31st July in general case, TP 30th November, in case of audit and all 31st October. Next number, belated return, we covered the due date also, and revised return, SC must file the return, and in the return there are some mistake, you can file the revised return. Updated return most important. SSC already filed the return or not immaterial, you can file within the time limit of 24 months, but you cannot offer loss, you cannot reduce the old tax, and the survey people cannot go, such people cannot go, are already convicted under other act cannot go. Next, tax must be paid, and the additional tax also must be paid at the rate of 25% of total income and the total tax as well as interest if you file the return in first 12 months. If next 12 months means how much? 50%. Chalo. Assessment part 2 also covered. 142 2A. What is that? Special audit. What is the condition? DBMS networking. Yesterday we covered this topic. And 143 1. What is that? Intimation. Okay. AILD. A for arithmetical error. I for incorrect claim. L for disallowance of loss. E for disallowance of expenditure. D for disallowance of deductions. Tell me, what is the time limit? 9 months. Whereas notice time limit is 3 months. Whereas assessment time limit is 12 months. Next number 144 conditions also we covered. Karda? Yes. Next number, what is the time limit? 12 months. Next, income tax authority, survey. Tell me, which place we can go for survey? Business place, other places also we can go. Trust places also we can go or not? Yes. TDS purpose also we can go. What is the time? Time to enter. Sunrise, sunset. In between the time. Kada? Yes. After sunrise, but before sunset. But it is not for exit. It is only for entry. Now, can you do seize the assets? No. We can do survey. Survey. Okay. Survey means gathering the information. Next one, search and seizure. Authorized officers, authorizing officers, we covered. Next one, when we can go for search and seizure also covered. There must be reasons to believe that SSC has white or black, and powers also we covered. Can we do attachment order? Yes. Next, what is the block assessment? How long we can do block assessment? 6 years plus current year first day to up to the last day of authorization of such executed. What is the tax? 60%. No such as no separate health and education says. and income escaping assessment. Come on, 147. Assessing officer can reopen the case if income escaped the assessment, can include other escaped income if we come to knowledge subsequently. For that purpose, notice must be given after following the procedure specified under section 148A, but compulsory SSC must file the return in response to that notice within the time span of 3 months. Next number, inquiry mandatory. What is that? Assessing officer must issue show cause notice and allow him to give the reply and get the higher official's permission also. Next, in case of this, time limit is as follow: 3 years 3 months if the amount exceeds 50 lakh, 5 years 3 months. But in case of court order and anything is there, no such time limit. And next number, what is the tax rate this year or that year? That year tax rate. But if the tax impact is not there, already if it is pending in the court and all, we will continue our drop. And what is the completion time limit for assessment? 12 months. Okay. Next topic, all of you, another topic, appeals and all. Already I told you, Commissioner of Income Tax Appeals, how many months we can go? 30 days. They can increase the tax or not? Yes. They can set aside or not? No. They can review their order? No. Within how many years they will pass? 1 year. Question of law or question of fact are both? Both. Next number, next topic, additional grounds can be admitted? Yes. Additional evidence can be admitted? Yes. Next number, IT. What is the maximum time limit? 2 months. Within how many years they will pass the order? 4 years. If stay order granted within how many days? 180 days. High Court and Supreme Court, question of law or question of fact? Question of law. Next one, revision 263. The order passed by assessing officer is prejudicial and erroneous. We already read in the material itself. Okay. Yes. Already twice I explained in this session, Marathon session itself, I explained twice. 263. What is the time limit? 2 years. 264. What is the time limit? 1 year. Which is partial measure, which is total measure? 263 partial, 264 total. The entire income tax is covered under partial measure. Only 264 is come under total measure. Rectification of mistake. Order passed by assessing officer is erroneous. In that case, they only can rectify the mistake on their own motion or application after giving the opportunity of being heard. What is the maximum time limit? 4 years. Okay, opportunity of being heard may be given, may not be given. After 4 years, can we rectify or not? Answer, no. But sometime yes, if it is in benefit of SSC. Next number, dispute resolution committee. Wait, already you filed the return. Your income does not exceed 50 lakh and variation between you and department computation does not exceed 10 lakh. You are not covered under search, not covered under survey, not covered under these kind of issues. In that case, what is the answer? Can we go for DRC? Yes. They can waive any tax? No. Can waive any interest? No. Penalty? Yes. Prosecution? Yes. Next number, what is the maximum time limit? 6 months. Okay, chalo. Next, all of you, see the word, it is final. Babu, the order of DRC is final. No further appeal is possible against the order of DRC. Next, board. 2-3 times already we covered. Kada? Yes. What is the maximum time limit? 6 months. How many days we can go to further appeal? 60 days. Can we go to DRC appeal? Can we go to appeal on DRC? No. Can we go to appeal on bar? Yes. Chalo. Next number, different aspects of tax planning. Duty management, smart application, planning, overthinking, avoidance, misuse, evasion, tax. Next, Black Money Act. What is the valuation date? 1st April of previous year. Next number, bank accounts. Which date? Opening date. Immovable property. Cost or NRV, whichever is higher. NRV or stamp duty value. All of you, in case of immovable property, you can take cost or NRV, whichever is higher. Whereas in case of bank accounts opening figures only, you can take it. What is the exchange rate? Already I told you RBI prevailing rate as on the first day of previous year. Next number, if it is already included in India's tax computation, should not be covered under Black Money Act. But one favorite question is the examiner favorite question. Value is this much, white money some portion is given, black money some portion is given. Then black money portion only taxable, rest of the amount is not covered. General anti-avoidance, first we have to check IAA, impermissible avoidance arrangements, lack of proper substance. Okay, chalo. Next number, residential status, past year untaxed income covered or not covered? Not covered. Next one, foreign income not taxable in the hands of RBI and over, except one figure. What is that? Controlled from India or set up in India. Business means control and provision means set up. And pays, what is that? Passive income up to 50%, whereas assets up to 50%, and employees up to 50%, payroll up to 50%. If satisfied, then only it is covered under the category called as ABOI. Our ABOI test passed. What you have to check? Board meetings. Business connection include cost. One agent is there to conclude the contract, secure the orders, or maintain the stock, or significance economic presence. Non-resident topic, NRI topic. NRI, what is the tax rate? 20. Whereas long-term applicant, 12.5. Once he became resident, can he continue? Yes. Until the date of actual sale. Fine. Next one, non-resident. Very important. Now see the word. Interest income from infrastructure debt fund. How much? 5%. Whereas loans taken by Indian company paid the interest 194 LC. Chandigarh local company. Kada? Rupee denominated bond. 194 LD. Correct? Yes. Next number. Whereas dividend from Indian company 20%. Correct? Dividend income from Indian company 20%. Interest income from Indian company also 20%. Royalty and fees for technical services. What is the answer? 20%. 115 BBA. Brian Lara, Britney Spears, Australian cricket. How much? 20%. Umpires not covered. Match referees are also not covered. And presumptive taxation also we have. What is 115 AB? Overseas financial organization. How much? 10%. AC, GDR, 10%. Next number, 115 AD, FII. What is the answer? General income is taxed at the rate of 10%. Long term capital gain, 12.5%. But for your info, see 115A. These are the sections. First one, 115A. ROI is required or not required? ROI not required. 115AB. ROI is required. 115AC. ROI not required. 115AD. ROI is required. Next number, see 115A. ROI is not required. AB. Alternative ma. AB required. AC not required. AD required. So no, yes, no, yes. Next number, presumptive taxation 44B. B for ship, BBA airlines, BB oil, BBBB civil construction, BBC cruise ship. For goods transportation or passenger transportation, no question of lower income. B, can I declare lower income? No. BBA, yes. BBB, BB, BB, yes. BBB, yes. BBC, no. Chalo. What is the BBC percentage? 20%. We covered. DTAA, most important. Theory question also important. What is the PE significance? Tell me. Non-resident having PE, then only taxable. Otherwise, not taxable. PE, BOW, SFM, M. Next one, objectives. To grant the relief, exchange of information, avoid the tax. Next number, 91. Foreign income. Which foreign income you have to take? Foreign income which is subject to double tax. Before deduction or after? After. Before set off or after? After. Next one. Another topic. Equalization levy. Now 10 subsection 50 also there. Most important. What is that? TP. Transfer pricing. Okay. Last conditions are as follows. There must be A and there must be B. A for associated, B for international transaction, BA for 92BA specified domestic transaction value exceeds 20 crore. 92C, how many methods are there? 6 method. What is the first method? Cup. Tell me, cup method how to do? Take the price of unrelated party plus or minus adjustment. Resale price method. Price charged for resale of goods to non-jiggeries less profit, industry profit plus or minus adjustment. Cost plus method. Direct material, labor, expenditure, indirect material, indirect everything must be added. Industry profit must be added. Next number, profit split method. What is the total work done by you and percentage you have to calculate. Total profit out of that, what is your percentage profit you have to add. Next one, shareholding. What is the percentage? 26. Whereas common shareholding 26. Raw material 90%. Whereas bank loan 10%. Bank guarantee 51. Loans 10%. Next number, another topic we covered. Board of directors 50%. Next number, all of you, more than one method. What is the method? Arithmetical mean. But what is the tolerance limit? 3%. But it is not applicable for NJA. Next number, a sync officer can determine ALP or TP? Yes. When? Books of accounts are not maintained but incorrect or incomplete or else wrong information. Last number, proper method has not adopted. 4. Now, any kind of deductions will be allowed? No. 10-year deductions will be allowed? 10-year deductions? No. Next, reference to TPO. Mandatory or optional? Optional. Who will decide? Assessing officer. Any other transaction comes to knowledge of TPO, they can do or not? Yes. Next question. Now CCCD. What is that? APA. Advanced Pricing Agreement. Now, in case of this, with the prior approval of central government, CBDT and SC may enter into APA. It is valid for a maximum period of 5 years. Very good. Rollback provisions how many years? 4 years. Will they permit to reduce the tax? No. 92D. What is that? Documentation. How many years you have to maintain? 8 years. Provided transaction value exceed 1 crore. 92E. Reporting. What is that? Audit. Now audit report in form number 3 CEB. Now next number, penalties already we covered. 2% of transaction value. And if you have not submitted audit report, what is the penalty? 1 lakh. And 92 CA, what is that? Secondary adjustment. After primary adjustment, if the differential amount exceeds 1 crore, in that case secondary adjustment will be done. When secondary adjustment is done, compulsory you have to repatriate within how many days? 90 days. Otherwise you have to calculate the interest. If it is Indian currency, SBI rate plus 3.25%. Foreign currency, Libor plus 3%. And if you have not repatriated, you can have one more option. Pay additional tax at the rate of 18%, such as 12%. 12%. Health and education says 4%. NJA. In the world, some countries will not have any exchange of agreement with India. That country is already notified by our government of India as a NJA. If you have transaction with NJA, already these people are treated as deemed associated enterprise. The transaction is deemed international transaction. 92C applicable, but don't follow tolerance limit of 3%. Kada? Yes. Next one. TDS also applicable at the rate of 30. And in case of any amount received is considered as income. Next number 94B. What is that? Bar on interest. In case of interest, maximum permissible amount is 30% of EBITDA. Okay, now. Chalo. So I wanted to give the most important series, just 5 minutes. The most important topics are as follows, topic wise. First topic, TP. Out of that, methods, one part. Methods for problems purpose. Most important. Preferably cup method. After that, cost plus method. These two are most important. That doesn't mean others are unimportant and kadu. These are most important. Number one. Number two, 92 CE question is important. CE, secondary adjustment. And examiner another favorite topic, 94B, Baran interest. These are most important. But for your info, without knowing other topics, you can't solve this 92C problem itself. Kada? First, you should know 92A itself. After that, you should know 92B. So, entire chapter is important. These are most important. Next, DTAA chapter. 91 section is important. 91 problems are important. As well as PE important. PE. That is important. These two are most important. 91 problems are most important. Next, NR. NR, NRI, residential, all the things I am telling you. 115A important. 115 BBA also important. Next one. Another topic. Scope of income is relevant. Scope of income is relevant. 115A, 115 BBA, scope of income. These three are most relevant. Next, another chapter, PGBP. PGBP. 32, most important. 41, important. 43B, important. 32, 41, 43B, important. Next, another important topic, 36, 37, 28. These are most important. Next one, capital gain chapter, 50B, most important. 50C, important. 54, exemptions, important. 54F, important. Tax rates also important. Tax rates. Next, deductions chapter. 80C important, D important, D. And G somehow relevant, G. QQB important. For your exam, TTA is also relevant, TTA. And another important, JJAA. Black Money Act, very important for you. Compulsory question you can expect. Compulsory. There, valuation is important. Valuation is most important. Valuation. Next, another topic, MAT. I'm not telling you these are relevant. I'm telling you these are 100% important. Compulsory questions you can get it. No discount at all. I'm not telling even 99.99. I'm telling 100% you will get these questions. But out of these chapters, these are most important. But you have to cover entire this chapter. Plus, apart from this, you have to give more emphasis on these particular topics. Next, MAT. 115 JB computation important. Computation 115 JB means that standard format is the book profit computation, that is relevant, that you have to read number of times. Okay, next. Another topic. These are A plus category chapters. These are most important. And other important areas, B category. Comparatively that B category, Search and Seizure, search assessment. Actually, these are also A, but here up to 1 to 8, whatever I told you right now, no discount at all. 100% you will get it. But These other topics, 99% you will get it. 99% important, most important. But when compared to first 8 topics what I have written there, it is somehow least important. Okay, search assessment important. Next number, ROI, filing of ROI chapter 139.1, 139.4, 139.5 is relevant. And 139 ATA also relevant. 154 important, 264 important. It is 264 revision. Revision in favor of SSC. 154 rectification. These are relevant. ITAT important. What is that? Income tax appellate tribunal. Survey important. Survey. Survey. Next. Set of chapter. Next. Bar. DRC. Okay. These are next category. Over. Last suggestions. Number 1, you must cover the scanner, in the sense past exam questions. Compulsory, you have to cover past exam questions. You must follow LIFO, not FIFO, LIFO. Last paper first you have to cover. 2025 paper, after that 24, after that 25, 23, like this. Reason, if you cover 1992 question paper, the paper is like this. Explain about components of income tax law. Small a, income tax act. Small b, budget. Small c, income tax rules. They don't expect these kind of questions nowadays. Okay, chalo. So therefore follow the LIFO. The two, you have to follow the latest amended one. Latest one, the two amended one only you have to cover. Number next, compulsory board materials. Last page of board material of each and every chapter, there will be some questions. Take it for granted, out of that questions, so many questions will be copied and pasted by the paper evaluator, paper examiner. Okay, so board material questions just you have to cover. In the regular batch, we already covered that question and answers we already covered, but I am telling you just like that, which are the questions given in the board materials, compulsory you have to cover. The reasons, same questions, sometimes without changing the names, without changing the figures also, they will copy paste that questions. Take care, that is. Number 3, for the purpose of MCQs, what you have to do, it is, if it is theory question, you have to fill formula, you have to follow. Example, within how many days we can go for further appeal on the order of bar? Small a, 60 days. Small c, 6 months. Small d, 2 months. Small e, like this it will be given. Now tell me how to do. Now first A answer, fill it and read. Okay, na? B answer, fill it and read. C answer, fill it and read. Like that you can read the theory question. I hope you got the reason. So that you will get full clarity. Otherwise what happen, while seeing the answers also a bit, you will think everything is right. You will give 6 months, you will give 60 days. 6 is common, but then you will get the confusion. That is the reason, fill and study. Next, whenever you have doubts about the MCQs, eliminate. Eliminate in the sense, damn sure 1 or 2 unrelated answers will be there. Correct? Yes or no? Example, in case of interest on housing loan with respect to house property, small a, 5 lakh, small c, 2 lakh 50, small d, 2 lakh, like this it will be given. Tell me what is the answer? Not 5 lakh, kada? My doubt is 2 lakh or 2 lakh 50. Correct? Then just to take the pencil and keep into mark against 5 lakh and other figure, so that you can think only about the limited areas of choices only you can think it kada, that you have to take it. After that, the remaining thing you can take a lottery, or you can do research, or you can ask someone else and you can fill it. And last one, questions. Examiner will give one MCQ where he will ask you to calculate tax liability. These kind of questions you have to take the extra additional. There you can keep the heading rough work, and there you can write, you can solve, and then only you can fill it. Okay, fine. Next, this is you have to work. And the next one I want to tell you, don't write any choice, no choice, that anyhow you know. And next number, another topic, try to start with pro forma question. Pro forma question. Pro forma question in the sense capital gain, or MAT, or charitable trust. These are pro forma driven questions. If it is there, you can start the problems or paper with the pro forma question. Next one, don't start with the case law question. Don't start with the case law, or don't start with the theory questions. The reason, if you write 100 points also, there will be chance for one not one. And next one, compulsory you can write point wise. I repeat, point wise. Don't write para wise. And next and last, how to present the case law oriented questions are as follows. Step number 1, first you have to write provision. Under that, you have to write given case. Whatever the given case he has given, you can write. Last, number 3, conclusion. Okay, but don't keep the headings like this, but you have to write the 3 paras like that. Okay, and write. Only point wise you have to write. First provision you can write, given case you can write, conclusion you can write. This is the way how to present. Okay, now next number, after completion of exam, don't discuss the paper with your friends. That is not relevant. And one more thing, if paper is hard, then be happy and write the exam. The reason, when the paper is hard, generally valuation will be easy. And next one more point. Sometimes paper is very, very difficult. You know you are going to fail. Then also be happy and write the exam. The reason I am telling you, if you get 60 plus in other papers, and in one paper if you get 35 or something, examiner will add the marks of 5. Really they will add, but every time they may not add. Few times they will surely add these marks. Okay, but I cannot show you the evidence and proof right now. They will add. Therefore, even though paper is very difficult, please write the exam for 3 hours. If possible, write the exam beyond 3 hours also. Okay, and try to write for 100 marks, and try to attempt each and every question. Okay now. And next one, take one extra additional if you want, and keep the workings, and just write the line diagrams, especially for the purpose of TP questions or non-resident questions. You can draw the line diagrams and all. Okay na, then only you will get clarity. First we don't know who is payer, who is payee. Correct? If you see the TP question, the questions are like this. So Amit Agro Industries Limited has 25% of shareholding in a company called as so and so, and he only supplied 95% of raw material to other company. Now my point, who is associate enterprise and who is our SSC, we don't know kada. For that purpose, compulsory you have to draw the line diagram, so that easily you can understand the concept and you can do. And next number, whenever you have doubt about the topic, then you can write the assumption. Okay na, in the absence of information, it is assumed that, like this you can write. Okay, chalo. And the last one, compulsory attempt for 100 marks. I know some students, they will write the exam for 1.5 hours, and officially they will give the paper to examiner and come back. No, compulsory you can write the exam for 3 hours and write the same for 100 marks, even though you don't know. Suppose if you don't know, then write these topics at the last resort. Okay, last page of the answer sheet you can write. And the last but not least, presentation is very, very important. Don't tease the examiner. Some people will challenge the examiner. నువ్వు దమ్ముంటే ఇక్కడ ఆన్సర్ ఎక్కడుందో చూడంటారు. Don't challenge the examiner. Don't do ragging. Okay. So be user friendly. Your examiner must have the vertical cordial relation with you. For that purpose, your answers also like this. Write the conclusion. Therefore, the tax liability is this much. Like that you can write. And next, carry the pencil in an exam hall. At least underline the keyword on that question paper. Okay. The example, sometimes examiner will ask you to calculate tax liability. Okay. But our friend will calculate only total income. Blunder mistake now. He asked you to calculate tax liability, but simply you calculate total income. So your marks will be deducted kada. Some overaction friends, what they will do, examiner will ask total income, but he will calculate tax liability including MAT also he will calculate. That is also wrong. Okay. Therefore, strictly underline the point. Sometimes what happen, examiner will ask you to calculate tax liability. In brackets, he will write ignore MAT. Ignore MAT. But our friend will not see this one. He will write the step 1, step 2, step 3, step 4, step 5. Wrong. The last one. In DTAA, in one question, they mention the word no agreement under 90. But he underlined 90. He underlined 90 and he solved the problem as for bilateral. But he asked you to do the problem as for unilateral. Wrong kada? Yes. So do this one. And next one. Revision is most important than the study. Whatever you studied, that must be revised a number of times. Then only presentation you can give best presentation in the examination. Okay. Take one standard book and read n number of times and take the rough paper and pen and keep on write the keywords so that it will be very easy for you to present in the examination. Okay. Fine. So as far as this marathon classes are concerned, I have covered from topic 1 to topic last, all 26 chapters I have covered. Okay. And I revised also, and we studied the material also 1 or 2 times. Okay now? Fine. And I have given the ABC analysis also.